it's hot. Now you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hey, what's happening?
Welcome, Jamal, to the show.
Welcome, Jamal.
Thanks for allowing me to join, guys. Appreciate it. Appreciate it.
Yeah. Welcome to the zoo. Welcome to the jungle.
It was good. I watched him walk in this morning, and then he walked back out for a quick second. He comes back in. He basically has a jug full of water. He's got like 4 different liquids with him. He's ready to be hydrated. He's ready to be sitting in that seat for the next 3 hours.
Hey, look, I'm not used to being.
Yeah, no, I hear you. I hear
I'm
you.
just like, what do I need? I got to think through it.
You
I don't know how
are
you do it.
ready. I mean, if the apocalypse comes, you got like your bug out bag with you. You're gonna be just fine. Just fine.
Snacks, yeah.
Do you like the setup over there? Like the monitor stuff? Is it pretty dope? Is it nice?
Well, you know, Vanetta, I'm no stranger to a lot of monitors. Firm. I used to have 6 monitors at one point in time. Yeah.
Wow, that's big. I mean, yeah, for sure.
Yeah.
How many did you use of the 6? Be honest.
I actually used a lot of it.
Did
I used
you?
a lot of real estate. It's a good question because it's surprising how you get used to it. But you know, the thing is, truthfully, and this is like no ass kissing. Mm-hmm. There were a lot of tools I would say that we have in here that I was using then, right? And so I think that's what we built a lot of tools.
You had like a pro level platform, but now retail, you're saying, also has some.
Well, yeah, there was a
tools.
platform, but that was just like the options and your positions. Now here we have like when you think about it, and as I'm looking at it, you had like you could have a day chart, you could have what has
Sure.
All these other little things, right?
Sure.
So I had it's amazing how you can
Your market movers,
exactly.
volatility changing. Sure. Absolutely.
So it was,
You have 2 monitors here, but I have 1, 2. I've got 4 accounts open and a couple of browsers open and a couple of monitors that can see where all the cameras are and stuff. So it's not just 2.
What's your setup at home, like for trading? Like
No,
you use like an iPad kid?
Yeah, pretty much. At home, I have just it's not a Dell, but it's some sort of gaming computer that one of the smarter kids on the team, Garrett, got me. And then I've got a small little side laptop that's just for the show. So I only use one little laptop to trade with, but I'm a one-trick pony.
Yeah,
man,
what's your setup at home? Like
just
you're trading
the computer that I have. That's it. Same one we use on the show.
Yeah.
I just because you can see like trader setups like on Reddit or like like on the internet.
Yeah,
So I
that's
was just
for
curious.
show.
I know,
That's
but I was
for
just
show.
curious.
We did an article back in the day in Luckbox too, right?
Yeah, so anyone who was in Luckbox, would just do their home setup. Maybe we'll do something on social. I'll be like, send me your setup or something. But I'm just curious
Careful
about
what you ask for. You don't see people's pictures.
Yeah, I mean, how many games can you play on your computer while you're supposed to be trading? Is what you're really looking at.
Yeah.
Really.
Jamal, we've talked about everyone. It's been great. Like having Liz on the show. Liz and Tony are great. Got a lot of really positive
Got more of
feedback.
me this afternoon with Liz. Yeah,
which is
nice.
great. But for you, what does a Jamal Thanksgiving look like?
Ooh, wow.
What's a Chandler Thanksgiving?
This is it's a good question because it's actually changing this year. So so don't get me in trouble here, Vanetta. So the
I'm just
last
asking about Thanksgiving.
Be careful, this is recorded.
I don't even remember, but let's just say since my youngest is born, so probably the last 13 years for sure, we've been going to my brother-in-law's place in Champaign.
Okay.
And it's a sign of the times. Things are changing because his oldest, who was the same age as my son, they're great apart, but they're the same age. His oldest is going, what's that when you go away for 2 years, you go to Africa or something like that? What's that called?
Oh, like a mission? Like a
mission. I mean,
Their Peace Corps.
Peace Corps, yes.
Going to do that for 2 years.
Oh, they didn't defund the Peace Corps? They still have the Peace Corps?
Still
Okay,
around.
good. Yay.
Still around. No, you can still send people away.
Oh, okay.
He's going to do Peace Corps, and so
That's cool, man.
His family's going to hang with his son, and he's with his girlfriend right now in Colorado. So they're not going to be home. So then my wife is like, "Well, let's go see my dad." It's like, okay, let's go see your dad. Let's drive.
In Wisconsin?
I wouldn't mind staying home, but we're gonna go to Wisconsin.
Okay.
Like 36 hours.
Okay.
How many hours?
36.
Oh, you're gonna stay there for 36. Yeah. The travel's only 4 or 5 hours, I'd imagine.
Oh yeah, it's only like 2.5 to.
Yeah, close. Yeah,
We're going to Appleton area. Yeah.
I mean,
okay.
like if she gets pissed off at you, she could leave. Right? I mean,
Yes,
like, you know, or
easily.
you could leave, or I guess you'd be asked to leave because it's her father's house. Yeah. So, I mean, it's close enough for you to get back home.
What is going to be your contribution to
The meal.
Yes.
Girl, my presence. What do you mean?
Your presence.
You're that confident, huh?
I was not invited anywhere to cook.
Wow.
No.
Well, come with a bakery box or something like that. Maybe you can stop in Algonquin at Jimmy Bread and pick up one
No,
of
you
his.
stop at the Mars Cheese Castle. You bring a Kringle.
Bring a Kringle, yeah.
No, they got in Wisconsin.
No, I mean,
that's like bringing, like you don't want to.
True.
Bringing sand to
no,
the
but
beach.
no, but
Yeah.
don't worry. No, it's fine. You can always bring sugar to Wisconsin.
Yeah.
they're okay with it. Yeah, I mean, we'll probably bring something, but I mean, as far as like cooking, actually, I don't even know what their setup is. I don't know what they're doing.
Yeah, bring them some Italian food. Screw them up. You know what I mean? Like it's like, bring something they would never imagine. That's all.
That's probably a great idea. Waffle.
Yeah.
He's doing all like barbecue.
Yeah. Yes,
So-
you want to stop at our house on the way up there? You could. You could go up that way.
Easily,
You know what I mean?
yeah, easily.
Just to take a little to-go bag or something. Be good. Be good.
What
Yeah,
is
so
your
that's what we're doing.
favorite thing? Are you a turkey guy? Do you like turkey? Because Bat doesn't really like turkey.
I mean, I don't mind it. I mean, I want some juicy turkey. I mean, I don't want any dry. I'm guessing you don't like turkey because you have some bad memories of dry turkey.
Yeah, it's just.
Do you not like the meat? What's the deal?
No, it's just turkey. I mean, it doesn't have any real flavor
That's
to it.
because you're
in
not
my eye.
injecting it with anything. My dad's got all these syringes.
Well, that's why I'm doing the Sunwa turkey this year.
Yeah.
It's gonna be like Peking duck turkey.
What'd you call it?
Sunwa. There's a restaurant called Sunwa. It's been around probably 40, 50 years.
when it's not shut down by the health department.
This is true. That is true. They do Peking duck. That's like what they're famous for, Peking duck.
Yes.
And they do on Thanksgiving a turkey that's injected like Peking duck.
Peking style.
I've never had it, so I'll let you know how it goes. So I got Peking duck turkey.
Isn't duck a little toughy though? Like
No. Peking
I
duck
think it's
is
fattier.
Yeah, it's
That's what I mean.
fattier.
Yeah,
right,
fattier.
Right. So it gets a lot juicier than turkey, but this is a turkey made in Peking duck style. So it's almost like having tofu orange chicken, okay? Like, you know what I mean? Like, that's you're just putting the flavors into turkey or putting the flavors into something that doesn't usually have too much flavor, in my opinion. And then I got some barbecue from Texas
And Kansas.
in Kansas that we have to pull out of the fridge.
Yes.
Thanks for reminding me.
Yeah,
Send a
gotta
message
do
to
that.
my-
Yeah, and yeah, everyone should be defrosting their turkeys like it should have.
Like now.
Yeah,
Yeah.
I mean, you're not gonna do like any like deep fried turkey, none of that.
No, I've done that one year. That was a
I
disaster.
can see you doing that. How'd it
You
go?
did? Oh, have you ever
I
done
can
it?
see you do. No, I've never done it.
Yeah, I did that.
I don't know if you've gotten this yet. I don't really cook.
I don't really cook either anymore.
Jamal's like, I don't cook, I don't clean.
grew up
Let
as
me
the
show you how I got
youngest.
this.
Well, what
ring."
room of the house do you excel in there, Jamal? Then why don't you give us
The
some
video game room.
insight?
Is
Video game room?
That's the PC answer.
That's fair. That's fair.
No, it is the worst thing about me. Like when I grew up, I was the youngest. My brother,
bad thing.
We
Oh,
were,
so
we
you're
were
like
the
me.
latchkey kid age, right? And so my brother, we were home often. Like my brother was the one who cooked the most. He's actually the way better cook. It's funny because my wife, same deal. Her brother was the one who cooked. She's the younger of the two of them, and
Wow.
so that's
Just two youngest kids being like, DoorDash.
Wait a minute. Aren't you going to do it for me?
we became engineers. What can I say?
That's right. That's right.
What is your favorite Thanksgiving dessert?
Great question. I was actually going to go there. Pumpkin pie for sure.
You're a pumpkin
do
pie
like it,
guy.
yeah.
Oh, interesting. Interesting.
Pumpkin pie with a nice big tall glass of milk. Yeah.
Yeah.
Oh yeah.
That's my daughter. She likes pumpkin pie.
Yeah.
The nickname was Pumpkin.
I feel like
Yeah.
you're happy she's coming. I can tell.
Yeah,
Good, man.
sure.
Wait, what is she? Yeah, that's great. That's
Yeah,
awesome.
yeah, of course.
I mean, of course, yesterday, though, the most iconic appearance by your daughter's cat
Yes. My
walked across the screen as we were going out I was getting off of the show, and they were about to go into confirm and send, and just, I was like, who is
Sandy, short for Sandra Day O'Connor. Rescue kitty. Well, she lives in D.C., so that's why.
I know, but it was so
Oh, that
cute,
makes sense.
though.
Yeah.
It's always fun to see dads with the pet that they never wanted.
It's almost like children. It's almost like the children they never wanted. You know what I mean? So
that took a turn. No, that took a
it
turn.
always takes a little bit of a turn.
Are you guys excited for all of the football games? You got Bears-Eagles on Black Friday.
Yeah, they changed that. I don't
yes.
think they were originally on. I think that was like a flex game or something.
I don't know,
wrong.
but could be up for grab. I do not understand how the Eagles were up 21-0 against the Cowboys and then just lost that game.
Oh man, I was actually I went bowling. I forgot to tell you.
You went bowling?
Yeah, I went bowling that night, which was not last night, the night before. 146, not too bad. I didn't stretch beforehand. I sent it to Nick. You know what I mean? Because he's in the bowling. Like, I didn't stretch beforehand, but
How is your wrist though? Your other
my left wrist, I was fine. So
I know,
bowl
but you
with my
still
right.
support.
Nah.
All
I
right,
just
go ahead.
I don't complicate bowling. I just throw it straight right in between the two pins, and they all go down.
So you're not a spin.
No, I'm not a spin
You're not
guy,
like a
right?
Pete Weber. I am who I thought you were.
No. I just throw the darn thing straight. You know, I only marked on 5 of the 10. You know, I mean, I hadn't bowled in a couple of years. You know, and I didn't stretch. Remember, I told you.
Was this for Vinny, or you just woke up and you were like, I
my
want to
daughter
go
was there. Her husband was there.
Oh, okay.
My
That makes
wife,
sense.
Vinny.
Okay.
We did it.
Okay.
But I gotta tell you something. Bowling hasn't changed. I mean, it was electric. I mean, first of all, one place we called, you couldn't get in, like the pinstripe type place.
Oh yeah, sure.
Actually, every time I call, you can't get in. So forget about.
And it's always like $200.
Yeah, you can't get in. You can't. It's $200. It was for 5 of us. It was 70 something. I think.
Oh, that's not bad.
Before drinks or whatever.
It's still one of the cheapest things to do.
What's that?
Still one of the cheapest forms of entertainment.
Yeah. No, it was fun. But they were at a bowling league there, and they were doing some sort of raffle and stuff. Standing on top of desks and tables. I mean, they were going.
Getting lit in the suburbs.
Yeah, they were going
Yeah.
nuts. They were going nuts. They were having a good time.
Turned
So we
down
were down
for
on the
what?
other end of the.
Yeah.
It was fun. But yeah. So.
And I'm sorry. What does that have to do with the Eagles and the Cowboys?
Oh, so I was watching. I'll tell you. I was telling you.
It's a long way around.
It is a long way around. So I went to the bar, obviously, to get a drink for everybody and stuff like that. And there was a guy sitting there, and he was just as miserable as can be. I didn't say a word to him because I could see he was as miserable as can be. He was the only guy in the
Yapper. You're a certified yapper.
Oh, no, I didn't say anything. He was the only guy in the bar, and he looks at the game and goes, Eagles. They just think they can win, so they just fold. This is ridiculous. It was 21-21. I go, wasn't it 21-0? He goes, yeah, it was 21-0. I said, you got the Eagles? He goes, yeah, I got the Eagles. He was so aggravated. It was so good to watch. I bought him a drink.
I mean, as much as that, well, first of all, that sucks, and that's obviously a division foe. But I mean,
Yeah, and they hate each other.
probably could. They probably could still win it all.
Yeah.
I mean, they really probably could.
Yeah. It was fun.
Figure it out. But
It was fun watching him be miserable.
Yeah, I don't know who plays Thanksgiving though. I don't know.
Oh, I don't know.
I know
Yeah, I don't
normally
know
the
the
Cowboys
games.
Could be the
always
Lions
play,
all the
or the
time.
Lions.
I
Yeah,
know,
the
you know, the
Lions
Lions are
always play.
playing.
Right.
But I'm not sure, and you have to have like Peacock Hulu Plus to watch the game.
I'm glad you brought this up. You know what's my favorite? You know what's my favorite new thing? I never heard of it. Look Ahead Lines. This website. I never heard of it.
No.
Yeah.
Packers, Lions, Chiefs, Cowboys.
Oh yeah,
And
great.
then Bengals, Ravens.
Bengals, Ravens.
Oh yeah.
Yeah, it's my favorite new site. I heard about it. Look Ahead Lines. NFL Look Ahead Lines. You
Never
can
heard
look
of it.
ahead and just see. Yeah, that's what makes me feel good. The fact that you never heard. I mean,
Yeah.
it hadn't been around.
No.
It has not been around. I don't know how long it's been around. But yeah, you can look ahead and see the lines for the rest of the week. I mean, for the next several weeks. And yeah, it's going to be a tough sledding for the Bears for sure. It is.
Oh yeah.
They're only
Our
favorite. They're
schedule,
only
like,
favorite.
and we're playing the Packers on like 1 week, and then there's a space, and then we're playing them again. I was like, who scheduled this?
Yeah.
Because normally we'll play them earlier in the season than we get.
We got 6 games left, right? I think.
Yes.
We're
6
8 and
games left.
3. Yeah.
6
Yeah.
games.
Yeah.
6 games.
And the Bears are only favored in one of them. So it tells you a lot. It's going to be tough sledding.
No, we'll see. We'll
Yeah.
see.
We're the comeback kids, so
Yes, we have been.
Extend our warmest welcome to Jamal. Programming note: there will be Tasty Live programming tomorrow morning for like half a day. Is it or all day
10
tomorrow?
a.m., right?
I
10
work
o'clock.
I should
Out.
10.
till
till 10
10.
our time.
Thank you.
Till
10.
Thank you.
Yeah.
Till 10. So Tasty Live programming tomorrow till 10, and then no new programming Thursday or Friday. And you guys aren't doing a Sunday night show.
We will do a Sunday night.
Do a Sunday night show. So we'll be back Sunday night. But you can always check out our archives, check out our Learn Center, check out a bunch of our series. Or you know what? Here's a novel idea: spend time with your family. You do you. I don't judge. Go outside, touch grass. But we're on the air all day today, and then we're off at 10 a.m. tomorrow. I have not figured out when I am going home.
How come?
Because I gotta probably be here late tonight. Because optimally, I would leave this evening and then just be remote tomorrow morning. But I think I gotta be here kind of late. So
We'll work then.
Wait, what are you doing Thanksgiving?
I'm just going home, seeing my mom and dad. So it's super chill, super low key, just the three of us. So. But I love to cook. Like, it's like my Super Bowl. Like, Thanksgiving.
Wouldn't know it by the stuff you bring here.
You are not deserving.
Been quite some time.
You are not deserving.
Quite some time.
But
Tell him you're not going to get any more. He's not going to get any more of your cooking. Tell him.
That's it.
No, but I just love it. I like to eat. We watch movies, watch football. My mom and I will go shopping on Black Friday with a tactical military precision.
Actually, yeah, what does Black Friday look like nowadays?
I got some news for that. But anyway, that's a programming note. On today's show, the top of the 8 o'clock hour, we got an options jive, the correlation code, 4 ways they shape the game.
Yeah, it's good research today. Real good research, actually.
We always have good research.
Yeah, but sometimes, like when you're looking at markets, this is looking at correlation and how the markets behave between each. It's interesting. The way they looked at it is a little bit different.
That's one of my favorites.
Because usually, almost everything goes up, almost everything goes down together.
Yeah.
They take an interesting spin on it. It's pretty good.
Then we have 8:40. We got Let Me Explain. We got Mr. Chris Vecchio in the house. Do you know what you're going to talk about with Chris?
It's called Let Me Explain, and Chris is going to explain it to me.
It won't be the Jets. How about that?
Well, I hope he explains the Trump Mamdani bromance. Get you a man that looks at you like Trump.
It is a good picture. It is a good picture.
I have never had a man look at me like that.
It is a good picture. And we have no programming on Sunday. They're telling me the team is like.
See, that's what I thought.
Got the day off.
That's what I thought. No programming. And then 9 o'clock for market measures. How effective is return on capital as a trading indicator? Oof. Okay.
Ooh.
And then live from the trade desk. We have Quentin and Glenn. Quentin counting down the top trending tickers from tastytrade and G Money. Glenn on the tastyfx side. Jamal, do you use the tastyfx platform? You trade in shekels?
I do actually. I do. I think with the change of shows and me hanging out with the great Mikey B, Glenn comes in and talks to us a lot, and as a result. Before I know it, I got a bunch of trades on at tastyfx.
Glenn is quite
you know how these kids do.
Yeah. He's been like a moth to a flame. He's been luring Nick into the FX world. He's actually been doing okay with it. Trading it really small and just giving yourself time to be right. And time to be right just means waiting for the price to change.
Exactly.
It's strategic and again, we're on the correlation. We're going to be taking a look at not necessarily FX pairs, but that kind of correlation in the overall market. So it's good. Right. It's a good one. You'll like it.
Well, in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Our leading story. Top story. Just in.
In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's November the 25th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
Dell, Autodesk, John Deere tomorrow.
Hey, nothing runs like a deer.
Yeah.
You're going down to Champaign. That's deer country.
There you go.
Or no, that's Peoria? Where's deer?
Peoria.
No, that's Caterpillar.
Yeah.
Wait. I'm
He's going up. You're going down.
Deere is Illinois, I think.
It is.
Caterpillar's
But
Peoria.
I was like mixing it up. But I know it's based here somewhere. So
They're both in boring towns. How about that?
how about that? I love the tractor kid though. I'm obsessed with him. He's like this little blonde-haired boy, and he like knows like every model of tractor. He's really cute. So he went like viral in a video. So John Deere had him like come to the corporate headquarters, and so he was like the security guard, and they filmed some content. But he's so cute. Like he will talk your ear off about tractors, and I don't know anything about tractors, but he's adorable. Anyway, I think his name's Tyson. I'm not sure.
Sounds like Bubba from Forrest Gump for tractors.
yeah, with tractors. Well, getting to this is the part of the show we like to call the Daily Dose. We talk about today's financial news and headlines. My name's Vanetta. U.S. banks reported a 13.5% jump in profits. Nice work if you can get it. The banking industry is seeing a banner of a year. That's according to the FDIC. They said the stronger profits were primarily due to growth in non-interest income expense, as well as banks booking smaller loss prevention expenses. Anything to be done in the financial sector?
I mean, Wells Fargo is not one I like to talk about, but yes, Wells Fargo is up at 84 and change, just off of its highs of around 89. JP Morgan is another one that's trading closer to 300, but remember, it traded up to 320. So they've had their run. They followed pretty much the market. Matter of fact, I think the beta weighting correlation to JP Morgan to the market is 0.76, so it's actually quite high. So they've been running with the bulls or running with the market right now. So banks have been helping the overall market.
Any juice in like a XLF?
I doubt it. I mean, he's right. They've been running. They've been quietly running. They've been doing what banks do. I mean, largely, I don't know the last time I've traded a bank. Probably sometime last year, maybe. I mean, yeah,
Goldman Sachs. Sometimes JP Morgan will play, but I mean, there's Goldman Sachs is almost an $800 stock, and JP Morgan is a $300 stock. XLF is a $50 stock, but
it's funny. Nobody talks about Goldman Sachs splitting. Right?
Yeah.
When Google was $800, which, by the way, was not that long ago. I kind of forgot this until I was looking yesterday. Mm-hmm. Nobody talks about, Goldman Sachs needs to split. So
right.
Doesn't happen. But all tech stocks, it's like, they need to split. Netflix has to split. Google has to split. Nobody says that.
You're right. Just because the number close to 1,000, you're saying.
Yeah.
Mm-hmm. Yep.
In the fintech industry, the UK-based Revolut raised a new round of funding in a share sale that values the company at $75 billion, positioning the British neobank as one of Europe's most valuable private tech companies. My question for you, why are we not seeing rapid, startup growth, tech growth coming out of Europe like we see in...
Do we ever? I mean, I don't think they're the...
We own that. So.
I mean, that's why... Yeah, that's why their markets, financial markets for investing for individuals stink. They don't have the kind of same
But is it just going to stay like that for all time? Is there nothing?
It's the way it's always been, unless they change something in their regulation or their attitude. They really
you think it's because of regulations?
Stocks. Say again?
You think it's because of regulations?
I do, and it's just their culture and nature too. They like dividend-paying stocks.
Yeah, I think that's the real answer.
I mean, that's just. Their risk tolerance. I mean,
what does Revolut do? Anyway?
Remember,
there's like an everything app. So
people wanted to go across the water came a couple hundred years ago and left all the people who didn't want to take risk at home. So that's why they're different.
It's like a bank. It's a brokerage. It's like Cash App. It's like crypto. It's like Shopify. It's like
all the buzzwords.
No, I don't.
Yeah, they're .com.
See, well, just that alone, I don't know if that would ever happen in the U.S. where you got one thing controlling all of that. Sure, there's a lot of there's plenty of companies. Obviously, we're part of that do a lot of those things, but there's just too much enterprising in the U.S.
Yeah, so they were founded in 2015. So they span multi-currency accounts, payment and transfer services, crypto products, insurance, and more.
It's a unicorn, right?
Yeah.
I've talked about it a lot in the past. I don't know where it is on the list now, but I've definitely heard of it. It's a big deal.
Stable coins could draw valuable retail deposits away from Eurozone banks, and any run on a coin could have widespread stability implications for the global financial system, says a dire warning from the European Central Bank. So they're basically worrying that there's going to be a mass siphoning or there's going to be a run on some sort of coin. But they're scared is...
Yeah, I mean, anytime you get unknown or something new, trying to take...
It literally has stable in the title.
That's right. That's all you need to say. There you go. No need to worry.
But let's talk currency, though, because we were talking about that earlier. What is the euro doing or the
pound? They're all up small that I saw. Yeah, euro's up about 240 ticks, about 0.25%. The yen was up a little bit more, I think.
Yen has been absolutely getting smacked.
It has been.
That's because Mikey is leaving for Japan on Friday. What are you going to do, Jamal?
I don't know.
What'd you ask him to bring you back? More importantly, that's what.
I want Hello Kitty.
You got to ask him to bring you something back, man. That's your boo.
I know. I didn't ask him to bring me anything.
Who's doing the show with you?
The usual characters that we have, with guests.
Sure.
Are going to do the show with me, so it's going to be good. Me and Ryan have gotten closer. I mean, actually, Ryan's one of the first people I've met when I first arrived here. So,
Wow.
we have familiarity with each other. And,
Yeah.
me and Glenn and me and Thomas, Tommy Tuesday, as we call him. Me and the boys. But Yen's been getting beat up. It's been interesting to watch. That's been one of the big themes more recently. One of the crazy things in the market.
What are you doing? Are you doing anything in currencies, Bat?
No, I haven't done too much in currency. I've left that to Nick. He's got a couple of pairs trades on, but I haven't done much of it. I'm if you've been watching this show for a while, I'm a one-trick pony, man. I'm like an options trader, and that's all I really look at and concentrate.
That's okay.
I know. I've been dabbling in other places, get spanked, and come back home. Is what I usually do. Yeah.
The iShares Bitcoin Trust ETF recorded a record 2.2 billion in outflows this month. That's nearly 8 times the 291 million in losses suffered by the investment vehicle last October, which was its second worst month on record since its debut in early 2024. The outflows come as Bitcoin is down more than 20% over the past month. Let's check in on crypto.
Caught a little bit of a bid yesterday. It's selling off a little bit this morning, but it's at 88,000. Remember, Bitcoin traded down around 81 just about 48 hours ago. So it's caught a little bit of a bid, but last night it got a little bit weaker. It got as high as 89. It's just under 88. Same thing with the Ethereum. Caught a little bit of a bid, went up to 31. It's down to 29. Ethereum's been twice as volatile as Bitcoin's been.
Oh, interesting.
On a daily basis.
Sure.
Yeah. So.
Also, I was remiss because the schedule's all mixed up. You are going to get some economic data coming out this morning.
You're gonna get a lot of economic data coming out this morning. I don't know how good it is or how valuable it is to you, but you got retail sales and
producer price, I think.
Yeah, Kate Schiller's coming out. Pending home sales. I know Chris will be excited. You could see it at 8:40 when he comes on the show.
Yes,
he'll be
that's
all
what he's
smiling
gonna
and
talk
stuff
about.
like that. I mean, for him, it's like, wow, numbers. I mean, it's
He missed
amazing.
them so much.
Yes, he does. I hate seeing him. He was so gloomy when the government was shut down. By the way, have you seen any changes to your life since we were opened up now? I mean, has it changed? He was the thing that changed. Like, if you want to see what affected the government shutdown, it was Chris. He was so depressed.
I know.
Now he's much better.
I know. Both him and Ilya. It was funny
He's better
to
now.
watch.
He's better.
I gotta say about this IBIT, man. I mean, again, I don't work for them. I could care less, but it's true. This thing is liquid. I will say they nailed it with this one. I don't even trade any other ones. I don't even know any other ones really.
I guess you get like BITO or something like that. I don't know, which
but
is
it's
not
not
liquid.
You know what I mean? Exactly.
Yeah.
Like, this thing's pretty liquid.
Yeah.
Yes.
It follows along pretty well.
Yep.
You like that. I'm just saying, like, that's what you want to look for when you're trading ETFs that are a proxy for something or future. This is what you want to see.
Yep.
That's true. What's Coinbase doing? We can check.
Oh, good one. And MSTR is another one we can look at. Coinbase 252 looks like 252, 52.5 looks like it's down $3.50. It caught a little bit of a bid yesterday, which is the first bid since maybe the beginning of October. And MSTR did not go up as much as I thought it would. It is down around $4 or $5 this morning. So both of them are a little bit depressed. IV rank of 42 in MSTR. Markets aren't that great.
You know, I feel like this is the first time, I could be wrong, ever, that Coinbase has traded over MicroStrategies. Price-wise.
Oh, you mean in price?
Yeah.
Oh, yeah.
Just looking back to April even, MSCR was trading over coin. I just wonder if this is the first time ever. I'm not sure, but it was like.
Could be.
I'm gonna look into that. Hey, a little tiny baby earning from last night, and that's Zoom. Zoom reported 1.23 billion in revenue for the quarter ending October 2025, representing a year-over-year increase of 4.4%. Zoom.
Zoom trading around $83 and change, closed at 78. So it's up a couple of bucks. Actually, 2-day rally going on here. So we'll see if Zoom is about in the middle of its most recent range. IV rank of 61 right now. We'll see what happens this morning. So Zoom catching itself a little bit.
I know, because it's interesting to see all of these like pandemic, explosive stocks and how they're faring, 5 years later, like comparing a Zoom to like a Peloton.
Sure.
Both were very critical in the pandemic, but
Well, Zoom did get up to $400 or something
Right,
like that. I mean,
yeah.
it's 83 on an uptick.
That
this
sucks.
morning. So everything did better than Peloton.
Yeah.
So you can't use that. Okay?
I know.
I saw something on Twitter the other day that somebody was like giving one away for free.
Yeah.
It's like,
Yeah.
wow, they're giving away for free now.
Yeah.
Pretty much. Hey, congratulations are in order. Your girl, she called it last week, but SanDisk will replace Interpublic Group and the S&P 500 before the start of trading on November 28th. Western Digital bought SanDisk in 2016 and spun it out as its separate company in February. And since then, it's just been a straight juggernaut for portable storage. Everything is more expensive, chips, storage in the AI boom. But good job, SanDisk.
Yeah, it's quietly gone from $25 up to $275 at one point. It's $235 right now, up around $9. 48 hours ago, it was $180. So
Yeah.
this is a stock that moved. Now it'll maybe be a little more stable, but I doubt it.
I didn't remember the merger, honestly, and I didn't remember the spinoff. And
There's really no good markets in here to trade.
No,
they're dollars wide.
yeah, it's really wide. What a turnaround! Wow, I mean that's amazing. Wow, how do you go from spinoff to now being an SP 500? That's
Yeah,
pretty fast.
yeah,
Right?
yeah. In a year, less than a year.
Yeah. So that's kind of
Wait, who's replacing Interrepublic? I never knew what that company did anyway. IPG or something?
IPG. Yes, you're right. Good job, Jamal.
Yeah, I know some tickers, girl. I know some tickers.
I mean, I think 40%.
Interpublic, I guess they're being acquired by a company called Omnicom. These just sound like made-up companies from a movie. Like, I work for Omnicom.
I
Okay.
think that was in a movie like in the 90s. You're right.
I mean, I know this because we're looking at correlations later today on some of the research we did, but 40% of the indexes, the S&P 500, come from just 10 stocks.
Yeah.
So not knowing, I didn't know this stock, is really like, you almost know the majority of the S&P 500's movement if
Yeah.
you know those 10 stocks.
In other news, Google was like, I got this, and literally strapped the market to its back and was like, hold on, girl, I got you. But Google's crushing it. Alphabet's AI comeback could be concerning for other AI players, in part because Google is leveraging its own custom chips. They said, all right, y'all play too much. I've had enough of your shenanigans. I'm about to straight dominate. They're like, if you don't know about me, you better ask somebody. I'm the OG. I'm the Google.
Hey, the Buffett effect. Yeah, 331. I mean, it was
Buffett does it again.
Yeah, he does it again. His last hurrah. It was about 280 or so, or when they mentioned it. It's 331, up about $12 this morning. And I gotta interrupt you. I know we were talking about it pre-market, but it seems to be coming out all over the place now. The Ukraine agrees to terms of the peace deal. That's just U.S. officials to ABC News. Just putting that out.
Sure, but that's
Everybody
only
wants
one
to.
side that agrees to the peace deal.
Yes. Hey.
I didn't want to say it, but I saw
marriage.
something that said Russia likely not to agree
Right.
in terms of the deals. What I saw.
I have agreed to marry The Rock, but again, the other side is not.
It's a start.
It's not at the
start.
table.
Peace would be a nice thing.
I have agreed.
You're gonna break them down. You're gonna break them down.
I have
Our
agreed.
kids dying out there.
No, but that's great. Yeah, we obviously, Anyway, hey, but in other news, Broadcom is also joining Alphabet in the AI rally. Let's talk about a little AVGO. Their shares were on pace for their best day since April 9th yesterday. Stock up another like $17. I don't know what's going on in Broadcom.
Yeah, AVGO 394. If it closes here, it'll be a new closing high. It was just, again, these 48-hour moves. Yesterday's move was powerful. The last couple of days' move were powerful to the downside. The magnitude of the moves were well outside expected moves on both sides all day long. AVGO now 394, leading the market higher. And you got the NASDAQ down 27. We just mentioned two stocks.
Oh, the numbers that came out, maybe.
Yeah. So anyway, it's AVGO.
What is Nvidia doing this morning? I know that's moving around.
Which one?
Nvidia?
Yeah, Nvidia was lower, and that's what's hurting the NASDAQ. Nvidia's down by about $7 or so.
Oh, gotta buy those dips.
To 174. So just to give you difference between the two. AVGO making new highs. Nvidia will be making recent lows it probably hasn't seen since August or so. Nvidia.
Hard to keep up.
It is a little bit.
Interesting divergence there.
Yeah.
Amazon said they will invest as much as $50 billion on AI infrastructure to support U.S. government agencies. The project will add 1.3 gigawatts of capacity across new data centers, with Amazon expected to break ground in 2026. Government agencies will have access to Amazon Web Services AI tools. So great, the government can go down in new ways. But Amazon, I think, is spending, $5 billion at least of this in my home state of Indiana.
227 catching a small little bit up around $1 or so off of its lows of 215 to about 227 or so off its highs of 250. A lot of stocks are kind of inside their most recent high-low range. That's only been the last month and a half or so, and yet the market. These are the leaders in the market, and the market, even the S&P is, let's just round down and say they're 6,700. Their highs are around 6,900. So if these stocks catch a little bit of a bid, you got to run for the roses. If they don't, we'll see what happens.
Maybe a little mini binary event, Black Friday, Cyber Monday. I don't know.
Option trades today, every Tuesday and Thursday. That's right.
Well,
You can only
something
hope.
like you. But they
hope and
started the
wonder.
Black Friday sales 2 weeks ago.
That's the thing, right?
And the Black Friday sale goes till, I'm sorry to interrupt you, till December 1st for a lot of these stores.
That's fine. I bought these boots on a
That's what I
Black
was trying to
Friday
figure out earlier. I
sale.
was like, we were like Black Friday was. I know you got something on, but it's like, man, like it's hard to. Obviously, this is where they're really kind of buttering their bread nowadays. This particular area, AWS is. I wonder if that is going to grow into more of their business and. Like it's like Wrigley originally I forgot what their original business was. It was like cleaning products or something. I can't even remember. Eventually they sold the gum.
Yeah, right.
Story.
Right.
And
Apple sold books. I mean, it was a bookstore.
Well, and that's what they did originally, right? They sold books and then they started shipping stuff. You wonder if this is where they're eventually going to go.
Yeah.
I saw some of these gigafactory like pictures in from Texas or something. I think one of the buildings they, not Amazon built, just in general for the storage of electricity and stuff like that. It's like 5 times the size of the Pentagon. I mean, they're like these huge buildings.
Well, they're turning the old SIBO building, the original Floyd you traded on.
Yeah.
They're churning that into a data center.
Yeah. Yeah.
And then all of our utility prices go up. Hooray!
Yeah.
'Cause they get subsidies. Okay.
That's why you got solar.
Good news, not anymore. Apple said Monday that they're cutting jobs across its sales teams to strengthen its customer engagement efforts. The company noted that only a small number of roles will be impacted by layoffs, but it's a rare move because you rarely see Apple like laying off people. But an Apple spokesperson told Reuters that the company is continuing to hire and that the affected employees can apply for new roles. What are you doing in Apple?
I mean, believe it or not, Apple on its highs 275. I think that was a 275.80. I believe that was a closing high, an all-time closing high yesterday for Apple. It's 274, down about $1.80 or so right now. Job cuts, believe it or not, are usually bullish for a stock. I know
It's a small number for comparative.
I do have to mention, and my Taiwanese sources reminded me, December 8th, the SIBO is coming out with their Big 10 futures and options, which are instead of having like the Mag 7, they're calling it the Big 10, so it'll be the Mag 7 stocks and 3 more.
As a Big 10 graduate, I'm going to sue you. No, I'm just kidding.
You can.
There's only one Big 10, which now includes like 17 schools, but
the
that's
Big
neither here nor
25,
there. Yeah. But
December 8th, that'll be another product.
I would be surprised, though, like real talk, if they could get away with calling it the Big 10. Because I think there's some IP, like, issue.
You're probably right. Maybe I'm just using the liberty of calling it the Big 10.
Maybe.
Maybe they're not.
I don't know. I
They
think
are coming out with a product that has the Mag 7 plus 3 more AMD.
I mean, they're both based here in Chicago. Like the Big 10 network is
Probably AVGO, I would imagine.
I think so. I think so.
Be another one.
I don't want to misquote more of what I've already
So
done.
does this mean they're getting rid of people in the stores? Like, what's the deal? Do they even make money on those stores? I wonder.
Oh, I'm sure that they do.
Do they though? You think?
Sure
I feel
that
like
they do.
probably people buy more stuff online than in those stores, right?
If you need repairs and stuff, you have to go in and talk to a genius. And then while you're there, you're like, oh, I might as well get that. I don't know.
I had to guess. I don't think they make money on the stores. I think the stores are more of a interesting marketing product, and it looks good for people to bring stuff in. and get stuff fixed.
Maybe.
Always looked great, right?
But also,
and they're visually.
But also, there's the factor of like, if you spend $2,000 on a laptop and you do order it online, do you want it to just be left on your porch? Like, I would rather just go into the store and like buy it. So you know what I'm saying? Instead,
you just like the way the store looks. It's
I do
visually
like
appealing.
how it looks.
I get it. It looks great.
I do like how it looks.
Anything that looks appealing like that, you don't make money on. Trust me. Okay.
All right. Frankie's chiming in. The Magnificent 10.
Oh, the Magnificent 10.
Magnificent 10.
There you
Yeah.
go.
There you go.
There you
The
go.
Mag 10. There you go. Okay. Sam
Magnificent
Altman.
7 was a good movie back in the day. Old spaghetti.
Yeah,
western.
man. Yeah, that's Yul Brynner, right?
Yeah, I think Yule's in one of them. I
A
think
lot of them.
Clint Eastwood. No, what's with the Adam's apple? Maybe it was
apple?
Clint Eastwood.
What
maybe.
year is this, Grandpa?
Oh, it's like in the 60s.
Oh, Magnificent. It's a great movie. It's a fantastic movie.
I think it's in the 60s.
I want to say 19.
I'm tired of this, Grandpa. It's too damn bad.
Oh, geez. Is it 60? I think it's 67, right?
Oh, I think so.
I have not seen this movie.
Magnificent 7 movie year.
Yul Brynner. Oh, man. There's a lot of people in it, actually.
Oh, shoot. I can't find the
remember.
year.
Yeah, pretty sure that was my dad's senior year of high school.
The original 1960 film was set in the 1960.
1960 with Yul
Yeah,
Brynner? and those
yeah,
guys?
yeah, yeah.
That's a great movie.
Okay, I've never seen it.
Fantastic. You
It's an
gotta
awesome
watch
one.
it.
Yep. Check it
When's the
out.
last time you watched a Western, Vanetta?
My mom loves Westerns. She loves them. Like, when I was growing up, Gunsmoke was always on.
Really?
Or The Rifleman.
Oh, Chuck Connor.
My mom,
Chuck
and I
Connor,
was like,
great
what?
Yeah, The
I was
Rifleman.
like, I just want to watch cartoons.
I had
Bonanza.
a BB gun
Did
that
you?
was
Yeah,
a
of
replica
course,
of the
yeah.
Rifleman for
Yeah,
sure.
Bonanza.
Yeah,
or whatever.
your generation messed up BB guns for the rest of our generation.
We did.
We'll
We
shoot
did.
your
And
eye out.
I still have to apologize to my friend Mark Scally. Sitting in his basement, we were like 1 foot from each other, and you could shake that BB gun to know if it had any BBs in it, and it shook, and there were no BBs in it, but there must have been one in the chamber, and that's what I've learned as an adult. You always got to check the chamber.
Yeah.
And I said, I'm going to shoot you right between the eyes, and I mean, we were point blank. And I shot him right between the eyes. Luckily, I had okay aim, and
I
it
would
stuck right in his
sue
head.
you. I would sue you so much.
Could have taken out an eye. That saying, you could have taken out an eye, really could have taken out an eye. I mean, I was
Shoot your
really,
eye out. I've lost all plot here. Sam Altman.
Well, you had brothers. You probably had a brother shooting you or something.
Yeah, hell
like
yeah.
that.
I had a BB gun growing up.
You had a BB gun? Mm-hmm. Did you shoot your friend?
You grew up in Indiana. Of course
No,
you
I
had
grew up
BB
in
guns.
Texas. I grew up in Texas.
Oh, well.
Yeah.
You definitely.
And then
you were
we
born
moved
with
to
one.
But then, I had a BB gun, and we had like targets, and my dad would shoot. I'm a really good shot, actually.
Oh,
I can believe that.
Did you ever shoot one of your friends?
No.
And you never really had fun
No.
with your BB
Because
gun.
I'm a girl. Like, I'm not
Yeah.
trying to shoot a friend. Like,
Well, I mean,
also, my
usually
dad taught me
if
gun
you liked
safety.
somebody, didn't you, like at that age when we were younger, if you liked somebody, you were kind of mean to them? If you had a BB gun, shoot them. That would be the ultimate.
No, my
You'd
dad
tell
taught me
them how
gun
much you liked them.
Hey, Sam Altman describes OpenAI's forthcoming AI device as more peaceful and calm than an iPhone. OpenAI is coming for Apple, and the device is a result of the collaboration between OpenAI and Apple's former chief designer, Jony Ive. Not much is known about the product, but it's rumored to be screenless and pocket-sized. Should Apple be worried?
Yeah.
The stock price isn't so far, so I
Yeah.
mean, if you think it is, I mean, here it is at all-time highs.
You can't trade OpenAI, but you can trade Microsoft. So
You can trade Microsoft, and Microsoft's been one of the big leaders in the market, but not as of late. Microsoft now 474 is where it closed. It's 471 and change, down around $2 and change. I mean, it got as high as 550 or so, but really, if you throw out the high, let's just call it 520. 520 to 474, with the market rebounding, Microsoft not rebounding at all.
No, they should definitely be worried. I mean, actually, honestly, you gotta. It's been a great run for them with this iPhone. I remember when that came out. I was trading at a firm. I remember what happened with the Apple stock that day. It was wild. I watched somebody lose their job that day as a result. They were short they were collecting a lot of theta in a big move. And they put actually a lot of positions on during the event. It was crazy, but. You know, it's been almost 20 years now.
Yeah.
And
R.I.P.
you figure
Steve.
Yeah. Right? And you figure at some point something's going to supplant it.
Meta buried casual evidence of social media harm, no biggie, according to new U.S. court filings. Every day, Meta finds some new way to be evil, and I applaud them for that.
Get off Meta. Meta, we need a rally.
Allege that Meta hid product risks from users and authorities. Meta is accused of ineffective youth safety features. How do you balance social media and whether or not it's good or bad for your kids?
Well, the other two, I mean, that ship has sailed. They, I mean, they grew.
They're screwed up, and there's no changing them now.
That was the challenge for like me raising them at the 20-something-year-olds. I mean, it started exploding, and the DMs and all that happened when they were, 4th, 5th, 6th grade.
Yeah.
College now. The youngest is actually, he doesn't really use it yet, and then he's heard of the other stuff, right? So it's
Dude, you're a good parent because how old did you look like? 13, 12?
13, yeah.
Yeah. You're a good parent because at 13, Vinny was already deep into the dark web.
Yikes.
I mean, he just uses YouTube. That's his big thing. And again, I mean, who knows? I'm sure he reads a lot of comments. Ain't no telling.
Yeah.
But
Yeah,
It's a tough
just
one,
crazy.
man. It's a tough one.
It's a different time. Hey, I'm skipping a story here, John. Tesla stock up around 7% yesterday, and that was on news that Musk had tweeted over the weekend that Tesla.
By the way, Meta's up $10. I forgot to say that. Another bucket.
Thank
So you're seeing here with a basically unchanged market. A lot of stocks are significantly higher, and a lot of stocks are significantly lower.
That is a big move for Meta. Thank you for that.
Yep, sorry about that.
But Tesla also up 7% yesterday, and that's because Elon Musk is talking up Tesla's AI chip capabilities. The gains help bring Tesla stock back into positive territory for the year. The company plans to grow its AI chips business. What's Tesla doing?
Yeah, you're right. Tesla started the year somewhere around 400 or so. It's 417 where it closed. It's 415, down about a buck or two this morning. Tesla really has gone sideways, but that's taking a lot of liberty with sideways. I mean, it had a huge move down into the 200s. It had a big move up into the 480s or so. So there's been a lot of volatility in Tesla, but it really has gone sideways if we hit you over the head and woke you up today.
Are you trading Tesla at all, or have you?
How do you rank the 16? A little rough.
I think I have a position in Tesla right now.
I think you do directional in Tesla.
Yeah, I do have a position in Tesla, and it's actually been one of those Delta busters selling put spread to buy call spread. I didn't even know they had an AI chip business, man. I
know. I was like, how can y'all just be inventing AI chips? But I don't know anything.
I was looking on the boringcompany.com again just to see if they still had that flamethrower. I still want one.
You still want the flame? I'm kind of annoyed I didn't.
Your wife will divorce you.
No, I bought the little. I don't know if I ever told you guys this. I bought the little. They had this little like it's almost like a 4x4. I bought it like 3 years ago, 2-3 years ago. Every what is the in May Memorial Day. Every Memorial Day I drive it around after our parade. It's the greatest. Everybody loves it. The kids got it. It's fun.
That's good.
You always used to start your show, Engineering the Trades, the most dangerous show in finance. But hey, do you guys want to guess before I put this slide up? What's the most shorted stock in the S&P 500?
I think it's Tesla, isn't it?
Nope. Maybe at one point it was, but I'm sorry.
Is it a Max 7 stock?
No.
Oh, jeez. Fiserv.
Oh no. I don't think MSTR is in there.
No.
I don't know.
I was surprised. It's Moderna. Yes, the drug company that literally got us out of the pandemic. They're like, you're dead to us now. The vaccine maker. It's become the most shorted company, and then in the S&P 500, its share price is slumping to its lowest level since before the pandemic. People just aren't getting the jabs, and Moderna is paying the price. Maybe opportunities. I don't know what the options look like in there.
Ivy rank of 11.
Okay, all right, fine.
Stock.
That said. Some people like to play
Trade
things
the smaller
for,
stocks, yeah.
Play one for a move because that's how it happens. Who knows what they come out with to say something?
Right, yeah, there you go. Hey, bad news, but I guess we were on borrowed time. Spotify is raising U.S. prices in the first quarter of next year. Darn it. They're raising the subscription prices. The Swedish streaming giant said in August they would raise prices in South Asia, the Middle East, Africa, and Europe. But the next year's hike would be the first price increase in the U.S. since June of 2024. Spot.
Man, Spot after or during the pandemic around $80, $90 or something like that. 585 is where it closed. It's going to open closer to 600 this morning, but it got as high as 750.
Crazy.
So it's at the lower end of its range, but up this morning. Spotify Ivy rank of 12.
Do you pay for Spotify?
I
For your house?
do pay for Spotify.
Okay, you don't use
This is a good
Spotify, but you
question.
pay
No, I use it coming in the morning to listen to my.
Tomorrow you need to run a
playlist.
segment and ask them, do you pay for this?
Do you pay for
Like,
this?
do you pay for subscription?
No,
right?
I do.
Do you pay for Spotify for
I
your
do.
family?
Yeah, I do.
I pay for
the family.
Spotify.
I actually pay for the family, and they use it a lot. We all use it.
Well, it was Gina gifted me Spotify, my daughter. So she paid for the first month, and then I've been paying for the last 12 years or whatever it's been.
The gift that keeps on giving. Yay.
Yeah, that was for Christmas. I'm like, how do you
Don't
give
give my kids any ideas.
How do you give a recurring billing gift for Christmas? Like, I don't understand that. Like, are you trying to put me in the poorhouse?
Playing 3D
Don't give my
chess.
daughter any ideas.
Yeah.
Hey, finally, cruise line stocks sank yesterday amid cautious industry outlook. The worst performer in the S&P yesterday was Carnival Cruise, CCL. Stock sank 7%, leading a broader decline in cruise line shares as industry executives expressed caution about near-term changes. Royal Caribbean RCL fell 3.3%, while Norwegian, I cannot speak Norwegian,
You a virgin?
NCLH dropped 2.5%. Say Norwegian. Norwegian.
Yeah,
But
they're all
finally-
lower.
Tell Liz and Jenny.
Finally, 5 years later, Tom was right.
Yes. It was about 5 years later. He's not right. I mean, they're probably 50% higher than
I
where he
know.
said they were going out of business. But that's a typical call. That's why we had to get rid of him off the show. But that's another story. We'll talk about that another time.
That is not true.
Carnival's actually up. I mean, Royal Caribbean's actually up $1. Carnival's actually down small. They're both hard to trade, in my opinion. And plus, I think Liz mentioned on the show with me yesterday, she goes, we have to go on a cruise together or
sure
something
she
like that. I'm like, I don't think I'll ever go on a cruise.
Have you been on a cruise, Jamal?
No.
I've never been either, but
No.
it's...
And I lived in Miami, obviously.
Oh, yeah, that's true. Yeah, you got to see them all coming in.
Yeah, I mean, if you live in Miami, you can hop on one for like a day trip or something like that,
Done
right?
that. We did the thing where you go to the boundary waters, whatever.
Mm-hmm.
And then they used to, that's why back in the day, you go to boundaries waters, they turn on
take
the
you back.
casino. Yeah, they turn on the casino, whatever you can do, like gambling.
Oh, you're just like gambling and cockfighting.
Pretty much it.
Hey, I'm gonna just go right to my viral video because I've already gone over my time. This is pretty funny because now everyone has, like Ring cameras, and sometimes, obviously, you can, help with information if something has gone amiss, but it also can catch your embarrassing moments, like this lady who's just trying to take the trash out, but her walkway is frozen, but she breaks it down. Watch this.
She's doing pretty good.
Better than that Olympian breakdancer.
Pretty good.
Lady. I know. You can watch it like 80
That's good.
times.
That's
It's
good.
pretty
Not bad.
That's
That's
good.
not
Just
bad.
be careful out there.
Where they got all this snow is what I want to know.
This is an old I don't know where it is,
Oh,
but
good one.
We're
Good one.
supposed
All right,
to
well,
get a
we're
little bit
gonna,
of snow.
what's that?
Supposed to get a little bit of snow, I heard.
Yeah. I don't know if this weekend, but we'll see some. They say it's going to be the worst snow we've had in decades.
I know 1 to 78 inches. That's the forecast. Like, okay.
We're going to take a quick 90-second break and come back. We got even the S&P is basically unchanged, down 350. NASDAQ down 61. That's a quarter percentage point. You got the Russell up 7. That's about a quarter percentage point. And you got the Dow basically unchanged, up 22. Volatility completely unchanged at 1995. We'll talk about all about that and a lot more with Confirm and Send right after this.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
But baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you
That's right, Jamal. That music means only one thing. We are back, my friend, and confirm and send is imminent. Right after we take a look at these messages, which is the market. Even the S&P is down $3 and change. Pretty tight market last night after a huge rally yesterday without a downtick. We've had a little two-sided action, just over 6,700 to 6,730. We're 6,718, which is right in between the move for last night, down about $2. NASDAQ down around 56. Larger move here, about 160 points or so, top to bottom. We're right in the middle, too, of the NASDAQ move down around 60. Russell's actually catching a little bit of a bid here, but it is in the middle of its move. And the Dow up 32 is in the middle of its move, too, from 595 to 416. I'm just quoting the last three numbers here. Volatility was basically unchanged, traded over 20, down to 1985. It's 1990. Let's call that mid-range 2 here. You can see here it's around its mean for the last month or two at just under $20. Big fall from grace over the last 2 days on volatility, hopefully paying everybody out there who sold a little bit of premium, especially if you took a directional bias on it too. Bonds are up 13 ticks, 117.24, catching a bid over the last 4 days. High end of its range, maybe even some technicians would say a breakout. We'll see what happens to bonds. Bitcoin down 2,200, caught a little bit of a bid. I think it has to be one of the saddest products that once was mighty on its movement. Now a lot less movement to the upside, at least. The magnitude of the move seemed to be muted. Ethereum down around $70. Caught a little bit of a bid yesterday with Bitcoin selling off a little bit today. Oil down $1.19 and gold up 51. You know, when you look at gold futures, it's a little deceiving. Not deceiving because obviously they are what they are, and of course they're right. But gold trades basically 24.5. If you look at GLD to give yourself an idea on what gold really is doing, you can see that GLD is up around $1 or so. So gold is up this morning. If gold were to go up $20-ish or so, it would still, gold /GC would still be up, but gold itself would be lower from the mark from last night. And I'm talking about 3 o'clock in the afternoon when GLD closes. Some of the stocks for earnings today, you had Baba, which had earnings. It was up around $6. It's up around $5 right now. Coal's up $3, BBY up $3. Today you have Dell, Autodesk, and John Deere. Let's get to confirm and send on this Tuesday, November 25th.
So what are we doing? Am I reading one? You read one? What?
Sure. If you want to read the first one, go ahead.
I don't want to put too much pressure on you.
No. Go right ahead.
You do too much.
Go right ahead. Put the first one up there, please.
Want me to be first? Okay.
Yeah, sure. Okay.
Ooh. Is there a target theta to Vega ratio you aim for? This is actually interesting because I was I'm supposed to be doing I'm talking to this group of quantitative kids, I don't even remember, at Loyola next week, and I talked to the kid on the phone last night.
Cool.
Dude, smart kid. I mean,
I know.
We're gonna
they get into the weeds with the numbers.
They really do. And I actually feel like that's something that's incumbent upon me to help them just kind of narrow the focus.
Right.
Anyway, I don't really look at theta to Vega ratio. I was talking to him because they really want to know about the prop stuff. This is something we used to do a lot at our prop firm. So I actually don't look at this as much as I used to.
Yeah, no, I don't look at it at all, to be honest. I remember Vega's the magnitude of the moves of the products that you have on, the option strategies you have on. Remember, if you have just stocks, you're not, and if you just have futures, you're not going to have any.
Well, the main reason, not to cut you off, but the main reason we don't look as because we're largely in a certain window anyway.
Sure.
So
well, it comes down to sizing.
Play if you're trading. If you're trading, all of a sudden you're out there trading June of next year, and you're trading a lot of near-term stuff. This is something you should pay attention to. I would say if you're doing that, but if you're trading like we trade, you're trading a lot of 45-day window rolling to the next. This is not really something you would pay attention to, and for the most part, it's probably pretty static.
So it's a little, again, I use misleading, and I don't want to use that because it's not misleading. But Nick's kind of embraced the directional diagonal spread, which will have a positive Vega component to it because you're long back month and short front month. If you're bullish, let's say you're long a closer at the money option, further away in time, and short an option that's at or around the expected move, and that gives you longish delta and positive Vega to offset some of the short premium you might have someplace else.
So you're collecting theta on that.
But yeah, but it's still a directional trade. But again, it all comes down to size. If you keep your size in check, then you don't have to worry about how much Vega theta ratio you have. Next question, please. When you say to trade small and trade often, what does that mean? What is small and what is often? That's great because one investor's floor is another investor's ceiling, right? We've been making about 15, 20 trades a day, and that seems to be about small and often for us. Other people might be, just a handful of trades. Some people who are trading 0 day, and especially on a day like yesterday, may have 50, 60 trades in a day. So it's all relative. I mean, we're going to talk about buying power and how you use that with implied volatility the way it being. So you might be able to get a little bit of a hint on your size, but it all comes down to position sizing. A wide range, 1 to 5% in any one of your buying power, of your net lick, in any one strategy, but it's really closer to 1 to 3% depending on your account size. Again, a smaller account, you're probably going to be using a little bit more buying power on a relative basis. Somebody that might have a bigger account, but you still keep in check. 1 to 5% very wide, 1 to 3% tighten it up a little bit, 2 to 3%, 4%.
1 to 5% for a trade of
per trade
of your.
That's correct.
And you actually answered that. I saw you. Was it a couple of Fridays ago, sipping on a little Blanton's.
Yeah.
I asked you the question. Dude was really on a ship, wasn't he?
He was really on a ship, which was
dope, man.
which was really cool. And he sent me a video on X. Yeah, he sent me a video on X. I think he was at the helm. Of
that was amazing.
Of like a ship. I mean, he must be like
in the middle of the sea somewhere.
Yeah, exactly. Yeah. And he's wondering about this kind of question here. So I figured I was a little buzzed already, so I might as well answer the video. So I gave him a video for the living room. Yeah.
It made me want to do one.
Yeah, why not? Why not? It was pretty cool. Pretty cool. On a Saturday.
Yeah.
You don't get that everywhere.
True. Exactly.
Next one, please.
I own some stock in Open, and I guess there was a stock dividend because I had a few extra shares in my account this morning under a different ticker, OpenZ. What do you do? I'm sorry. What do you? Well, I guess what they said. What do you do? What do you do with those shares when that happens? So there was a dividend in Open.
I didn't know about it either until you just looked at it here. Open trading around $7 and change. If you go, I'll go to the.
I think I have some Open in one account.
Well,
really?
Take a look.
Only a few shares though.
Here's the standard options that. The ones that I would want you to be trading, you can see the open interest here is quite good. The markets are quite tight. If you go to the non-standard, this would be the ones after this special dividend that they had, and you look at their options, they have great volume in them right now because everybody's trying to get out of the ones that they have. But you'll notice the markets are quite wide here. So what do you do with the stock is his question that he has. That's entirely open to you. OPENZ. It looks like it's.
I think it's warrants.
It's 3 shares of Open OPENW for 3 shares of Open L and 3 shares of OpenZ. I would call the trade desk and they can explain it to you. I don't know anything about it at this point.
Neither do I. It's my first time hearing about it, but I think it's warrants.
Probably.
Yeah. Which is different than a div, so
and warrants are similar to bonds on stocks.
Yeah,
I guess that'd be the best way to explain it to you. And I know it doesn't explain it really well.
Yeah,
but that's what they kind of are. Call the trade desk; they'll be able to tell you exactly what. I don't want to tell you, but what you should do with them is entirely up to you. Entirely up to you. Unfortunately, I can't help you there.
Yeah.
Next question, please. You want to do it?
Oh, that's you.
Okay, when VIX increases, do puts and calls increase in value equally, or is it just the puts? So this is something that people don't, I don't think they quite grasp. When volatility expands, VIX increases, it affects all options, calls and puts. Now, you're looking at it from an SPY or market type ETF that follows the market. So you're going to notice these puts are really expanding a lot more than the calls. When you look at it on an equity point of view, you might see like a NASDAQ stock or something. You might see the calls expanding a lot more than the puts. but it's equal. It's when VIX is pricing against SPX and pricing against SPY, it's an equal move on both sides. And that's why, again, we've got a nice market measure today at 9 o'clock that's going to take a look at this kind of thing, volatility expanding, because we do have some expanding volatility, although it has collapsed the last 2 days or so. We have had expanding volatility, but it's all options in its entirety. Very good. That was the last one. We're going to take a quick 90-second break. We're going to come back. We've got this option jive you're not going to want to miss. The research is real good today. We'll be back in 90 seconds. It's Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Global markets never sleep. Explore them with forex on tastytrade. Get in on 80+ forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Step into the future's arena with tastytrade's Active Trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
It's option jive. It is time for an option jive, and it's a correlation code. 4 ways they shape the game. I don't want to run out of time because it's good research. So please, let's get to the first slide. Thank you very much. Even the S&P is down 575. All right, in the financial world or the finance world, traders can use correlations to see many relationships between financial data sets. The diversity underlines in a portfolio, the relationship between indexes and individual stocks in the index, understanding how correlations help during pairs trades, quantifying correlations using beta. Again, just a little showing you what they're looking at here. Next one, please. All right, correlation is a statistical measure that expresses the extent to which two variables are linearly related. They're just showing you each one or giving you a kind of a dictionary term on what each one is. The correlation coefficient is a statistic that tells you the strength and direction of the relationship on a scale of -1 to +1. And of course, correlation doesn't equally, what's this word, by the way? Causation?
Causation.
Yeah, I looked it up. It is a real word, so good on them. I didn't. When I looked at the first time I read this, I was like, all right, this doesn't make sense. But it was definitely a real word. Now they say -1 to +1. That's why you'll always see 0.76 as a correlation. That would be in between -1 and +1. That would be 1.00. -1.00. When it comes to portfolios, traders should attempt to make sure their trades are diversified. The underlyings aren't correlated too much. This protects them from moves in the market that affect correlated underlyings. Now, I have to put a little asterisk on this because it's extremely hard in a 45-day period to find individual stocks that aren't correlated with each other, because it does seem when everything goes higher, everything goes higher. When everything goes lower, everything goes lower. But there were a few stocks, even in this most recent move, that went down a lot more than other stocks or didn't participate in the move lower. And those are the ones that I think that they're talking about. They're going to look at ETFs here and a couple of stocks. So let's get on and we'll check it out and see what they come with. All right, so here's a correlation table. They're looking at ETFs here, which are a lot easier to get correlated or uncorrelated, or see the relationship between the two. They should move together 0.75% of the time with each other, and they're only moving half as much. There might be a correlation there that you can take advantage of. And here's what we're looking at. So strong positive, obviously the Qs and the S&Ps. XLU is one that they look at. You can see the correlation there is 0.41 as opposed to almost 90% for the Qs and the S&Ps. TLT and SPY, no correlation really at all there. So if you're looking for a little bit of to get a little bit less correlated in your portfolio, maybe a TLT position. And TLT has actually come into its right of its own lately. TLT, Ivy rank of only 0.4, but TLT has had some good back and forth action inside there. XLP and XLK, two things that I don't really trade too much, but they're weak and negative correlated. And then a strong negative would be obviously the S&P and the VIX. So
this is a really good chart. I would say the top two largely stay the same. Anything else in between can vary. And I think that's kind of what this study is going to get into, right?
Yeah.
But anything in between can vary. There will be times where TLT may be highly correlated to SPY, and there will be times where they are completely opposite.
Yeah, it's a good point. That's definitely a good point. Yeah, it's definitely a good point to make. And S&P and VIX. So if you were to have a long delta portfolio in S&P by being short puts or something like that, and VIX goes lower when S&P goes higher, you get paid exponentially on that risk that you're taking. Now, if you can couple that with what we're going to show you in the market measures at 9 o'clock, then you know your entry points, then you have nirvana, and that's really what that one shows you. That next one, please.
Team spirit.
All right, so I'll go to the bullet points here. Some ETFs, such as SPYs, have relatively low weighting on their top stocks, while other ETFs, such as XLK, have relatively high weighting. More weighting means more correlation between an index and only a few of its stocks, meaning that, like I told you this morning, 40% of the S&P index is measured by those magnificent 10 stocks. So you get a big weighting in those 10 stocks. You could take this one step further and look at those 10 stocks and say, all right, maybe those implied volatility, or they're moving a lot more than the S&P. I want to get long one, short the other. So you could take this in any direction that you want to. They're looking at Nvidia and Microsoft here in the S&P. I thought Nvidia was 7%. It's actually 8% of the S&P. Microsoft is 6.5%. I mean, you're looking at the two of these here having a huge weighting in the S&P. It's becoming a lot more Dow-like than diversification that you think you're getting in the S&P. Yeah. Qs, Nvidia is almost 10%, Microsoft's almost 8%, and then XLK 15% and almost 12% from Microsoft. So big weighting there on those. So you've got Nvidia lower today. You've had a lot of stocks a lot higher. We've mentioned Google and a few others. And you've got NASDAQ down almost 90 handles today. Putting this point in, you got even the S&Ps down almost 7. Microsoft and Nvidia are both weak this morning. Next one, please.
Some big weightings in that.
But you might look at it as like, you know, the whole S&P 500 itself is weak, and that wouldn't be telling you the whole story today when you're looking at this. All right, pairs trading, identifying related assets, correlations reveal securities that move together. highlighting long-short opportunities with price diverge. Single meaning reversion, strong correlations mean deviations may indicate temporary mispricing. I hate the mispricing aspect of it because it's perfectly priced, but advantage that you can take advantage of there. It's not really mispricing. It's just the correlation isn't working like it should have, or it does over time, likely to revert. And that's really the key there if you're playing that. Guiding entries and exits. Risk management, tracking correlations over time, exposes weakening relationship, helping avoid non-converging pairs. And they're looking at the correlation numbers here. Again, S&P and IWM, volatility is low. And the 45-day expected move, I think, is the takeaway from this whole slide. Gold and silver, obviously a lot more volatile. You can see by the expected move being 2 times or more what the S&P and IWM is. So if you're new to correlations or you're doing something, I guess you would want to go into something lower with lower volatility just to learn on the correlation. It's not really a premium selling thing here. It's a divergence between the two prices. So S&P, IWM, between these two pairs, gold and SLV, 2 extremes. So we're looking at the lower one and the higher one.
And it's a good point about mispricing because what the word implies is that if for some reason you see, like, for example, we talked about the TLT and SPY situation. If that is out of whack, if you will, that's not a mispricing. It's just changing for the time being. You should probably figure out how that's changing. But mispricing implies, oh, this is crazy. I need to get in and I need to get bigger. And that's not necessarily true.
Next question, please. While correlation measures the directional relationship between assets, beta, that's that little symbol there, it gives us the magnitude of the move. The beta of an underlying is with respect to its ETF. Of course, we're always looking, when we beta weight something, all your portfolio on the positions tab, you should have it beta weighted. You should know what your beta weighted number is for nothing more than if, let's say you have 300, I'll go long, SPY beta weighted deltas and SPY is up $1, you should be making $300. I mean, that's how I say if I have a good position or a position that's not benefiting, like I have weak beta weighted deltas. If I'm making more than $300 on that $1 move, I've got good bang for my buck. If I'm making less, then I got to take a deep dive in what do I have in there. Maybe I've got a lot of junky options that aren't going to move that much, giving me delta, but not good delta, or at least not the delta that I want on a correlation to the S&P. Here's the 5-day daily returns. You can read them yourself, and there's Meta and Nvidia. However, the magnitudes of the correlations are different. Meta moves 1.5 times the S&P, and Nvidia moves 2 times the S&P in this example. So if Meta and Nvidia have high IV ranks, and this was a lot that we talk about, like where you rotate when you're trading, I'm more inclined to hang out there than I am in the S&P, even if the IV ranks are the same for each other, because I want to get paid my bang for my buck. Now, somebody else who might want to take less risk on the magnitude of the moves might stay in an SPY. Again, it all comes down to your own risk tolerance. Next one, please. Understanding beta is important for strategy selection. That's just what I was alluding to, and risk management of an overall portfolio. If you believe a stock with high beta is likely to have large price swings, you may consider strategies that profit from significant volatility. That's exactly what I was talking about just a moment ago. On the other hand, for a stock with low beta, you may choose strategies that benefit from a more stable price movement. Again, we're talking about probably a directional bias there as opposed to a premium selling. Next one, please, the takeaways. Correlations are important for a trader to understand in order to make sure their portfolios are diversified and they can profit from certain strategies such as pairs trading. Correlations also come into play when looking at ETFs and their underlying stocks. A trader can quantify their correlations using beta. I mean, beta is, I always traded one product back in the day on the floor, so beta weighting was irrelevant to me. But as a retail investor now, beta weighting a portfolio, I don't know how I lived without it, or how you could live without it if you're trading multiple products. Again, 0 day, I would throw that out because you're trading, kind of more like I did back in the day on one product, and it's a expiration type thing. You're trading it for 1 day. Understanding the significance of just price when it comes down to 1 day. I mean, you throw all the other Greeks out, okay? Understanding the significance of correlation in trading can allow a trader to manage risk and choose appropriate strategies for their overall portfolio. I think that last takeaway really summarizes the whole option jive that we did here today. All right, even the S&P is down 7.5. We got about 4.5 minutes before the market opens. NASDAQ down 93. This is about as weak as I've seen them all morning. Talking about the even the S&Ps and the NASDAQ, because you've got a tug of war here with the Russell up almost 6 and the Dow almost unchanged, up 21. Volatility doing nothing at the moment. 1996 up a penny. Bonds are your mover to the upside, up 10. If you look here on a percentage basis, nat gas is the one that pops up, down 28 cents. Is a huge move in nat gas, almost a 6% move, dwarfing silver's 1.5% move to the upside, and gold up 42. We'll take a quick 90-second break and come back. We got the opening bell next.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Jamal, my friend, we've got about a minute and a half before the market opens. I have to ask you one thing, go off topic for the market, because we're going to talk about markets for the next hour and a half or so. When would you ever order turkey out if you weren't in a diner?
I wouldn't.
Right. So why make such a big deal of it for Thanksgiving?
I mean, you know.
I mean,
it's the lore, right? It's the lore. It's the pilgrims. It's the story. It's, you know. Come on.
I don't get it.
We can go down a rabbit hole on this for the United States of America if you really want to.
No. I don't want to go any down any rabbit hole. No.
No, it's a good point. I actually wouldn't. No, I would. I don't know. Give me some other meats.
For barbecue.
I mean, well, you know what? It's a good turkey over ham. I'd probably go turkey over.
When would you ever order ham?
I'd probably go turkey over ham.
All right, but when would you order ham? If you go to a restaurant, I say, oh man, I really feel like a good ham.
My brother loves some ham. He
really?
Yeah, he was always a ham dude. I'm like, whatever.
All right, so let's go one more topic before we only got 27 from. Didn't you ever break a bottle rocket and aim it at your friends and
Absolutely.
Watch? Okay, right. Yeah. All right, so you had some sort of childhood.
Yeah.
I mean, I know you didn't shoot anybody with a BB gun, so I didn't know if like you were.
I grew up in
raised
Miami.
kinder, gentler. Yeah,
At the time, where basically a lot of New Yorkers were coming down, so you guys actually influenced us a whole lot. I'm not gonna lie.
That's fair enough. All right, well, there's your opening bell. Let's see what's going on with the market here. Even the S&P's down 3 and change on the opening. NASDAQ down 90. That's your weakest of the group. Russell up 7 and change. The Dow up 139. Volatility basically unchanged, down 4 cents. Bonds up 9. Can we have a complacent day, you think, today in the market after the movement that we've had over the last couple of days? Even the S&P's basically every day having 100 or 200 handle move top to bottom. What do you think?
I think, yeah, absolutely. I think a complacent day would be down 25 or maybe up 25. I'm holding out for an up 25 for a positive sort of drift as we head into the Thanksgiving holiday. But I think if there's any time we could have a complacent day, it would be today and tomorrow.
Even the S&Ps have a $34, $35 expected move. It was closer to 44 yesterday on this time. Let's see some of the movers here, signifying what you were just saying, Jamal, that we probably have a tighter market today, but everything's on the board. AMD down 14 and change. Apple 11 down 9. Nvidia down 8.5. Coin down 7.5. Oracle, what a pig, down 7. Didn't even catch a bid yesterday when the rest of the market was higher. I mean, it caught a small bid, now making new lows. Oracle down $8 now. Coin down almost $8. MSTR down 5 and change. Tesla down 4. Hood down 2 and change. Let's see what Microsoft is doing. Microsoft down 90-ish cents. Let's see on the upside, what do we have? Well, your Lilly up 9. Meta catching a bid up 6 or 7. AVGO was up significantly more earlier. It opened at 385. It's 381, up $3 right now. Google up 260. Reddit up 2 and change. Baba for earnings was up closer to $6, up 2. So market having a little bit of a harder time. Apple up 178. Big part of anybody's index here. So you got a little bit of a tug of war, but you can see a lot of stocks here in the NASDAQ a little bit weaker. If you're looking for a pairs trade, maybe you got something NASDAQ, even the S&P. You got NASDAQ down almost 0.5%. Even the S&P's now up 25 cents. So we'll see what
GLD's making your point. Actually, GLD's barely up with actual futures up 34 and change.
Yeah, GLD up 20 cents, but /GC up 34. So that means that /GC really closed closer to where it's opened, or where it's trading right now, 41.66. Looking at GLD, basically unchanged. So gold basically unchanged, even though you see it up 35 from yesterday's
Google
close.
Faded hard. Look at that.
We'll say again?
Google faded hard.
Google, up $1.82. It traded
like 331 at pre-market when we were.
Yeah, and it opened at 325, so it sold off about $4 or $5 there. I'm going to take a look at
AMD below 200, Nvidia down 9. I mean, if this continues, I don't know. I mean, this is actually interesting to see this type of move. And this, at first, there was some actual divergence among some of these stocks, which we've seen a lot between Apple, Microsoft, Nvidia, et cetera. But I don't know.
Yeah, Oracle down $10. That's been the thorn in my side. iBit down $1 and change. That caught a little bit of a bid yesterday. Costco is up $1 and change. Coin down 6 and change. Better day in the portfolio yesterday than today, at least from the way that we're leaning, giving a little bit of money back overall. SPOO's actually catching a small bid here, up $2 and change as volatility does absolutely nothing. Say again?
A little surprising, honestly, to see these names, the names that we've mentioned that are down the way they are.
Yeah.
And yet, NASDAQ's not really down that much, and SPOO's is positive.
And you got Microsoft down 2, which has been a big part of the portfolio. Apple up 3 and change. So you really do have a really big tug of war going on here after a huge move in the market yesterday. That 100-handle move in the even the S&Ps was swift, and then it kind of stayed there for most of the day. It maybe had about a 20-handle move up 90 to up 105 or so for most of the day, making its move pretty early in the morning into the day. See what's going on right now. You do have the market catching a little bit of a bid as even the S&Ps are up 4. NASDAQ was down over 100. It's down 94 or so. Russell up 16. The news is already coming out that Russia's going to reject the Ukraine can sign as many peace treaties to Venetta's point. It takes 2 to tango right now. Doesn't look like Russia wants to agree to anything. Bonds up 10, 121, 117.21. Bitcoin, man, really a dead volatility product to the upside, not catching its bid at all.
So one of the things that I've noticed over the last couple of weeks is you talk about correlation. There's been some kind of correlation between Bitcoin and gold and the S&P 500. Actually, Ryan had a great slide of it yesterday when he was on OTCL with us. And they've been fairly correlated. I mean, it doesn't matter the direction. They've been kind of moving together. Not so much today. And I wonder what this means for their day, or I wonder if at some point they will revert and correlate again. But it gets to the point of the slides we were talking about earlier. Correlations can change in some of these products. There's certain ones that kind of stay the same. The SPY, Qs, yes, very highly correlated. VIX and S&P 500, opposite correlated. But there are things that will change from time to time. And the correlation between S&P 500 and gold and Bitcoin, quite frankly, doesn't really make much sense more recently, but they've been correlated.
Yes.
It's kind of how it goes. Yes. That's not a mispricing. Right? No. That's not something you should try and figure out trade-wise. At least if you do, just be careful. Don't get too big in it. But just know that they have been correlated, but right now they're not. And I find that interesting on a day like today. Agreed.
It is interesting to look at correlations. I try not to get too caught up in them. The way I get caught up in them is I try to, buy the one that's gotten beaten up correlation-wise and sell the other one, especially if there's some premium in it on one side or the other. Or if I like one that's gotten beaten up, just stay in that one as opposed, hopefully, that it lifts the rest of the market. Haven't made too many pairs trades as an overall position for my own style.
It's funny you say that because the man with the beret.
Yeah.
There were many times when we'd be on This Week in Stocks, and I would just point out like a correlation that's currently happening. Yeah. I like to see them. I like to make sense of the move I'm seeing. I don't necessarily want to trade it.
Well, it gives you a breadth of the market, I think. I think it's some background.
But I know a lot of times I point them out, be like, oh, well, I don't know anybody would trade that. I don't know why. And it's like, oh my God, this guy.
Yeah. Well, I'm set in my ways. He's, really set in his ways.
But I point them out, and I like to see them. Like I just said, S&P 500, gold, Bitcoin, they have been trading together. Yep. I've noticed it, but I'm not out there trying to I'm not trying to make that trade.
Right.
I just notice it.
Yep, totally.
Sometimes it helps you understand what's going on in the market and explains a little bit, but
It's call it tape reading. I know Tom used to say that, but he would watch so many more things than I would watch. Like he would catch, the euro and the yen moving where they're off my radar. They're down at the bottom of my list. I'm so focused on my little world. He would see gold and silver and the more quivers you have to trade with, I think in your what am I looking for? What word?
Cap?
Yeah, whatever. The better off you are, and I think that's been a kind of if I had something I could say about myself that I could use some improvement is to see some of those correlations in the overall market that I don't and products that I don't look at. So
I like to find, even if it's just for a temporary time, I like to find correlation. Doesn't necessarily mean I'll trade it. I just like to see it.
Yep, totally agree. All right, listen, not too much to say here. NASDAQ down around 100 where it's been sitting. Even the S&P's up 4 or 5, catching a little bit of a bid. Russell up 18. That's a 0.75% move in the Russell. That's a big move to the upside in the Russell. Some of the, interest rates going lower or bonds going higher, helping the Russell here. We'll take a quick 90-second break and come back. We got more Tasty Live. You know what comes up next? Let me explain with Chris. Mr. Vecchio, we'll be back in 90 seconds. Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
tastytrade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
Jamal, my friend, we are back, and that music can mean only one thing. It's time for Let Me Explain with Chris. Chris, I have a surprise for you. Maybe it's not a surprise if you looked in the chat room, but I would like you to see something, and I'm a little bit, it touches my heart. There you go. There's your little guy, Luke. Welcome to the world, Luke. And you're already showing him this crap on TV? Don't you?
It's funny. Someone in the chat this morning said, I bet Vex Baby's first words are going to be, I wonder what the Fed does on Monday. And my response to Frank was, of course, I've already shown him the first two Fed meetings, and I have proof of it.
Well, you know what? His real actual first word probably will be, J-Pal. Won't be daddy. Won't be man.
That's right. That's right. But we got a little tug of war going on in the market here. Got even the S&Ps and NASDAQ lower, Russell and the Dow higher. With even the S&Ps and NASDAQ lower, they usually win, but we'll see what happens to the overall market with volatility catching a bid now up 30 cents. What do you think here, my friend? What are we going to talk about? Let me explain with Chris.
We could talk about Google. We could talk about volatility, or we could talk about the wall of worry. We're going to hit all three, but dealer's choice for where you want to go first.
Oh, it's up to you. Go right ahead. It's your segment. Your son's watching. You're the lead.
Well, let's start with Google because I heard you guys talking about it when I came into the room. Obviously, this morning, there's an interesting dichotomy in this market where Google and Meta are up, but Nvidia, Oracle, Microsoft are down. Yeah. Meta is obviously building out its AI capabilities, training massive models for everything from LLMs to generative AI. They need enormous compute power, and NVIDIA GPUs are the industry standard, but they're expensive, and scaling to the size that Meta wants is a huge cost. an energy challenge. Enter Google's TPUs, tensor processing units. These aren't just another processor. They're built specifically for tensor operations, the core math behind deep learning. For certain large models, these TPUs train faster, handle bigger batches, and they do it more efficiently than NVIDIA's general purpose GPUs. So that efficiency isn't just speed, it's lower energy and compute cost to scale, which is critical for accompanying training billions of parameters. So this is kind of the catch. TPUs are part of Google's ecosystem. They run these two programs called TensorFlow and JAX, which run optimally on them, and Google Cloud deploys them at scale. This doesn't seem like it's important stuff, but what matters here is that this integration gives Google a vertical scaling advantage in building and deploying these large models. And so for companies like Meta, negotiating access, like we're hearing in the news today, isn't just about renting this hardware. It's really about access to the stack that makes these new TPUs work best. So it's an interesting dichotomy, Jamal. You and I spoke about this, and I've been talking about this a bit on Futures Power Hour and Overtime over the past week, where as Google goes up, the broader market with the AI narrative is kind of struggling because so much of the AI narrative is built around this NVIDIA flywheel. And if there's an alternative way to generate this type of revenue and this productivity for your company without using NVIDIA chips, maybe Oracle's overvalued, maybe Microsoft's overvalued, maybe the demand for NVIDIA won't be there in the future. So I'm curious, do you guys see the success of Google as a potential problem for what's going on with the main drivers of this market rally in recent months, given how well Google's success over the past 2 or 3 weeks has come at the behest of the Microsofts, the Oracles, and the NVIDIAs of the world?
All right, you want to go first?
Sure. I mean, I don't have an answer. I'm actually a little surprised.
Well, I got an answer for you. I mean, if NVIDIA is almost, let's just round and say 10% of all the market ETFs, like the Qs and even the S&P, we just did the correlation. Was it like 8 and 9% between the two?
Yeah.
And you've got NVIDIA down $10, $11, so that's why you have the Nasdaq down over 1%, and even the S&P's down 0.5%, and you got the Russell and the Dow higher because they don't have NVIDIA or Google in their portfolios here or in their ETFs. So for me, I think it makes a big difference. I mean, if NVIDIA's been the leader and you've got Google at all-time highs making new highs, I think you've got a little bit of a teeter here with the market at all-time highs or just off of all-time highs trying to catch a bid. I think this puts a big damper on it.
I mean, no doubt, but I think what he's asking is the fact that Google's making these chips, at least is what it seems to me. Should NVIDIA be down the way it is? Should AMD be down? Should they really? The way they're down right now, it's like they're really worried. Should they really be down this much?
It seems.
I don't really know the answer
I mean,
to
the
that.
market's making it seem like it's just like earnings. Like when they come out with earnings and they blow the doors off on earnings, but they say, you know what, we've got a lot of competition and headwinds to come, and the market doesn't go, the stock doesn't go up as much, or it actually goes lower on those. You know, it doesn't matter about the past; it's what's going to happen in the future, and the future seems to be a little bit more crowded for NVIDIA now. The good part of it would be that, you know, you rotate out of your NVIDIA or your overweight of your NVIDIA, if you were lucky enough to have that, and you go into a Google at all-time highs. That's the scary part for me. Like,
Yeah.
So
I think look, I got NVIDIA. I got a diagonal NVIDIA. I got like a little long position in core weave. I'm saying I don't necessarily want to see this, but you're right. I mean, I think it shows you. I think this also says that people always get so worried about the concentration of NVIDIA and Microsoft, whatever.
Yeah.
The market has a way of fixing these things. And that's just been my answer more recently. We go back 30 years ago, it wasn't these guys that were the leaders in the market. They weren't the ones that were moving the market. It was the IBMs and et cetera of the world. So that's what annoys me sometimes. Oh my God, it's too concentrated. The market has a way of fixing these things.
What's your take on this, my friend?
Yeah. You need, Google has a unique advantage here. And this isn't just what we're seeing here in US markets. You could go and look at something like SoftBank, which has exposure to the GPU side of this equation. They're been getting hammered here the past few sessions. If you're going to be using Google's TPUs, you have to use everything Google. NVIDIA is a little bit more scalable for your random company. So this does seem to be overblown, right? If I'm looking at an AMD or NVIDIA, it does seem like it's overblown. It kind of reminds me of the DeepSeek news that we had in January when the market freaked out that they had developed a model for $5 million when in reality it was just a single training run that cost $5 million, which is not out of the ballpark for what training runs cost. So some obfuscation there with how the media reported that, and it led to this widespread fear and confusion. It's not like people are going to be buying up everything Google moving forward. So great for Google, absolutely adds more competition to the space. But it does pose the question, because of the concentration risk, we could get some of this index churn now, where like you get a reshuffling of the players of who's going to be the leader, who's going to be the laggard. And if that means a repricing of Nvidia, Oracle, Microsoft in the short term, the Nasdaq's going to have a great deal of difficulty punching into new highs. So thinking about how this market may churn over the next week or two, a lot of sideways chop here now that we've reset ourselves off of that sharp move lower last Thursday.
Next one, please.
Next one, this kind of caters into the wall of worry. I'm curious if you guys feel it the way that I do, but it feels like the wall of worry is real right now. And maybe that's the only reason why markets are staying afloat. Positioning's light, hedging is elevated, flows are cautious, nobody's really all in. Traders kind of are talking like they think the tape is going to crack at any moment, and that disbelief is the fuel for keeping the market afloat. If traders weren't worried about valuations, about AI sustainability, about elections, tariffs, rates, the Fed, if that wall disappeared, the tape would melt straight up. So fear is acting as a bit of a regulator right now, in my view. If you remove it, you're going to get your 1999, 2000 style verticality. Do you guys find this to be a market with a wall of worry? And if not, why not?
Yeah, I mean, I think those things you mentioned are definitely the wall of worry. And you can see it. I mean, we've seen it. It came to a head literally last Thursday, right? I mean, it really came to a head then. And these are I feel like I would like to think that this would be the beginning of the week where you sort of dismiss that wall of worry aside. That said, I mean, today is showing you more of it. Again, you look at crypto; those are down. You look at this sort of diversion in some of these Mag 7 names. I mean, I think that's really big, showing the move today. So it does exist. We finally do have a wall of worry again. I'm sure we'll climb out of it at some point.
Well, I mean, you just mentioned it, right? I mean, you just said like Nvidia, it's one of the main market drivers here. You know, is the Microsoft, which is also down $7, gonna kind of help the market here? Is it the Apple that's going to help the market here, up $2 and change? I think anytime you have change and you've got a big player like a Meta coming into the space, it's got to be a wall of worry. And I think that's why you've got this kind of action. Look at the volatility, up 45 cents. It was just up 65 cents a moment ago, making the E-mini S&P move from $34 pre-market to $43 now. And we've already had that kind of movement today. It's $40 right now, 39 when we catch a little bit of a bid here. So yeah, no, I think we're still climbing the wall of worry. I think there's a lot of news out there that's kind of two-sided, and not everybody's banging. I'm surprised that that people aren't coming out saying this Nvidia is a buy here, or
no, you're right about that.
Something like that. Whenever something's on sale, nobody ever wants to buy it. Who's always wanted to buy it? They want to buy it on the way up. I never understood that.
It's so funny, right? Like same thing with Bitcoin right now. Like everybody's scared to touch it. I mean, as soon as these Oracle and which again, Oracle is not a new company. It's been around a long time. CoreWeave, I understand to some degree, but they keep bringing those two up when they're down like this. And the first thing that comes up is what? Their CDS situation, right?
Yep.
First thing that comes up. Nobody wants to touch them.
And Oracle has
CDS
earnings coming
market.
December 8th. Yeah.
But listen,
I have such a.
What,
how many
CDS
trades?
market?
How many CDS trades? How many CDS trades have been placed in Oracle this month?
Small.
I don't even know what that is.
Right.
Less than 200.
Yeah.
It's such an illiquid market, right? So it's a few people who are defining this narrative that are spooking everyone.
Some people look. Some men just want to see the world burn. At least that's what.
It's true. It's true. It's funny that you guys are bringing up VIX here because it had quite the pop. I know it's at 2084 now, but that's 84 cents from where it was at the lows earlier. It was at $20, and it was now at 21.75 or so at the highs.
Yeah,
That's
you're talking about VIX, yes. Mm-hmm.
Yeah, that was a quick pop in a 15-minute span.
Yes, it was.
I mentioned this on Overtime yesterday, but we didn't have a chance to go into it. And no offense to my friends Ilya and Dylan, but you guys are more volatility geared than they are, so this feels like a more appropriate venue. Tom McClellan, who invented the McClellan oscillator, he runs a blog post called McClellan Financial Publications, and he ran a piece last week about the spread between the VIX index and the VIX futures. John, I shared this chart with everyone in the chat earlier. It would be a good time to pull this up on screen now. Better to show than tell, as it were. Here's the gist. Normally, VIX futures trade at a premium to the spot VIX because they reflect longer-term risk expectations. So you calculate the spread in McClellan's eyes like this. You take the highest VIX futures price and you subtract the VIX index from it. When that number goes negative, it tells us something interesting, that spot volatility is higher than what the futures market's pricing in. So in plain English, this means near-term fear is elevated relative to what traders expect in the next month or two. No big surprise there. As of last Thursday, though, this spread set around minus 11%, which seems meaningful. For context, back in April of this year, during the tariff-related sell-off, it hit minus 30%. History suggests that these extreme negative readings can coincide or appear near S&P 500 bottoms. So I want to be clear about that. This isn't a timing signal, it's a condition. The market could obviously still face further downside before the bottom fully takes hold. But when the spot VIX is higher than the futures market, the market's risk valuation is inverted. So from a futures or options trading perspective, Tony, does this make you more comfortable buying options, selling insurance? When you see this kind of inversion in the VIX and the VIX futures, how does this change your strategic perspective? Because you don't get this that often in markets.
It's nothing that I've looked at in the past. But when you're putting it up here and watching it, I mean, are you looking at this as a bullish case? Let me ask that question for you first.
Yeah, I mean, I have my three stats. I always like to find my three little unique stats to weave together a narrative, just because two dots is just a straight line and anyone can draw a line.
Mm-hmm.
But when I have this VIX spread signal here, that's 0.1 from last Thursday. Thursday also gave us a SPY that gapped open higher by 1.5%, only to close lower by 0.5% or more, which last occurred on April 8th, the low for the rest of the year. And then seasonally speaking, last Thursday was the low point for the S&P 500 for the remainder of the year, if you go back to 1950. And similarly, if you go through the entirety of the VIX's history, last Thursday was the high point of the year for the VIX, if you go all the way through its inception. So I see those three things, the seasonality, the gap and reversal, and now this VIX spread as really unique market occurrences that are all lining up that suggest that we have a workable low. And then I sprinkle in the wall of worry fears and say, maybe last Thursday, Friday, that was it. And we have a base to work from, even if we're not going to advance sharply or aggressively over the next few weeks. We have something that we can trade around as bulls.
Yeah, I mean, we talked a little bit, Nick and I, on the show about how we thought that maybe the market was getting a little bit too oversold on a short-term basis with the way the volatility was popping up there. So I agree with you there. I mean, this is an interesting chart, one that I never looked at. I mean, again, if I had it in my repertoire, it would make me feel a little bit better about some of the positions I was putting on. So I agree with you, and it almost answers your last question about the wall of worry. If volatility is high, you have markets that aren't as complacent as you would expect. So helping, I think, your point of view, which seems to be leaning a little bit more bullish than bearish. But look at the type of movement we've already had today. This is what we were talking about, especially in a shortened holiday week, where you're going to get markets that might be a little bit thinner relative to the way they are, and you'll have these big moves. I mean, we just had a 40-handle move in no time. Yesterday, we had a 105-handle move in basically no time. Now you've got volatility. You said that was just a big spike in VIX. VIX is now
already off. Yeah,
it's up 20 cents. So you're really going to have to be nimble here in the overall market. And you had, since you mentioned gold earlier today, gold has had some big moves up and back too. So you definitely have, I think, a skittish market, which I think in the long run, bullish-ish for stocks, but I think you're going to have opportunity to chop around. I originally thought this market would be chopping around, and we've had a little bit of that, more upside than I thought yesterday for sure.
McClellan, right? The financial guy. Tell him to leave the futures and the option stuff to us, okay? It makes sense, but actually a better chart of that is the volatility risk premium, which is something I've shown a million times. And essentially it looks similar to that. When that's down there, typically that is somewhat of a short-term bottom.
There you have it.
All right, very, very good, my friend. Parting words, how is the baby sleeping?
Fantastic.
Just like he
wake
is.
up at night.
Fantastic.
And it's like 5:30, so I can just get up, I give him a bottle, I go exercise. It's a nice morning.
Yeah, Vanessa says you don't sleep. She says you're a little nocturnal.
I am. I really don't sleep.
It's not good. Sleep is
young man, Chris.
Good for your health.
No. This has always been since I was a kid. I went to one of these gene defects where I'm one of those people that only needs 4 or 5 hours a night. I'm golden.
Sounds like this kid I knew in 3rd grade whose temperature was actually like a degree colder than everybody else. So when it was chilly, he was actually still warm.
Really?
Real talk. Yeah.
Oh,
crazy.
There we go. I'm learning something here. Good job out of you, Chris. Take care of that little one. We're going to take a quick 90-second, but wish you and your family a happy Thanksgiving, by the way.
Man.
You as well, sir. I'll be with you tomorrow morning all morning.
Oh, that's right. You are all morning, all day. If you can't get enough of Chris, you're going to get a lot of them tomorrow. So thank you for reminding me. I appreciate that. We're going to take a quick 90-second break and come back. We got a market measure next as even the S&Ps seem to have settled in, down 6. NASDAQ down 164. Russell up 27, catching a big bit, actually up a little over 1.125%. And the Dow up 165, volatility up 21 cents. I'm talking about /VX futures. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out Cboe's Retail Trader Suite at www.cboe.com/minis.
Jamal, my friend, we are back, and you know what that means. Time for a little bit more Tasty Live. That's right, with a market measure sponsored by the Cboe. Before we get there, even the S&Ps just took a turn south. Choppy market here, down 29, about 20 handles off of their lows. NASDAQ down 270. That's the big mover to the downside, but the Russell up 20 and the Dow up 78. Volatility up by 55 cents to 2050. Even the S&P's expected move for those zero-day players around 36 and change. Actually caught a little bit of a bid here in the overall market of volatility. How effective is return on capital as a trading indicator? How effective do you think it is?
ROC?
ROC. A lot of people like to talk about ROC. Always talking about return on capital being the paramount thing to trading. What do you think?
I'm going to say it's kind of subjective. I think it could be subjective. Again, it's a number, it's a calculation, so I feel like it could probably be subjective. I think you got to use it in the right way.
Okay. Well, let's see if we're going to use it in the right way here, or how you can use it in the right way here. How effective is return on capital? In option trading, return on capital, ROC, is determined by dividing the net profit loss, so we're talking about P&L, by the required capital, which is represented by the buying power reduction. Now, again, your buying power reduction is going to be completely different in an IRA account. We're talking about margin accounts here, and it's going to be different in a portfolio margin account too. So the same trade in a margin account can have significantly less buying power in a portfolio margin account. And that's why we talk about, portfolio margin. If you can have an account that's over $150,000 to $75,000, over $150,000 to $175,000, and you maintain that type of balance on there, you can use significantly less buying power when you make the same trade, especially if you have some uncorrelated positions like we talked about. Some of the ETFs, you use significantly less. Some trades you can put on an SPX that use relatively no buying power. Anyway, traders, where was I? By the buying power code, which is represented by the buying power reduction. I'll go to the next sentence, I'm sorry. Traders utilize ROC, return on capital, to assess the efficiency of capital utilization in potentially profitable trades. So what is the ROC threshold in option strategies, such as those involving SPY, that makes a position more or less attractive? Next slide, please. All right, so we're looking at currently the 45-day, one standard deviation, SPY strangle, max return on capital is 8% as of 11/21. Now that was 4 days ago. Volatility is higher today, but not as high as it was 4 days ago. But what is the historical content of this level? Like, is 8%, is that high or low? Does it mean anything to you? Keep in mind, we are currently in a period of elevated volatility due to the market turn down. So you're looking at here at the premium, $8.47 for the same 16 delta strangle that we will in a moment look at in a different time frame. The buying power reduction is $9,500, and the return on capital, almost 9%. That's a decent return on capital, actually a quite good return on capital.
And this is likely a margin account, right?
This is a margin account for sure, for sure. Next one, please. All right, the study. To examine this, we will study of selling one standard deviation SPY 45-day SPY strangle. Okay, we're looking at 2013 to present. Typical management here, managing at 21 days till expiration. And we analyzed average premium received, the buying power reduction. Remember, when the product was smaller in 2013, you're going to use less buying power than when it's higher at or near all-time highs as we are now. The success rate of all of the different volatility levels that we're going to look at, the average P&L, and the average return on capital. Next one, please. All right. The historical average max return on capital is 6%. So when we just talked about a moment ago that we had 8%, you don't know. It's almost like looking at IVR. You don't know if 8% is high relative, almost 9% actually, or if it's low. Now that you have the historical average on return on capital, you can see that it's quite high. And this is why we talk about ramping up when you have high implied volatility, using the same amount of buying power relative that you would when volatility is lower. The median is closer to 5.7. So you have an average as between us friends of around 6%. And you're getting almost 9%. I mean, which door do you want to choose? If you're selling premium,
the average.
Sure.
Everybody wants to beat the average.
Right. Of course. This means that most of the occurrences in the S&P have a maximum return on capital higher or lower than the current level of 9% for the 16 Delta Strangle, and that's what you're looking at right there on that little graph. Even the S&P is down 3, NASDAQ down 165. I think this is definitely a wall of worry so far of the market, two-sided choppiness action. Next one, please. Given that both the mean and the median are close to 6, we will use 6 as the threshold to test the S&P strangle performance. That's what they're going to do here. They're going to give it some sort of barometer or litmus test right at the average. Also, overall prices and volatilities in SPY have increased a lot from 2013 to 2025. I mean, this is what I was just alluding to a moment ago, that the price of S&P is, as it goes higher, you're going to use more buying power, meaning that the data will be skewed for the last few years. Makes perfectly good sense. Next question. Next slide, please. All right, so we're going to look at using the max return on capital as an entry criterion, similarly to using IV. We can receive higher premiums while committing a similar amount of capital. But how does that impact trade performance? So we got the max return on capital at entry level here, greater than 6 and less than 6. You look at your premium, $2 to $5. Meanwhile, your buying power is, amongst friends, is about the same, right? I mean, 4,800, 4,900 to 5,100. Look at your return on capital, 4.4% to almost 10%. Again, just kind of looking at the same thing about how we say, and always get a lot of pushback on it, especially in the beginning of Tasty, not so much now, as people have been around 15 years doing this, kind of realize, you don't run away from volatility. You embrace it in a way that you can, not ramp up, but use your capital in a efficient way. And we just showed you on the previous slides, you don't get the opportunity all the time. I mean,
it doesn't stay elevated super long, right? Outside of very, very volatile year 2008, 2020, doesn't stay that elevated very, very long.
That's right. You're 100% correct. Next slide, please. All right, so we're going to look at max return on capital at entry here. When we initiate trades, only when the potential max return on capital exceeded the historical median, we observed significantly higher P&L. I mean, I think that's stating the obvious there, with a comparable win rate. That's the kicker. Like, if you're getting dinged all the time and you're having high profits, but you're getting dinged all the time, that wouldn't make it worth it. You're looking at it here, it's with comparable win rates. If your win rate is basically the same and you're getting paid a lot more for the same risk, I mean, it would seem like the time to do something with implied volatility from a selling premium standpoint of view is when volatility is high. It's just another way of looking at what we've always said. However, when we examine the VIX levels, the higher IV explains why trades entered with a return on capital over 6 tend to yield a better performance. Again, we're looking at higher than and lower than 6%, 75% to 78%. I mean, I know 3 percentage points is statistically significant. In my world, it's about the same thing. Look at the average P&L. I think that's the most telling thing, right? I mean, you can opt for the $40 number or the $37 number, or you can opt for the over $100, $110 number with VIX levels at 25 versus 15, and you've got a VIX of 21 right now. So you're somewhere in the middle of there. So if you think you missed the boat, you really haven't. And if you're ramped up when you had the opportunity to, then you really got yourself paid. And I think over these last couple of days, you've been able to maximize some of that return. So good on you.
But I will say the one thing is like, you're looking at the difference between those average P&Ls, that the one thing that it's not saying that you have to sort of be steadfast is about exactly what we talked about today, the change in the market today. Look what we've seen already.
Yep.
We were down 30, almost 40 handles. Then we almost went back to unch. So that will happen at the times where VIX is 25.
Very good. Very good. Next one, please. We're going to look at from a long-term perspective. We found that the max return on capital of SPY strangles is almost always positively correlated with the VIX. And those little white areas there is when it's not correlated. You can see here that it really is correlated. And I think some of the non-correlated moves are really small moves in volatility when the market, either is up a couple of handles or down a couple of handles at the end of the day, indicating that they serve a similar function as trading entry signals 100%. And you know me, I always try to key on /VX for looking at big moves when the market might stop those big moves or start those big moves or end a big move. I think /VX, VIX, whatever you want to look at. I prefer /VX, but whatever one you look at really helps with the overall market.
That's a great chart.
Let's get to the correlations, and we'll get to the market here. Strangles entered when return on capital was above the historical median, show higher P&L while maintaining a similar win rate. I think that's the big takeaway of the whole story here. You don't have to work as hard and you make more money, right? I mean, that's what we're all looking for here. Now, you can put on strangles with elevated implied volatility, and volatility goes even higher, right?
Yep.
That's always the quandary here. You never catch the top and the bottom, but if you're consistent with your entry, I think you catch it most of the time, and I think that's the real takeaway here. ROC isn't a true driver. Elevated implied volatility boosts both return on capital and performance. Trades with return on capital above that 6% outperform, mainly because IV produces richer premium and more favorable conditions for premium sellers. You couple that with, BTFD. And you have nirvana, right? If you were inclined to do that, or you lean with a little bit of delta if you have the intestinal fortitude, where you sell a put that's a little bit closer in a product like SPY or IWM, you sell a call further out of the money. You actually be leaning delta neutral on a trade like that, or you can lean a little bit delta long if you want to, or you can take advantage of the skew. I mean, the world is your oyster at that point when you have high implied volatility. When we have VIX around 14, 15, how hard it is to find premium selling trades. It really, you start going into products that you don't want to live in for a long time. You're just kind of doing them because they don't have the greatest of markets, but they've got good implied volatility. So you're trying to make something happen.
Yeah, it's picking up pennies in front of a steamroller.
Yeah, for sure. All right, my friend, let's take a quick look at the market here, because we've had some action, but it's really been quick and few and far in between. Even the S&P is down 11, NASDAQ down 190, 185 right now. Russell continues to be the strongest of the group, up 22 here. That's almost a 1% move. Dow up 134. NASDAQ is really the canary in the coal mine right now, taking the market a little bit lower. You've got AMD down 19. It's really $2 off of its lows. AppLovin down 18. It's really just a few dollars off of its lows. SanDisk, which traded all the way up to 229, is now down to 211, just off of its highs. I mean, for all those who want to get in, you have the opportunity to get in now in SanDisk. Coin down $14. Can't get out of its own way. Nvidia down 11. trading $1 off of its lows. IVX 5-day change down 10%, a little surprising. Well, as it goes lower, volatility is going to go lower. I guess I shouldn't be too surprised by that. Oracle down $8 and change. You are a pig. Tesla down 8. MSTR down 6 with Bitcoin lower by 2,600, down to its lows for the day of 86.4 on the overall market. Oakley down $6. That's a big percentage move. 7% move in Oakley to 83.
Yeah, it's getting rocked.
Yeah, it's a big move. On the upside, you got Lilly. Lilly always seems to be one of the big market movers. It's an untradeable product. I wish it had, at least from the options standpoint, I wish it had better markets. Lilly up 22, better option markets, I should say. Reddit up 12. Meta catching a bid here. I think Meta being higher for a lot of the traders in Tasty Nation, trying to catch the correlated stock, one that has a correlation of 0.3 over the last year or so. Trying to catch a stock that's really gotten beaten up.
Go back to your watch list, please?
Go back to what?
The watch list?
Yeah, sure.
Go to S&P 500.
Sure.
And then...
SPY?
Oh, no, just go to the watch list there, and then, on the drop-down on the watch list. Right there, where watch list. Up to high, you're on high options volume?
Yes.
Yeah, just go to S&P 500.
Okay.
No, you know what I mean? Like on the arrow, the drop-down. High options volume up top, move up to the right. Yeah, right there. Let's go to, I just wanted to see, what is it? It's in the market indices, and then down at the bottom, market indices. Mm-hmm. Yeah. No, not that one. All market indices. Keep going. No, keep going. Right there. Down at the bottom, S&P 500.
Oh, you just want to see a list of the S&P 500 stocks.
And
sure.
Then,
you want to see what's driving the S&P lower?
Yeah, basically, I wanted to show. I just wanted to point out when you look at. I always. You could look by, I guess, dollar check.
Yeah, Nick likes to look at the Nasdaq.
I look at this all the time, and I look at. Oh, you have your setup differently. I guess I'm going to mess up your setup, but percentage change right now. You got to basically go down about 20 names before you even get to any one of the Mag 7s, which is Google.
Yes.
So I was just looking at what's up today. Mm-hmm. It's a lot of names I really don't recognize.
Sure.
Outside of RCL and CCL, we were talking about the cruise lines earlier today. Those are the ones that are up. But yeah, it's a
Meta and Google would be the two that I guess that would come out.
Outside of that, it is the very different day than what we're.
So it's the other 490 stocks.
Exactly
What you're saying. I got you.
Yeah, exactly.
Sorry, I didn't understand where you're going with there. I apologize.
It's
even the S&P's down 13, volatility up 30 cents. Definitely seems like a choppy-ish market here. We're gonna take a quick 90-second break and come back. We got more Tasty Live coming up. We got Quentin. Yes, and we've got Glenn. We'll be back in 90 seconds. Tasty Live. Trade Desk next.
Nice.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It goes like this.
Jamal, my friend, we are back, and before we get to our guests, let's take a look at the market. Even the S&P has just turned around, up $2.50. Cancel crash. Nasdaq down 130, still trying to bring us lower. Russell up 27, and the Dow up 233. Big move in the Russell, up 1 1/3%. Volatility up 10 cents to 20.05, and bonds up 14. Oil down $1.50. And gold up 31 mid-range for the day. But you know what? All that means nothing right now because we've got this man. My man Q, what's up?
Fellas, how's it
How's
going?
everything with you?
Great.
Yeah,
Q.
good,
There's Q.
man.
There we go.
Yeah.
I have to see which way the camera goes.
Yeah.
There you are.
Yeah. I love the intro every single time. I mean, it's great. It's great.
You know, we before we got the DDD, that's all I had was DDD when we were old school.
Yeah.
So that's what I went with. So
No, I love
it's
it.
stuck.
I don't know what's funnier, when he actually does the regular or when he just when he refers to it as the DDD.
DDD. That's right. That's right.
Love it. I love it.
No, it's good. It's good. You know, bringing me in live from the Tasty Trade headquarters in Chicago.
Yeah, and the trade desk, right?
Yeah. On the trade
Well,
desk.
see,
here
you guys didn't grow up at a time where you saw like Bugs Bunny. Like, did you watch Bugs Bunny?
No,
When I see
really
something like that, I think of the Bugs
You never watched Bugs Bunny?
You know what I'm saying?
What's
They
the
don't-
problem with these guys?
I know, dude. Like,
Right.
Bugs
Never
Bunny,
watched
Tom
Bugs
and
Bunny?
Jerry, things
I
like
I
that.
know what it is. Did I watch? Was that like one of my shows as a kid? No.
I'm saying.
What
Of
would
course
you,
I know it.
What would you watch?
I would say like SpongeBob.
He
was
watched like
my
Tiny
thing.
Toons.
Doug Funny? Did you watch Doug Funny?
No, I don't know. I don't even know what that is.
Oh, okay. All right. Well, all right.
Yeah,
You knew
I
what
would-
Doug Funny was.
I would watch a lot of SpongeBob, a lot of like Phineas and Ferb.
You admit this?
Was a
Go
great
ahead.
one.
Yeah.
What was the big one?
Listen.
Yeah, Phineas and Ferb. That was like one of the best. Phineas and Ferb. That was like a really good show.
Yeah.
Yeah,
I understand
that was
it
great.
because he's close
Those
to my
two
kid's age,
stoners
so I
or
get it.
something?
No.
Sounds like they would be, right?
Right. No. Phineas and Ferb. It was like they would like build things and like make their sister mad or whatever because like
Don't bother
she would try and
explaining.
catch
He's not
them.
gonna- he's not.
All right, he's not paying attention.
He's not gonna.
Backtracking now. He's back.
Never mind. Okay. But yeah, no, like Bugs Bunny, nothing like that, really.
Fairly Odd Parents. Did you watch that one?
Yes, Fairly
Yeah,
Odd
do it.
Parents. That was a
Do it.
big one.
He's close to my kids'
Yeah,
age, so I said,
yeah,
get it.
right, yeah. So yeah, you know all the shows. All right, well let's get some.
You can tell a lot by a person by the cartoons that they watch.
It's so true, though, isn't it?
Right?
See?
Yeah, well that's just my generation. You know, that's what my generation watched. You know, maybe that's why we're so messed up, right? Everyone's saying my generation.
iCarly. Did you watch iCarly?
Loved iCarly.
It was actually a really good show. I'm not gonna lie. I watched
Yeah, that was really good too.
Yeah.
Yeah, you know, like the whole like I'm so like over the whole generation thing. You know, people will be like, "Oh, the younger generation's messed up." Like, are you?
You're
telling
growing
me,
a beard now. I mean, you know.
But it's like, are you telling me your parents didn't think that about you? You know, don't act like you're all high and mighty as well. Your generation, you were our age, all right.
Listen, the sun set and rose out of my arse, according to my mother. Okay, and I could do no wrong. I was an only child. I mean,
me too. Me too.
Okay, so
I
you
can
know
also
how
do no
you know how it is. I mean, yeah. No, she did not think that. No, she thought I was perfect.
Yeah,
beautiful. Even if I was a little husky back in the day, you know what I mean? Even if I did get a little trouble from time to time, I was influenced by like Mark or somebody like that, my buddy. Like he was always getting in trouble, not me.
Hey, well, all is well that ends well.
All's well that ends well. Eventually, you grow up. It's the rite of passage. You
right, as long as
you
you
grew
can
up well,
survive
you did good.
You know. Yeah.
I've met your dad, so you grew up well. And I met your mom. Lovely woman.
Yeah, right.
Lovely
See,
woman.
to my mom, I could do no wrong. To my dad, I could only do wrong. You know, so I got like 50-50. Right.
How it goes.
He was just trying to protect you. That's all.
Yes,
Yeah.
That's
yeah. All right. Well, let's get to some business here.
Let's do it. Let's do it.
It's Tuesday, so we've got some demos. And so
awesome.
today we've got charting. The marketing team does a lot better of naming these things than I would. I would just call it, tasty trade charting or whatever. But we've got reading the signals, how traders use charting indicators. So we're going to go like how to use the charting platform on Tasty Trade, what different functions we use. We've got some really cool tips and tricks on the trade desk as well about how we use things. I remember at one of the live events, I had the chart pulled up for the continuous futures contract, and then Scott comes up to me. He's like, "Oh, like what's $/ES?" And I'm like, all right, we know a thing or two on the trade desk. Scott, you hired some good people. We're doing our job, right? And so you might know how to use the chart like for your functions that you use when trading, but if you want to see like some things that we use on the trade desk, expand your horizons a little bit. We've got reading the signals live today. And so we've got Big Ant-Man and then Luke as well. They'll be leading the demo. And so we take live questions as well. So if like we're going over a lot of stuff, but then you want to see something specific on the charts as well, like how to trade from charts. You can trade from charts on tastytrade. And so if you're into that, like scalping the futures from the charts, we see a lot of people do. And so, yeah, if you want to see like real life examples, we do that. We have no demo accounts. So when we do the demos, we're using live accounts. And so it's really cool to see us place those trades in real time, in real market. We're talking about like, what are we looking at when we're trading real time?
Very nice. Good job.
And then next Tuesday, I wanted to mention this as well. We've got visualize the trade using curve mode in the analysis tab. This is something we get questions on all the time.
I have questions on it because I don't use it. I mean, I don't listen. I don't use a lot of the features that we have on the platform that viewers bring up to me all the time. I didn't know that you could go on my accounts. Like viewers always ask, like, I want to know what I've done over the last week or the last month or what my net lick daily change is.
Yeah.
You can go in my accounts, get to the web side of it, and then you can see your last week's P&L, how you did, or the day, one day of the month after month, year after year. There's so many things on here that are just so powerful. And this one, forget about what the past did, about how you've done for the week. If you don't know if you've made money or lost money for the week, you got bigger problems. But you should. This is something that again, I think the retail customer loves the visualization. I caution them, these big tents that they make on butterflies and stuff like that are wonderful to look at, but don't expect it to hit. It's a good thing to know that if we get down to this level or up to this level, I've got this big tent, especially if you're in a 45-day time frame, daily time frame. Man, the curve mode on a daily SPX type trade, especially for people who got into a little bit of trouble, they've been buying and selling each side in a whippy market like we've had recently. This is paramount. I mean, this is something you should definitely be using and look at. I'm sorry to interrupt you.
Yeah, no, and then because we've also got like the at expiration view, which you can look at. That's where you see the big tents, right, that people will do. But then you can also use like the P&L theoretical line, which tells you what it should look like day to day based on where the price is.
Yep.
And then you could change the volatility and things like that. And so to know where your risk is, this is a really great tool. And also like I grew up using this platform and like using the curve analysis mode. So anytime I'm like thinking like Iron Condor, this is what I think in my head.
Sure.
Like the view analysis mode, just to get like the visual representation of how that works. And so yeah, super, super useful feature and very effective feature as well, just to know where your risks are throughout the different trades. And let's say like you got, more than 4 legs on one symbol. It really helps to visualize, what your profit and loss could be throughout the life of the trade, how you want to manage it and stuff like that.
And how you can even take it off too. You can take it one step further, right? Like, you want to look at a trade when you're taking it off, you don't want to increase your buying power. Maybe you're tight on buying power. You're in a smaller account. How you can lift, 2 or 4 legs and not use as much delta too. You might not want to change the delta in the overall position. So you want to take it off in slow delta increments too. So it's a powerful feature if you're not 100%, because when you hit confirm and send one time and you look at the trade, it shows you what your delta is, your buying power, and everything else like that. If you're not, looking at it that way or comfortable looking at it that way, looking at it here on the curve mode is awesome.
Yeah, I love the visualization from it. It's really, really good. And then also, I don't know if you know this about the curve mode, but you can actually forecast your Greeks as well and how the Greeks will change. You could forecast your delta, theta throughout the life of the trade.
Daily or just at expiration too, right? Like you can go 2-3 days. You can move volatility too. I try not to get too crazy with moving volatility up or down because I seem to want to curve fit my own position. I mean, obviously I want volatility, especially if it's spiked, what's going to happen in, if it goes down by 4 or 5 points on volatility, when it got up to 25, it comes back down to 20 where it is now. I didn't guess that we'd be at 67.20 on even the S&Ps. Maybe it was more like 66.60 or something like that. So it's hard to do that. But I love looking at expiration what your plot looks like.
Yeah, and also as you're learning to trade, it's just like a really easy way to visualize it rather than looking at all the numbers. So I love this feature on the tastytrade platform.
Yep.
And then, all right, let's get to some more business. Let's go over the top 20 symbols.
Sure.
Going through the system in their IVRs.
Love the top 20.
At number 1, we've got Nvidia, 27, Meta, 16, Google L, 39, AMD, 44, Tesla, 15, Oracle, 95, Apple, 14, TLT, 1, Google without the L, 40, Palantir, 18, Microsoft, 24, Amazon, 22, Broadcom, 53, iBit, 67, SoFi, 28, GLD, 47, CoreWeave, 24, TQQQ, 36, MSTR, 42, and Novo, 33.
Good job out of you. I have to say something. I guess a public service announcement. Everybody always asks, Friday being our day when we usually roll, it's going to be a lighter day, I would assume. I mean, you never know what's going to happen, but with the holiday coming, when do you roll from one month to the next? I actually was trying to roll some stuff in SPY while the market was going a little bit lower to catch a little bit of long delta. I missed it. But some of the things that I look for is the monthly implied volatility between the two. December and January, basically the same implied volatility. So from a volatility standpoint, since we were just talking about that a moment ago with the curve mode, you're not giving up anything going from December to Jan. Now, if you move the same strikes, obviously the shorter dated December options are going to have a higher theta decay. You're going to get more premium by going into January over a longer period of time. So you do have that that kind of trade-off between the two, but you're not getting penalized for volatility. So if you wanted to roll a little bit earlier because you think the market's a little bit more liquid right now, with this volatility environment you have between December and January, it seems like it's a fair roll if you want to reduce or increase delta if you're going up or down.
That's a great mention as well, yeah, because Friday usually the liquidity lightens up a good bit. Not so much in like the ETFs, but like in the single names. There's just not as much activity.
Right. Yep. Good job. All right, you got work to do. I mean,
thank
it's
you.
enough 15-minute break for you.
Thanks,
who is our next victim? Newly coiffed.
He does got a cut, doesn't he?
Glenn, how are you, my man? Oh, look at you. Tight. You're looking beautiful. You handsome little devil, you.
Feeling light and dangerous.
You should. Light and dangerous.
Hey, listen, I got to mention this.
In the loafers or weight-wise?
I got to mention this because, again, Northwestern played this past weekend, but I got to mention this because these are my boys, man. Obviously, Northwestern are your boys. You went to Northwestern. My guy, Justin Mullins, who's on the team, played against another kid I know.
Oh, no way. For South Carolina?
Sam Lewis, who plays for Virginia. So two kids I know were playing D1 basketball against each other last Friday night. It was actually pretty awesome.
Fantastic. Cats did not pull that one out.
They did not. That's the other reason I'm mentioning it, just to make fun of you. But
that's
but it was awesome, man, to see two kids I helped coach, two kids I've known forever, played together. It was kind of fun, man.
That's great, man.
It was incredible.
It's fun to watch them like that, yeah.
It was really incredible.
Justin Mullins playing better this year, I think. Looking good out there.
You guys get that kid
They've got a
Paige,
good team.
though. Paige looks pretty good.
He looks really good. I'm actually going, me and my mother, Thanksgiving Day.
Nice.
Going to the United Center, seeing a doubleheader. Grew up big Duke basketball fans. Duke's playing. They're playing Arkansas. And after that, we got Northwestern playing Oklahoma State.
Awesome. That's a great day, man.
I would imagine Coach is going to sit around and watch Duke play since he went to Duke.
I would hope so.
I would imagine he is. That's awesome.
That's awesome.
So, yeah.
Dude, they are doing a lot more college basketball being in use. It's really interesting. It's really taking off.
Yep.
Which is weird to say about college basketball.
Love it. I grew up ACC country, and that was...
Yes, you did.
ACC.
As did I.
Yeah. The tournament rolls around in March.
Oh, man.
In school, they'd wheel out the television.
Yeah.
Games would just be on all day.
Yeah.
Fantastic.
Like high school and middle school.
Yeah.
You pull the TV out. You watching games.
You didn't have like an iPad or something like that of your own?
No iPad, but...
None needed.
Towards high school, we'd have, on lucky days, we'd have the Chrome cart, the cart of laptops, and we'd all be doing work.
On lucky days?
Yeah. It wasn't a very resourced school. It's not like we all had our own laptops. Once a month, our teacher got the laptop cart. So
Sweet.
Well, things have changed. All kids have iPads now.
Yep.
Yeah, they do,
My
man.
kids had iPads in second grade.
Yeah, it is crazy.
That is nuts.
They're almost disposable. I mean,
Yeah.
you know.
No, he's right. I mean, it's.
I mean,
money bags over here. Disposable.
no, come on. I don't mean it. I don't mean it
take
that
one.
way. I meant.
If you're asking, Tony, I'll graciously accept an iPad.
Oh, you're so in trouble.
I meant
You're
for
in
the
trouble.
schools. Everybody knows how to work one. Everybody knows how to use one. You can change the curriculum pretty easily on them.
Yeah.
I hear you. I agree.
Why don't you get to some
Wonderful.
FX products before I got you back in my hand?
All right. I mean, really exciting week here. It's a holiday week for U.S. markets, but FX markets open all week
Never
long.
sleep.
All week long.
Yeah.
It's a Lionel Richie song, right?
It is.
Close.
Yeah. Nice job.
You are deep, man. You are deep.
Nice
Yeah,
knowing that.
still water runs real deep over there.
Yeah.
As some are saying. But this morning we've got a U.S. dollar collapse. Not to any ridiculous magnitude, but some consistent dollar selling early this morning on the heels of some soft U.S. data. But it's from September. Who really cares about that? We had some.
Obviously, the market does a little bit. I mean, the yen caught a bid, the euro caught a little bit of a bid, the pound caught a little bit of a bid.
I think more.
I mean, nothing helps the euro, and this helped the euro a little bit this last couple of days.
Yeah, I mean, European currencies getting, perhaps a little bigger boost on the heels of this Ukraine news. Some fear, uncertainty alleviating in that area, hopefully. But we did have some Fed speakers early this morning, too, coming out dovish, which has spurred the rate cut odds, if you're looking at the CME Fed Watch tool, all the way up to 80-something%. Let's see.
I haven't.
83%.
Thank you for pointing that out. I haven't remembered the flip-flopping of rate cut change so quickly.
Yeah. Last week was ridiculous.
It is actually almost ridiculous.
Yeah.
I almost kind of question it. It was so quick how it went from around, 75% chance that there's going to be a cut, and the Fed Watch tool has been, when it's over 60-ish%, I think it's
65, yeah.
65%. It's almost 100% correct, right? When it has never been wrong, I guess, to date so far. To 75 to 25% that they're going to recover, like completely flip flop in like a 48-hour time frame.
No, we had multiple swings back and forth of around 20% difference, which I haven't seen. And what's been really interesting to me over the past few weeks with these swings that we haven't seen before is kind of the hurdles, like you said, once we get over that 65 threshold. And you can see very clearly this week, last week we ended around 70-30, which to your statistic should be very convincing. But given those swings, it wasn't all convincing, especially in dollar markets. Today, getting over that 82 or that 80% threshold, I think really did spur some momentum there. Especially you have Fed speakers saying, we won't have that much data. The data we are getting does speak to the possibility of rate cuts. So a lot of that getting priced into the spot dollar market this morning. Weakness across the board. So if you're looking at what pairs are interesting, continuing dollar weakness looks interesting against the Australian dollar. That remains pinned near its 3-month lows, under 65 cents. New Zealand dollar comes into play. That's a fun pair to watch. We have a Bank of New Zealand interest rate decision tonight. So some one-off event risk there. If you're playing that overnight. But what's really in focus for me and a possible place to get long the U.S. dollar if you're trading these ranges, when you're looking at European currencies, euro, pound, Swiss franc, pound and the euro have a lot of more historic room to slide. Here with the euro still below 116. I mean, it's up, let's see, 55 pips already today. It's really going this morning. But still not at 116. But that pound is now nearing 132 and is already just about at its 1-month highs, that pound dollar. And this one's really interesting to me over the next 24 hours because we have this highly anticipated UK budget announcement coming out tomorrow. I'm not going to pretend to know that I can discern all the details there. But what we do know is especially European and UK traders are really juicing those pound options. Not so much if you check the tastytrade futures. We're not getting a super high IV rank for those pound futures here in the US, but a lot of hedging going on, anticipating big swings in that pound against the euro. Here at TastyFX, you can trade that pair, pound euro, directly. But that one, a pretty public opinion for the pound to slide. A lot of analysts saying, no matter what the number is, it can't be good for the pound, given their
pound catching a bid the last 4 days, kind of.
Exactly, and so now it starts to get interesting. When I was reading those, a lot of public commentary are like, okay, this is all priced in. But now we have a lot stronger pound coming into this decision than we would have expected around 1.30. Now we're near 132. So a lot to look at here if you're playing the options market on those options on futures. The announcement will be pre-market, so an opportunity to get into the spot market to play around, get directional there if you're up and trading. So that's what I'm looking at today.
Currency's been hot, man. I mean,
Yeah.
you look at most of the major currencies today, most of them are kind of bid. Canadian dollar can't necessarily find a bid, but the ones that I've been trading in TastyFX, and I think you know this, we talked about it when you're on OTCL. Mostly what I've done in here has gone short dollar. I am long dollar in the regular account, and so I just wanted to do something a little bit different. You mentioned the pound dollar. That is up today. The yen, holy cow. We talked about the yen moves. That's actually finally working out for me a little bit because most of the stuff that I have is yen is on the denominator. So glad to see the yen kind of bouncing back a little bit here today. But
at a big inflection point here in the spot market there, hovering around 156. We pressed a couple days above 157. Never hit that 158. Doesn't look like the Bank of Japan will have to intervene at the current moment, but we're still historically very high in that pair, very weak for the Japanese yen across the board. So, from a price extreme standpoint, a lot of dollar pairs interesting. From a data standpoint, now standing 15 days ahead of that Fed meeting. Looks like that move is pretty priced in, but can't discount, a lot of back and forth in those odds.
You know what? I can listen to you speak all day. You're really good. Your parents should be very proud of you.
Thank you very much.
You're welcome. You're welcome. I'm just trying to set you up for the weekend,
I appreciate that.
I'm going to take a quick 90-second break and come back. I'm a guy's guy. I'm going to take it back for a 90-second break and come back. We got Liz and TP. You're not going to want to miss this right after this. We'll be back in 90 seconds.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Hello, everybody, and welcome to the Thanksgiving Eve edition, because we don't have a show tomorrow, of TP and VLD. How you doing, TP? Oh no, John.
I'm good, thank you. Getting
how
ready
are you
for
doing?
some turkey and gravy.
What do you do for Thanksgiving, TP? Inquiring minds want to know.
Well, yeah, I have my kids over. They're coming home from, downtown Austin. And so, yeah, we'll have a little dinner for everybody, the four of us, and maybe have some neighbors over, friends, that sort of thing over later in the day.
Oh, that's nice. That's very nice. I like it. It's fun when all the kids come home. Now, you have one in college and one out of college, right?
Right. One's working, one's actually, has a job, and the other we're still paying for in college. But so one of the things we were struggling with, or I personally was struggling with, was whether to get the Costco, the Serrano ham, the whole leg. Have you seen those at Costco?
It's $100, right?
Yeah, like
Yes.
100 or 119 or whatever it is. The problem is it's like 15 pounds. And that's a little bit, as I say, a little bit beyond the pay grade. I'm not sure if we can handle a 15-pound ham.
The four of
in
you?
addition to the turkeys.
Yes, I was going to say 4 people, 15-pound ham. I don't know. That's a lot. I was laughing as we were coming in, TP, because in the chat, I need you to confirm or deny a story that was said about you in the chat. Okay?
Oh, wait a second. Let me, in my text or on Teams here?
No. I'm going to say the story and you tell me if it's true or not. Okay?
Oh, okay.
So in the chat, and you can guess who wrote this, TP will do whatever he wants. One time, there were 8 of us at dinner, and he ordered 6 pieces of chocolate cake, and each cake was a quarter of the cake. Each piece was a quarter of the cake. True or false?
That's true. Yeah.
And who do you think it was that wrote that?
That's Frankie Walsh.
That's correct. That's correct.
Because Frank and I used to go out to do the shows like the Money Show, Trader Expo, that sort of thing. And after 12 plus hours doing the show, we stagger over to some local, to one of the restaurants at the resort or hotel or whatever it was. So Frank and I have a lot of background eating out together.
I don't know why I was just chuckling at that. I love Frankie. He's the best, isn't he?
He's the glue that holds the place together. So what's interesting today, Liz, is we have a reversal now. Let me check the SPOOs.
We'll jump in the platform.
$1.35.
So everybody let's jump in the platform so we can see what TP's talking about here. So if you take a look at this, SPOOs did reverse. Want to take a look at the chart? Here you go. Now I'll let you talk. Go ahead.
Yeah, so because I sell, and we can talk about our SPX strategies, because I think a lot of our viewers are kind of doing, especially the Liz and Jenny show viewers, which are a little bit, kind of advanced, selling premium every day in the 0 DTE SPXs. And I sold an Iron Condor. And when the S&Ps around 9 o'clock, when the SPOOs are unchanged, basically, then a few minutes ago, right before I logged in to do the show, they were up about 20. Yeah. And I was like, okay, I was taking some heat in my iron. Okay, that's fine. I can deal with it. But now they're back to basically unchanged. So I think that's very interesting.
Did your Iron Condor come off? Do you mind sharing strikes and if your Iron Condor came off? Because I think I like it. Okay, so what do you think? What were your strikes?
I did the 85 to, all right, let me do the fulls. So 65, 85 was the long.
Okay. And then your short, it was your long, and then your short. Are you frozen, TP?
66 10 was the short. I did
66.10. John.
Yeah, they coming back.
Okay, you broke up there for
again.
Yeah, you kind of froze for 1 second, so that's okay.
Yeah, the squirrels are chewing on the power lines. So I did okay, let's go over this again. So in the zero DTEs, I bought the 65.85 put.
65? No, 66.85.
No, I went way out. 65.85.
65.85. So you in the zero DTE, 65.
Yeah, 65.85. Sold the 66.10.
Oh, okay. So sold 66.10. Okay.
Yeah, sold the 745 call, 67.45 call.
67.45. Okay.
And then bought the 770, the 67.70.
Okay.
So
Are you
25
out
points. Not yet. I sold it at 240. It's trading at about 210 right now. So I entered in I put an order in just a regular day order to buy it back for $1.20, which would make a 50% profit and here's why I do it. Yes, I'm staring at the market, but as I'm doing the show, talking to you, I want to make sure I don't miss it because a couple days ago, it was Friday, I put the exact basic same kind of trade on. Took about $2.40, $2.50 credit in the morning. Mid-morning or closer to noon, I bought it back for about $1.20, and it just printed there. Basically, it was there for a second. I got filled, and then the market collapsed, and it would have turned. And I think I texted you, Liz, saying that I dodged that bullet completely.
Yeah.
So getting out of this stuff and having resting orders in there. I don't typically have a lot of resting orders in my longer term positions because I like to monitor them and just kind of see what's going on. But in this SPX stuff, the zero DTEs, there's no real advanced strategy. Sell premium, buy it back.
Correct, because it can be there for a blip, right? An absolute blip. And I'm glad you said that. And that was I went to this and I tried to zoom in a little bit because that day Friday you're talking about was this big day. I mean, and that's a massive move. And you actually got out. So that's why I was going to say is these SPX zero DTEs have been really kind of cool to look at because what happened on this day, TP, and you didn't have any risk through the weekend. So it doesn't matter. Once it's closed, it's closed. You get in, you get out.
And yes, the caveat is they all count as day trades. So if I, sell or trade 4 strikes in an iron condor and buy it back, that's 4 day trades. So you need at least, even if you can do a 1 lot in a smaller account, you still need over $25,000 to escape the pattern day trading rule, which I hate.
But wait, TV, let me show you this because I have figured out a workaround and actually.
Or am I doing that wrong?
No, you're right. You're right. The Polish Warrior has inspired me, and I've been doing something in my son's account, and he does not have $25,000. Just a little FYI. But I will give you my strikes. So I'm actually playing fair. Hold on, give me 2 seconds. I just gotta look at my other computer. So, and I did it really early. I think the SPOOs were actually down. So my short strike is the 6,700. So I wound up when this was the at the monies, when 6,700 was the at the monies. I sold a $10 wide and I sold it for, hold on, I'll check my real prices. I sold a $10 wide for $3.70. Okay. Yep. And then as soon as I got filled, I immediately went in and put the butterfly off order in for $2.70. So, meaning that I would then have this complete trade on that I can just let go into the wind because I've locked in 100 with a chance of making 1,000.
And here's a little bit of inside baseball, and I think it's still true.
Well, and you give up a little profit. Hold on, you give up a little profit to do this, but it avoids the pattern day trading rule.
Right. And the reason for that, folks, is that even if the SPX goes right to your center strike and Liz and the Polish Warrior hit a home run on this butterfly, because the SPX is cash settled, that in the money put will just turn into cash. It doesn't count as a trade. So just letting this stuff go, and even if it turns into a profitable trade, and you're saying, "Oh, geez, I made $1,000 on one of these butterflies," it doesn't count as a trade if you don't actually put in a sell order.
Yes.
Right?
Yes. So, I mean, honestly, the problem is I'm watching it now. So that trade, I took I collected $100. I locked in 100. And right now I could sell it for another 100, but I can't. Now I've got to let it go. As long as I've locked in a profit in his small account, I have to let it go.
And this is something that I like the SPX. I think the spiders, if you're arguing for, let's say, day trading, and you say, well, I don't have a big account, maybe I'll trade the SPY. I think it's harder to do in the SPY because it takes a little bit, because of the narrow strikes, it takes a little bit longer for the trades to work.
But you also can't let this go. You have to close this.
That's exactly right. Takes a while, and it also turns into SPY shares.
Yes.
Okay. So that's why it's less attractive. Yes, you can also do this in ES options, and they don't have day trading rules in futures options. But again, a little bit harder to trade. A little bit you've got to get some experience filling orders in this stuff. I love ES options, but a little bit tougher to trade sometimes. You have to know how much you give up, and the tick size is smaller. Okay, so again, it's not necessarily. I prefer the SPX for my own trading.
And I wanted to show, I was going to compare apples to apples with ES versus SPX. So TP, I changed just so you can see what I was doing while you were talking. I changed this column to volume and this column to open interest. And I'm in the ES options, just the at the monies. I mean, I can clear this out, but just kind of looking at the volume and the open interest in the ES. And then I'm going to do it versus SPX. Going to the 0 DTE, so it's the same thing. Look at the volume in the SPX.
It's 5 times bigger.
Yeah.
5 to 6 times bigger.
Yeah, it's kind of crazy, right?
Well, it is and it isn't. Because what you and Jenny do every single day, talking about the SPX 0 DTEs, I think that's where the growth in a lot of these options are coming from. You guys, no, seriously, Liz.
This is why I love you, TP. Keep smooth talker.
But look, hey, it's good for business.
It is. No, I agree.
And you guys do a great job, I think. And again, I don't listen to or read a lot of financial media. I just don't. But you guys are doing that every single day. And whether you do wide iron condors like I do, short put spreads like you do, turning things into butterflies like the Polish warrior does, it all adds to that open interest. I think you guys are part of the reason why.
Yeah, I mean, what I find fascinating here too is, and Frank the Great was helping us discover this. So the open interest is the ones that are, they're open and closed, and this is what the open interest is. The volume in these 0 DTEs are what's traded today. So if you look at, just take this 6,700 line, just the out of the money puts. So 22,000 shares have traded today with only 2,000 open interest, meaning that they're getting in today, which is insane.
And Liz, look at some of the further out of the money puts. The 6650s, 29,000 contracts.
Yeah, that's a big number.
There's size going on in these 0 DTEs, and this is, I think, one of the biggest changes I've seen in the industry over the past 30 years. Is everybody loves, and we can talk about, sure, the optimal days, 45 to 60, blah blah blah, roll close or adjusted 21 days, all that stuff. People love the 0 DTEs because you get paid today, and it's like payday. What do they call it? Payday checks, or what are they? Check cashing? Payday loans. It's like a payday loan. You want the money now, and so I love the 0 DTEs. So I would like to see them expanded into everything.
Oh, I would too. But I actually like the 0 DTE cash settled, because I think that's the most fascinating to me, because you really don't have to do anything with them with the cash settled 0DTEs. But you know what's crazy, TP? You were on the trading floor for years and years and years, and we were options traders, and and if it was bond options, whatever, there was expirations. And I love that you used the payday loan analogy, because you made I'm gonna extrapolate, but maybe you can tell me if I'm right. Didn't you make most of your money on expiration?
Yeah. So it's the reason that happened was it was so busy. So, well, a couple of things. When I was trading on the floor at the Board of Trade, it's just the expirations and the bonds and note options got so busy around their expirations. It's just kind of the nature of the activity. Because in those days, 27, 8, a long time ago, those are a lot of institutions, not so much retail orders. There were retail trades, but a lot of it was, funds coming in and pension funds and all that stuff, or bigger traders getting in and out of stuff, closing positions, rolling positions at expiration. But so, yeah, the money from the buying and selling, the market making activity, that also that made a lot of money. As I moved off the floor, also, a lot of the trades I was doing, especially because I was managing a futures fund, a lot of the P&L sort of happened in the last few days. So I'd put on a trade, whether maybe a week to go, 2 weeks, a month, or whatever it was, they would get paid in a couple of days. So it's, yeah, to that point, the big spikes in P&L would happen. It wasn't like earning interest where a little bit every day, a little bit every day, a little bit every day. It's more for me like that now because I have so many different positions on, generating a lot of theta.
Yeah.
But some of the biggest P&Ls come when I nail these 0DTEs, and I'll have a spike in my P&L.
Yeah, well, and the 0DTEs really. So I mean, like I said, I had actually some other plans for our show, so we'll get to those in a minute. But these 0DTEs really do kind of you hit the nail on the head with theta. So I'm just going to show something real quick. I'm just going to do a wide iron condor.
Mm-hmm.
Look at the theta you're getting. If you want to look at theta per day, or look at this. You're getting 600 theta. It's going to skew all of your numbers when you're trading 0DTEs.
Liz, you're doing a one lot.
Yeah.
It's like that's
it's got to have that much, because at the end of the day, and I love you touched on this before, because this is a 50 delta, right? Because it's the at the monies, but those deltas, when they're very, very close, we talked about this the other week, those aren't as accurate, those deltas. But all of this has to come out by the end of the day. So all of it is your theta.
Yeah. And so we talked about this on Friday, the gamma and stuff like that, making the delta unstable. I don't really look at the Greeks of these trades beyond the theta. And the theta for me is just, okay, what can I collect today? For me, these aren't delta trades. They're not vague. There's nothing about that, because all I know, Liz, is if I sell that put spread, the SPX has to be above, 67.10 or 67.05.
Yes.
That's all. That's it. And there's no hedging. There's no adjusting. Excuse me. There's no hedging or adjusting beyond the Polish warrior butterflying it off. Strategy. Yes. That I would do too, but it's not like, gee, I'm going to roll it, or I'm going to adjust it, or I'm going to add to it, or I'm going to hedge it. That's not what I'm doing.
No, because it's kind of set it and forget it, like the Ron Papel. Okay, breaking news. I think we both got texted this. Oh, no. He said it's Frank the Great texts us during the show because he knows I'm not capable of watching everything at the same time. But he says, and I don't know if you know this or not, TP, but he's always keeping me in line. On December 8th, there's going to be a MAG 10 cash settled. They're coming up with at the SIBO, they're coming up with a MAG 10 cash settled. So it's your MAG 7 plus, I think, like PLTR, a couple other things, and it's going to be rotating, and it's going to be cash settled. So that launches on December 8th, which I'm pretty excited about.
Yes. And again, that's something that we have spearheaded over the past couple of years, is freeing up the cash settled limit. So in other words, the SPX is cash settled, right? The OEX is cash settled. Now, I don't know if anybody trades the OEX much anymore.
Not even type in the OEX. Is there options for the OEX? Hold on, I gotta get some.
See, that used to be the product when I
This was the product.
All right. So yeah, we don't need to go into the decades, but yeah, the OEX is, yeah, the markets are.
Oh, shame on these market makers.
You can't trade it.
Shame.
It's dead. And Liz, look at the volume and open interest. The OEX is dead.
It's dead.
It just shows you that you can never sleep with this stuff. 30 years ago, if you thought, I'm going to trade the OEX for the rest of my life, sorry, no.
That
didn't work out. Because that was the product in like 1990.
Yeah.
1995 even. So the whole cash settled thing, that is a regulatory and legal issue. And I am glad to see that that's broken through. Because there are a couple of things I ask for every year for Christmas, that every option be cash settled, that every option, including futures options, go to penny ticks, and for every contract multiplier to be 100. That's it. That's all I ask.
This is my takeaway from this episode. Every year for Christmas, you ask for 3 things. I need you to say them again because I love it. The way you said them too. For every option to be cash settled. It sounds like the beginning of a good Christmas song.
Every option to be cash settled. What is it? What's that, Mariah? So,
all I want for Christmas.
Oh God, they've started, and I'm old. I get it. I don't need to be reminded, oh, TP, you're just old. I get it.
You're not.
Everybody.
You're young. And another thing that we got to ask before you say your next sentence, because Frank the Great, I hope you are listening to this right now. TP, are you a redhead?
No, I'm not.
Thank you. I swear to God, I fight your battle on a daily basis. This is my plight in life, is to fight your battle that you are not a redhead, because Frank and Jenny claim that you're a redhead.
So what I don't want to do, and this is why I feel like what's one of those countries that everybody fights, where the major powers fight over, like, I don't know, like whatever. I don't want to come between you and Jenny on this. You guys have been friends forever.
Oh, you're already between us on this. And Frank jumped in on Jenny's side, and
jeez. Oh no. And it's just so, like, I don't want 2026 to be the great schism between Liz and Jenny.
Yeah, well,
I don't want that to happen.
The great redhead debate, because
maybe I should, you know what, Liz, maybe I should go blonde.
There you go. There you go.
So what, I forget what we were talking. Yeah. So anyway, the other thing I hate is now they're already playing the Christmas songs on Sirius, and I hate that.
Oh,
I hate it.
I love it. I do. I already have my Christmas decorations up. I have a Christmas brunch scheduled at my house for the day after Thanksgiving.
You're a holiday person.
I got it all up already. I know.
I get it. No, I get it.
I'm guilty as charged.
I'm not passing judgment. I'm not saying it's bad. It's just, for me, being old, and remember, I grew up with one radio station. Seriously.
WXRP?
No.
KRP?
No. Back in Fitchburg, it was WFGL. And it was WFGL. And then, yeah, you want to know another aging thing?
I feel like you'd be a good radio announcer. You have like a very soothing voice.
Thank you, Liz.
Yeah.
Thank you, Liz. My wife finds it aggravating sometimes when I, argue with her. But anyway, I don't know. She always wins. But anyway, no, what I miss most, being an old kind of rock music guy, is growing up in the 70s and 80s. There were 4 distinct rock stations coming out of Boston and Worcester: WBCN, WAAF, there were 4 of them, and each one was a little bit different. So throughout the day, as I was listening to the radio, I could tune into different ones. Now, Liz, everything sounds the same.
Yeah.
I'm sorry.
Yeah, I know.
I'm sorry to bring the show down. I don't want to.
You're really bringing it down, TB.
I'm sorry. So here's another thing that I think is very interesting that's happening today, or in the past couple of days. We saw the Fed funds rate, the probability of a rate cut, double. Early last week, it was like 92%. And then later in the week, when there was a little bit of skittishness with the Fed, and a little bit, maybe we shouldn't, maybe we should, it dropped down to 42% for the DECE FOMC meeting, which is coming around like in mid-December. Now it's back up to like 80. It was 84% yesterday. It was 82% this morning. So we're back into rate cut mode. And that's pushed the dollar down a little bit. And so I was short some put spreads in the euro, and that's saving my position there.
That's 60, right? 60? It's the euro, I think. Yeah.
Yeah, I'm in the D's fives. I'm in the short term ones with the in the Z's right there. I'm short the 1.155, so the 55s. Yeah, I was short the 55s and long the 50s. Yeah, so that one. So I'm short that one. That was losing some money. Now it's up a little bit of money. And I'm just going to let that go for now. But the other point is the retail sector now is bouncing back, which I thought was interesting. So if you look at some of the big retail stocks,
does it work in XRT is the retail, right?
Yeah, that's the ETF, and that's up 4.5%. The options
look
stink.
at that, yeah.
Look at that. The options in XRT stink. So the markets are wide. I didn't even try to get filled in.
That's ridiculous for these market measures. I mean, and I just went to the one that has some volume. There's 1,000 and open interest, and it's 125 at 164. Shame on you, market makers.
No, those are so bloody wide. You can't trade XRT. I would look at Walmart. Yeah, Walmart, obviously. And I might write about this in the cherry picks this afternoon.
Ooh, I like it.
Because it's.
Wait, are we going to get your cherry picks this afternoon?
Yeah, I hope so.
I'm on last call. I'm on last call with the bat, so we'll talk about your cherry picks if you send me a.
I will give you a hat tip. I always like to give, because I gave you and Ryan Grace little tips last week because we was talking about crypto. Because you and I had talked about crypto early in the day.
Yes.
So Walmart, Amazon is up a little bit today. And
do you think of Amazon as a retailer, or do you think of it as a tech company?
Well, I think as we head into the holiday season, it's more of a retail company. Yes, the AWS, the Amazon Web Services, and the whole AI thing that it created with, they got some government contract, that news came out. Yeah, it's a massive tech company. But I think for a lot of institutions like pension funds, insurance companies, where they build mutual funds that build portfolios, Amazon is one of the mega caps in the SPX. You have to buy it. In other words, it's part of what you have to do as a fund manager.
I'm not going to put you on the spot, but how much of Amazon is? Do you know what percentage of Amazon is the SP?
No, it's they're all small. I mean, it's fairly. It's certainly one of the top 10. Whatever the numbers are, they're like 0.25% or whatever the weightings are.
Yeah, so you're right. The retailers and even the small retailers. Somebody was talking about ANF today. It's up 30% today.
Yeah,
Abercrombie and Fitch.
Yeah. Do those have options in them? I know they have options. So here's the thing. When I talk to Liz, when I say does something have options in it, what I really mean are the options tradable. Yes, I can see they have options in it.
Yeah.
And ANF looks a little sketchy.
Well, because it's up $20 today. You'll see this. Take a look at these. Some of these were just added. You can tell they just had $5 wide strikes for a while.
Yep.
And so they just added all these single point strikes in. So you kind of got to look here. I mean, the dollar at 115 is not that bad, but I still don't think this is tradable.
I don't think so either. And if you look at what's Macy's doing right now, what's M doing?
Macy's
coming out.
I mean, that's up 7%. Earnings are December 3rd. I mean, so all retailers are kind of getting a lift.
The markets are a little bit tighter here. What's nice about Macy's is 55% IV rank. You've got to take risk through earnings. But for a $21.50 stock, it means the buying power requirements for, let's say, a short put, if you want to try a short put in something, they're not huge.
I mean, that's a great return on capital. And I got to give Jenny a lot of credit for this because Jenny always says, we always say, and I'm going to ask you this, I'm going to give you this question, and then I'll tell you what she says. If you had to start right now and give one piece of advice to somebody who doesn't know anything about options, what option would you start? What would you start them with in the Tasty Trade mechanics of we're going to start trading? What would be your first trade you teach them?
I would start with short put spreads in stocks like Netflix or Tesla or something like that.
So you'd go, they have a small account to find risk. You'd say, I'm just grabbing things. I'm not putting words in your mouth. Just kind of something to this effect where you want to get like a third of the width and.
Yeah. Keep them tight. Keep it even tighter. I would do a 5 points thing, something like that.
Okay. And that's good because then they can kind of see how when you're short one, one's long one, how it actually, you can see what happens, how it actually plays out.
And these things move. And just like Liz, you pointed out and I would take this back to like one of the closer expirations. If you drop that back to like the D's 26, the with 31 days, if you pull that back into there, let's check.
I will say, TP, you do things, and I do things just because we know this. A lot of times, I would tell people to stick with the regular monthly expirations because they're going to be more liquid. You don't have to.
Let's do that.
Because no, but you and I both know that Tesla is liquid enough that you can go into the D's 26.
Yeah, I mean it's yeah, and I don't like to do shorthand. And you and I, because we talk so much and we've traded so long, we fall into shorthand a little bit. And so I like it when you slow us down a little bit and point out that, yeah, these are weekly options, not always tradable. But so if you go back, stay in Tesla for a second, and then open up one of them, create a short put spread in there. Any put spread, look at the theta I'm getting. So $1.49, it's not SPX size, because it's a $400 product as opposed to a $6,600 product. But the point is, you're going to get paid. And I think new traders need the proof of concept.
Yeah.
They need to see they can make money.
I actually love this question. I think this is a good place to start, and for a couple things. So somebody would be risking, if you're a new trader, your max loss is going to be $351. You're going to make your max profit is $148. You're not going to get that because you want to take it off before then, but that's a reasonable amount of risk to take. But and I do think that's a good starting point. But I don't know if I'm insane. I don't know if I am insane when I say this, but I said, and this is how I started my kids, and I'm gonna start my daughter this way. She's gonna look at the same thing. I think it's this. I think it's SPX because no matter what happens, they do it overnight and then they can see it because kids and people are so instant gratification. Instead of getting $1 a day in theta, you're gonna get 133.
Yeah. So so what you and I are talking about, the difference between Tesla and SPX is a matter of degree. So, Liz, you're looking at something that I had mentioned this before. This is a $6,600 product. It's a big product. Tesla is a big volatile stock.
Yes.
Why the heck would you put a brand new trader in these big volatile products? The reason is that using defined risk trades, which nobody else starts with. Everybody else starts with maybe a covered call, maybe a long call, or covered, all these basic sort of option 101 strategies that I think are not appropriate. So using verticals for me are the fundamental first strategy. Trading in big products where you get enough credit to show a profit in these things. And like you were saying, Liz, you're going to let these zero DTEs, you're going to let them, you're going to take them off today. Or you do one with 31 days and you take it off in a few days you don't even have to do a 50% profit. Take it off for a $20 profit, for a $30 profit.
Yes.
Book the profit and say, hey, I did it. I made a couple of bucks on a trade.
And I wanted to go apples to apples with this scenario because we were talking about how Tesla is big and Tesla is liquid. And I think liquidity is key. So then we went into Tesla's 31-day options. So I just went into SPX, and SPX is, $66,700. So definitely bigger than Tesla. And you can still create a similar trade where you're risking the exact same amount if you define your risk.
Yeah, and for some reason, don't look too closely at that theta. The theta is screwed up because I think
because it's the wide markets because it's 60-cent credit at two. Is it too wide of markets?
Yeah, it's the wide market screwing up the implied volatilities, and that's what's screwing it up. That short put spread does not have negative theta. Okay, yeah. It doesn't. So that's something you got to understand this stuff. And because we've been doing this so long, I am confident in looking at a number to say that's right, that's wrong. And that is obviously not wrong. I mean, if you go out to the regular DCs and not the weeklies, it's probably, you can probably get positive theta on those.
Yeah.
No, still screwed up. It's still screwed up. I have to talk to the dev team about that because that doesn't look good. I don't like that.
I wonder if it is the wide markets, but it shouldn't be like that. But it's so funny because you and I know certain things when we know them. That's got theta, and your theta per day is going to be exactly the same if when we were in Tesla and we had the exact same amount and we were getting a $5 wide with very similar credits, the theta would be exactly the same as it was in Tesla.
I think it could be the interest rates that are embedded in the platform. Anyway, aside from that, did you have because we go off the rails?
I did have an agenda.
Liz, do you have an agenda?
You know what I love? I love working with you, T. You actually said something that was in my agenda, and we didn't even talk about this. So I was on the morning show with Tony yesterday, and I'm going to show some people something. We'll get to Twitter too, but I'm gonna blow by Twitter for a second. But I'm gonna. So yesterday I was on the morning show with Tony. And we did a segment that was hedging, and it's the hidden cost of married put protection strategies. And I like having you on here. We don't need to go into the market measures. I want to show people where to find it if you wanted to go to this market measures because I got lots of emails on it. You just go to shows, you go to market measures. It's right here. You can click on this. There's a nice little cat in the photo because Tony's cat was in there with us. And you can go to all the slides. That's all I'm going to say as far as that goes. If somebody wanted to go back and rewatch that segment. But my question to you, TP, and you kind of said like people are going to start with covered calls or all this stuff. And everybody's more worried about they either want to. Like from the beginning, if you're starting trading, people are like, how can I make lots of money real quick? And they go towards buying options and wind up realizing that doesn't work. And then the next thing is you either have, how can I make money really quick? Or how can I protect my portfolio? And that's when that married put comes in. So if somebody did like something like Tesla, and they wanted to do a married put, all you're doing is you're buying the stock and buying a put to protect it. So you can't lose you won't lose past 400. You're paying a hefty cost for a hedge. So my question to you, TP, is how does somebody who's been in this business for, I'm just going to say 40 years, 40 years.
Thank you. Merry Christmas to you too, Liz. Thank you.
I mean, I'm right there with you, so we can't make fun of each other too much. But somebody who's been in this business for 40 years, what do you say to somebody who said, okay, how do I protect my portfolio?
So it begs the question of why are you long Tesla? That it needs hedging, okay?
I knew you would take it this way. I love this, TP. Go, go, go.
So, okay, if you're a trader and you're just long Tesla and you're worried about it dropping, just sell the Tesla stock. And if you continue to be bullish, turn that long stock into a short put spread.
I 100% agree. But we have to do these things about married puts because the Gen Pop wants to know this. They think that this is, looking at this being like, oh, then I can protect myself down to here. Where I said the exact same thing during this. I said, or if you want to hedge, to 20% of your portfolio, sell 20% of your stock.
Right. So now let's say, okay, TP, I can't sell the stock because the tax implications are too high, or it's restricted, or whatever, okay? Or screw you, I just want to be long Tesla.
Okay.
Okay, all right. What I would do is I would collar it off. So pick your put. Pick, if you want to do, and I'm kind of
So I'm grabbing the 390. I'm in the December with 24 days. I grabbed the 390. It's $11. Just because.
So if you could switch that over to a long put, just to collar it off. Thank you. So 11.55, and I want to get at least, let's say, $12 for a short call, and I can go.
That's good.
Yeah, maybe the 40s or the 35s.
Because you're getting a credit for this. This is a true zero cost collar.
That's how I would consider hedging this off. If I still go back to, though, what are you long the stock for?
Right.
And if you just want to ride this, understand that playing through fear and buying puts eats up so much of your potential profit.
So yeah, if you delete this, if you're just saying, okay, well then you'll still lose, and that's why I'm glad I knew you'd have a good answer for this. You'll still lose if you're long Tesla at 413 and you have the 390, you have the 390 for the 440 collar on. If Tesla goes from 413 down to 390, you've lost money. So you were bullish, you're going to lose to 390. You won't lose from 390 to 380 or 390 to 360, but you'll still lose.
Hey, Liz, can you open up the options that are closer to expiration?
Sure.
And let's just remember, so let's look at the 10 days. Let's look at the 10 days just to make the argument. What are those 390 puts trading for right now? $5, less than half of what the 30 days are.
Yeah.
So just like you said, if the market drops a little bit, okay, let's say the market drops $10. Let's say the market drops $10. So 390 is going to look like the 400s.
Yep.
Okay. They're only trading for 760. You would still lose money on those long puts.
Yes.
That is an expense but it's like buying insurance for your house. Okay, I get it. You don't want your house to burn down. You don't have to start from scratch. I get it. But realize that it's a cost of owning the house. It eats away at your income. It's something that you would rather not pay. Same thing with buying a put on your Tesla stock. It eats into your potential profits and significantly reduces the potential return on capital. Liz, at best, buying Tesla stock's a 50-50 bet. Good luck with that. Go for it. Yeah, sure. I wish you the best of luck.
And I was saying there is a time and a place. I do love puts. I sell puts. I do all that stuff. But and I'm not going to go to zero, or you can go to nearer term. What I do like about the hedging is if I'm hedging for a reason, not necessarily all the time. I don't think throwing hedge in over and over and over and over and over again is the way to do it. Because if you're right once and it protects you, great. But 9 times out of 10, you're just kind of throwing money away. But if this is gonna sound bad, but if I'm going on vacation, or if something's coming out and I'm not gonna be, if I'm gonna have a surgery, instead of closing my stock, I might buy a put that'll get me through to the end. But that's a smaller time frame. I think it has its time and its place, instead of it being a consistent hedge.
And I don't want to put words into your mouth, but I'll ask you this question. If you're long 100 shares of Tesla, how many puts are you buying?
One.
You are not getting delta neutral on that trade.
No.
So you're not even really hedged.
No.
So if you wanted to be hedged with a 20 delta put, you'd have to buy 5 of them.
Yeah, that's right. You would.
And that would kill you. Okay?
That is I would be shaking as I was pressing the button.
Seriously, you'd be waking up in the middle of anesthesia, checking your position. It's like, Doc, get me out of this. I need to check my puts. You're not even hedging with that. It's kind of this pissy little trade that's just going to cost you money.
Yeah, but a lot of people want to know about it. So that's why I wanted your take on it. We went through the market measures. People can look at the market measures if they want, but I do like going in and showing examples. TP, I would be remiss if we did not get to Twitter because I think people really like you.
Well, oh, is that the Polish Warrior?
Yes.
On a Smooth Jazz radio station? And now let's have a little bit of what's it? Herbie Hancock.
Oh God! Yeah,
let's do a Herbie Hancock Christmas. Yeah,
you would be the best. Okay, I might need to trademark the Polish Warrior as I could collect some licensing fees every time TP mentions me. I agree. You know you know that I named him the Polish Warrior.
Did you?
I did.
That's awesome.
I did.
You are a creative machine, Liz.
I like naming things. Oh, we have a
creative machine.
Speaking of, we'll talk offline about that segment we talked about when I was walking to the train because I think it's got some legs.
Oh, yeah. That's a good one.
I know. I think so too. We'll do it in the new year.
Yeah, we need a little prep time, but yeah, there's a new segment that Liz and I talked about, and you and Jenny could certainly do it, or you and any guest could do it, and that's the point. It's a discussion point.
It would be fun. I think we got to bring you on to do it. It'll be fun. Okay, and then getting a shout out from Tom Preston, priceless. If you buy the opposite side to lock in profit, oh yeah, this is what we're talking about. In something non-cash settled, the Tasty Trade risk algo does not get that you removed all risk and may force thank you. So it only works in SPX, right? So what he's saying here is if I did it in say SPY and I butterflied it off, the Tasty algo does not get that you removed the risk. Okay, so because they do close things if they see it.
Yes. Now here's I'd have to check this, and I could do this maybe after the show, is in a portfolio margin account, strictly speaking, it looks at the risk of your portfolio and matches up offsetting risk of highly correlated products.
Yes.
I would have to look in the details and see if SPX and SPY are highly correlated. Now, you and I know, and everybody knows, well, it's the same bloody thing, right? It's the S&Ps. Of course, it's going to have high correlation. But if the clearing firm and the exchange don't recognize that, it doesn't get matched up. In a Reg T account, in a straight margin account, there's no matching. So just like the Polish Warriors, if it doesn't, yes, you are hedged. If you're short an SPX put spread and you buy an SPY put spread, you are theoretically hedged. But for margin reasons, they hold you up on both sides. So just like Mike said, it's not a great, yes, you can do it. It's not a great way to do it. It's not nearly as slick as what he's doing with the SPX butterflies.
Right. And that does help because that does kind of cross it off. So thank you. I appreciate the public service announcement from Mikey. Your check's in the mail. He should be on our payroll. Okay. But,
Seriously.
And The Great Gatsby, I love this handle. TP mentioned helping beginners with mechanics and showing them what he does and how to play the game of options. Did you ever see the book written by Tony Rehan? And if so, how would you compare it with what you guys do? Would love to know. I have seen this, and I love Tony. Tony has been on my show multiple times, and sometimes
that is a great book. That is a great book, and outlines the basics of the Tasty Trade strategy. Tony wrote that about 5 or 6 years ago. It's very solid, very solid. I think if I ever wrote a book, it would probably go a little bit more into theory, a little bit more into some of the biggest mistakes I've made, things like that, to save you the trouble. The other thing I would like to create is a little workbook so that it would let new people show themselves why the options are priced the way they are, why they act the way they do. Because a lot of it's just, I'm looking at all these numbers, Liz, I don't know what they mean. What is this put trading for $12? I don't get it. Why is it doing that? Showing people why and having them work through the mechanics of it, I think increases the confidence.
I agree. I agree. And now you correct me if I'm wrong. What was your, you have like a doctorate in another language, don't you?
No, I don't have a doctorate. I have a master's degree in Greek and Latin, classics.
Okay. In Greek and Latin, right? So don't you kind of think, and I'm going to let you answer this. I don't want to put words into your mouth, but trading is very much like learning Greek and Latin, right? I don't know. Millions of people know Greek and Latin. I don't. But once you know the verbiage and kind of understand the verb, it's not that hard.
Yes. And so it's not like learning French or Spanish or whatever, where they start conversational, where it starts kind of like, oh, buenos dias, Liz. It's not like that. When you're learning, I can remember learning Greek, they kind of toss you right into the pool.
Do they?
Right? So you start translating. So you're seeing, oh, that's a verb. The verb looks like this, and here's how the verb acts. It's not, here's the noun and that sort of stuff. So my English grammar got so much better after I started learning Latin.
Did it? And now I believe you could be a radio DJ.
A radio star with perfect grammar. Perfect grammar. So the point is, I think traders, you kind of step off into this always comes up as a fight at Thanksgiving. Your kids are going to be home. My kids are going to be home. So my older daughter got a dual degree in theater and finance.
Which I love, by the way, love.
She has a job, an actual pretty good paying job in finance right now. My younger daughter is studying molecular biology.
Oh.
She's doing all that crap. So a lot of it is, my programs were harder. My classes were harder. Well, I got a double major and I, did this and that and that. It gets a little tense. And what I explained to my younger daughter last night, because she's home right now. She came home to help with the animals. She was saying, I was saying, my older daughter, I said, what you're doing is hard. I get it. But in finance, you get tossed into the deep end of the pool and there's no life preserver.
No, there isn't.
Okay. You go into science. Okay. You've got somebody else checking your work. Nobody ever fails. And she's not going into med school, I don't think, but nobody fails out of med school. You're a doctor and you just kind of get in trading. If you're not making money, you're out. I don't care what your last name is. I don't care what school you went to. I don't care, who you think you are. If you're not making money, you're out, kid.
I agree. Trading is the only industry, and I get up on my high horse about this. Trading is the only industry that it doesn't matter. Like it's you versus you. It's you versus yourself. The computer doesn't know who you are. The computer doesn't have any nepotism. The computer doesn't give you anything. It's whether it's you're doing it or you're not. It's the only industry I know like that.
And it is also where you can do everything right and end up with less money than you started out with. And you say, there are other industries too where, the cash is going out and paying rent, stuff like that. It's not quite the same. In other words, I'm paying electricity bills and rent too, things like the cost of doing business, but I actually lose money. The other point is too, can I just say this for the record, going into the end of 2025, is that without trading and without option traders in particular, we wouldn't have all the nice things we have. We wouldn't have schools and roads and hospitals and big companies. We wouldn't have iPhones. We wouldn't have houses. We wouldn't have groceries. We wouldn't have any of that. Why? Because we let those companies offset their risk. And when they do that, their cost of capital goes down and they can expand and do all sorts of wonderful things. If it weren't for people like Liz and Jenny and me and you, none of that would exist.
That is a very powerful statement. I like it. You're right, because you do let the companies offset their risk.
We are the beating heart of capitalism, Liz.
I love it, TP. I love it. So maybe you've had some pretty good one-liners or three-liners in this. I don't know which one I'm going to take and put as the title of our show, but one of those is going to be it. Let's pop back into Twitter super quick. I just want to make sure.
Did somebody say I thought this was a young Jenny?
Yes.
Oh my God, I love Ash Finn. Thank you. that I could be compared. I mean, Jenny's like a model. You and Jenny are like models. I am not. I have a face for radio and a voice for print. I don't. This is not my strong suit. So thank you very much, Ash.
I thought it was pretty funny, Ishvin. Okay, now this is where I wanted to make sure we got to, because I think we do need to clarify this, and we have about a minute left. Okay, This is from Florida 7. Just to clarify, if you sell an iron condor in a single order, then buy it back in a single order. It's only 1 day trade, not 4. No,
that's not. It is 1 day trade for you as a trader, right? That's the way you as a trader think about it. The exchange and clearing firm see it as 4 legs.
Yes, that's 4 trades. That's the problem with the iron condor is it's 1, 2, 3, 4 legs in, 4 legs out. And so just keep that in mind. It's no. So we wanted to clarify that because the pattern day trading rule is going away, hopefully, knock on wood.
Hopefully, or at least being reduced significantly.
Correct. So, and I believe it's, going to go into effect or something's going to happen a little bit later in the beginning of next year. But yes, I wanted to make sure we got to this. That is 4, not 1.
Right. All right, what did Eric do? What did Blue Wackadoo do?
No, I love when Blue Wackadoo does this. Yesterday, he was so funny. He's like, after all this work, I got to keep $209 today.
Yeah.
So some days, some days you're the windshield, sometimes you're the bug, because like he's
No, and this is what it is. This is how. Okay, so Blue Wackadoo, he didn't make $1,000. He didn't make $1 million on that trade. He made $200. And you know what? That's $200 more than he started the day with.
But it's green and it's mine, and
that's
right.
That's right. He's a trader. That's trading.
That's true trading. It's not every day is not going to always be that way. And then I want to make sure we got to Ajit because Ajit's great, and I am going to retweet this so everybody can see this. Ajit, we're not going to jump in, but he is always giving us lots of good stuff. So I just wanted to make sure we got to Ajit.
In UNH.
Yeah, he's got a trade in UNH, and he gives all the details. I love that he gives the visualness. Ajit is great. I got to meet him. He came to the Tasty Studios one time. Wonderful trader. Really knows his stuff. So that's why I said I wanted to make sure I got to.
That is a great snapshot of all the metrics you need for that trade.
Yeah, it is, isn't it? And Ajit has. It was great to talk to him because he's been in many facets of trading throughout the years, and so he's a pretty good resource. So I just want to make sure we did get to him. TP. SPOO's up 28. The European market's closed, and
everybody loves America.
Everybody loves America. Okay, TP, happy Thanksgiving to you and your family. Hopefully,
Thank you, Liz. Thank you, Liz. And I hope your son is traveling back home. Yes.
Oh, the prodigal son has returned. He's here.
Oh, he's here already. So everybody's safe in the nest. That's good. I'm happy to hear that. And yes, have a happy and healthy Thanksgiving to you and to everybody out there.
Everybody out there too, and I will be on last call. So give me a call and let me know if there's anything you want us to talk about. Okay, everybody have a wonderful Thanksgiving. Remember to trade small, trade often. Laugh with us, learn with us. Watch TP and DLD, and I'll be on last call.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with forex, now available on tastytrade. Get in on over 80 forex pairs, 24 hours a day, 5 days a week, with the forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Come on and stay a while, but sooner or later you're gonna know it's time to walk out that door, get up, oh yeah. It's time to walk out that door, get up, oh yeah. It's time to walk out that door, get
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal.
Heyo.
And, of course, Thomas Westwater. How we doing today on this fine market rally, day 2 of the market rally?
Tuesday, Tommy in the house.
Yeah, we're coming back a little bit. I mean, it's not much, but 0.5%. We've had a few good days here. I was out yesterday. I didn't really look at the market, so pleasantly surprised. You know, I wasn't too exposed to equities last week, but I took some hurt. I had some single names like CCJ, Nvidia, things like that. Nvidia is still taking some pain. The chips, I mean, that's kind of concerning. Can we get back to all-time highs if the chips are not participating? That's going to be a big ask. But, you know, SMH, it's lagging still today, but I don't know. We'll see.
I'm getting destroyed in SMR, which was almost a $60 stock. Now it's at 18. Just immediately removed the air from the sails in that one. But, I now have 100 shares at a basis of 40. So we're going to be holding on to this one for quite some time. But yeah, big moves under the hood. Interesting to see E-minis up, NASDAQ down. E-minis up 30 points, NASDAQ down 15. Bitcoin continuing its slide down back down to 87. And oil sub 58 now. Natty gas looking like a big move here to the downside, down 5%. Gold and silver catching a tiny bid, but really not much moving that's like too crazy. Everything's kind of within 1-2%. Natty gas, of course, biggest move to the downside in the futures market, but there is a lot of chop within the lines here. Not too much to the upside, more than 1% outside of gold, silver. And I've just checked out the interest rate probabilities. They are surging higher and higher that we will get a 25 basis point cut in December, on December 10th. That was completely flipped a week ago, but now we're getting back into that high probability that we will get a 25 basis point cut. Do you think that's pushing, pulling the market in any way? How do you see it?
A little bit. I mean, you know, they went down over the past couple weeks. There's a lot of questionability about if the Fed's going to be able to deliver a rate cut, especially with all this data that we know now is not coming out. So they're going to be lacking on what they see, but, you know, they have other measures that they look at. So, you know, they're coming back. The market's responding in a positive way. So it's rate cuts for the right reason. You know, they're not being done because the economy is tanking off, but there's still concerns about inflation and everything. I think that's going to remain an overhang. But I'm not convinced yet that we get back to all-time highs in a quick fashion. I think some chop through the holidays is kind of going to be the status quo here for the next few weeks at least, before we pick a clear direction. You know, we're going in the holidays, so volume is going to be lower, especially, you know, starting today and tomorrow, especially as people take off. But I'm kind of weary to trade in these low volatility environments. I'm going to be keeping my risk a little lower than usual, so we'll have to see how it goes.
Yeah, I think that's a good call out. We've seen situations where you sit on the couch for some pre-Thanksgiving football, like on a Wednesday, you're chilling, or even on a Friday, and there's really thin volume, not much moving, and then all of a sudden there's a huge move in either direction. I think that's totally possible. I remember like 7 or 8 years ago, I was looking at the oil markets, and oil was down like 8 points for little to no reason. It was just a big move, like a big liquidation move to the downside. So something to keep in mind, just because markets may be thin in terms of volume does not mean that they can't or won't move in a big way. So I like the idea of maybe sticking on the sidelines, especially with a lot of uncertainty and a lot of time between Wednesday and the following Monday. Markets will be open Friday, but yeah, it's it could be nothing, but it could be a big move in either direction with no real volume behind it.
Totally. I remember that used to happen a lot when I was first learning how to trade. I remember this one dude who had traded on the floor for years was like, well, you're going to see weird moves and big moves happen every now and again. I don't know if this is as true as it used to be, but he's like, a lot of the major players are probably off the desk, and there's usually junior players on the desk, and that used to be a thing. It's not as much now, but the fact remains, there's less liquidity as we get closer to the holidays. That said, it's interesting to look at one of the things I love looking at, which I look at on the platform, that $SPX A50R, which is basically the percent of S&P 500 names above the 50-day moving average. This has moved up recently, and now it's around 52%. 52% obviously is pretty fair. Usually when it's down to like 30%, we've been pretty much are oversold. Usually when it's upwards of 70%, we're overbought. So you can see we're in the middle of the range there as markets are trying to get back to, I guess, even, if you will. And then the other thing, what made me look, because I just can't stop looking, I keep talking about it. You're probably getting annoyed at this point. Lilly, oh my God, this stock. Dude, I just looked at stocks that are doing the best in the S&P 500 over the last month.
Wow.
Lilly is number 2. Regan is number 1. But a lot of it is healthcare. When I look at the list, it's Regan, it's Lilly, it's Cardinal Health, CAH, it's Biogen, BIIB, sorry, CNC, Merck, like these are the names, oddly enough, and I haven't paid much attention, but these are, if you're wondering, how can we be up with Nvidia down 4%? That's how. That's literally how.
Yeah,
it's a lot of basic materials and stuff like that.
Yeah, XLV even. This is an ETF, and it's ripping like an equity. It was trading at 145 just a couple weeks ago, and now we're at 160. Yeah, that's a surprising chart. This old Lilly here. Only 2 red days in the past month.
Dude, I'm so upset. I'm so annoyed.
Silly.
Yeah, it's crazy. I haven't paid attention to the healthcare stocks much. When I started trading, I used to do a lot of like the smaller cap healthcare stocks like Teva and stuff like that, just trying to sling those. But yeah, UNH is an interesting one. There's a lot of calls for it to come back a lot. It's not really participating too much along with, the drug manufacturers.
Mm-hmm.
But is there certain headlines that are pushing these up like this, or?
I'm not even sure with Lilly. I don't know. I don't know if I haven't seen, like you said, I don't pay as much attention either. I haven't seen many headlines. I do see a lot of things because I try to be broad as far as the things that I watch on Twitter specifically. I just think it's catch up, right? I think it's like, okay, let's get out. We've seen some of the exodus in the tech. Now let's find some of the stuff to buy. And it's clearly that's what it is. Now it's not like there isn't any tech participating. We've seen the WDC is up there as well on the month. Obviously, we've seen what Google has done recently. But, just looking at the top 20 names, it would seem like 12 of them are healthcare names.
Yeah.
It's wild.
It is pretty wild. And they're just surging. I was actually looking at UNH. They had a hearing about their DOJ situation like last week on the 19th, but I don't see anything that has come out yet in regards to the result of that. But let me know if that's changed. But seeing a little bit of a bid in this product, this is the big one that lost half of its market cap in just a couple of weeks. But yeah, Lilly just absolutely mooning up to 1,100 now. Crazy move there. Yeah, crazy move.
Is Google churning out to be like one of the winners now in the AI race? Like people are getting more and more bullish. When in the early innings, it was all about, Nvidia and the chip producers and stuff like this. And now it seems the sentiment on Google, especially over the past few weeks, is getting really more bullish. They have the data. They have huge stock piles of cash to, throw at pretty much anything they want. Google has always taken a lot of tail risk bets, like little things they invest in here and there, and they hope for, one of those big winners. But, it looks like they're planning to get more involved, and I think it looks better and better as a long-term trade.
Yeah, Meta trying to claw its way back as well, up almost 50 points from 3 days ago. Kind of bottomed out around 580, and we've rallied back, but I would not be surprised to see this recover. But yeah, to your point, you're seeing a pretty swift reversal. If you look at Microsoft reaching its high of 550, now sitting at 475, just a complete opposite chart of Google over that same period of time. So Google and Apple are the two leaders here. Just wild to see. But this just speaks to like when you have a Mag 7 stock that everybody hates, you shouldn't be surprised if you see a rotation into it eventually.
Yep.
It's hard to say when exactly, but that's how these markets can climb higher. Like we're seeing in healthcare, like you're getting a rotation out of the chips into healthcare. Maybe the healthcare is flat and you get the rotation back into the chips. It's just like the sectors will rotate, but especially with big name tech stocks, especially the Mag 7 stocks, if one is near lows and others are at highs, like I'm much more inclined to invest in the ones that are at lows and see if you get a pullback in the ones that are at highs. And we're seeing that in real time right now.
Couldn't agree more, especially with big names like that, right? Like we're not saying with every single thing. Like, for example, I bring that up because I have a position in CoreWeave right now. I'm a little nervous in there because that's a smaller name. I mean, honestly, anything could happen. That's a newer issue. I know it follows Nvidia a lot, and that's a large part of the reason why I got in it. But that's a little more nerve-wracking than actually being in Nvidia or getting in Microsoft or getting in Meta, to your point. Those eventually will see some rotation back. These are massive names. They're not going anywhere just yet.
Yeah. But yeah, thanks for joining us on the YouTube channel. If you want to pop over there, just head over to Tasty Live. You'll see this video streaming front and center. I've got the Tasty Trade referral program pinned at the top of the chat. Great topic to start off the Thanksgiving holiday. If you are partaking with your family, friends, you can just mention, if you open a Tasty Trade account with my link, we both get $100. And that could finance your football bets for the day.
Yeah, true.
But check it out, scan the QR code, or just head to the link pinned to the top of the YouTube chat, tastytrade.com/referral, and you'll see all the information there. We've also got the Money Match promo. If you don't have a Tasty Trade account yet, 1% cash match on any and all deposits up to that 30-day window, and 30 days commission-free trading as well. So if you're super active, if you want to be super active over the next month or so, it's a great promo. Definitely check that out as well. I'll throw a link in the YouTube chat for that. That one's just tastytrade.com/moneymatch. But yeah, all that aside, what is going on with Natty Gas?
Yeah, so everyone sees the headlines. The Russia-Ukraine deal is being hashed out. It looks like there's a framework that is, preliminarily agreed to by at least Ukraine. Zelensky coming to the U.S. in a few days to probably put a stamp of approval on this deal. Natty Gas, it exploded after the Ukraine war. Russia, they got a lot of their supply to Europe cut off, things like that. So now with the prospect of a deal, it's looking like maybe if that comes to pass, Europe will start making deals where they can start accepting some Russian gas again. They're only accepting about 10% of pre-war levels. So, even if they got back some, I don't think it'll ever go back fully to Russia supplying as much as they did at the start, because a lot of their infrastructure and supply chains have already kind of changed. A lot more reliant on the U.S., which will go to the first chart, and kind of see how this LNG feed gas, which is the natural gas that goes to export terminals in the United States. The blue line is this year. The green line is last year. We see that, we're a lot higher this year, and we're actually been increasing October and November. We're at about 18.2 to 18.5, depending on the source you look at. That's billion cubic feet per day that's going. Most of this is going to Europe, especially as we go into winter. The reason why, even though these are very strong and now we're selling off, is it's a news-driven event, right? So is it a buying opportunity? I mean, there are a lot of technical levels you could look at. We have what contract are we on now? So I'm going out to the 63. I sold a vertical put spread at 4.14 for 63 days out, and that gives a pretty good risk to reward at 50% POP. So you're looking at, make 580 to lose 420, and the POP is 57%. That's not too bad, and if you think there's some technical support here, you think these news headlines are overblown, that could be the case because these peace talks, they're fragile, right? A lot of stuff you don't know. The administration wants to sound very optimistic, but you don't know what's happening behind the scenes. There's already some news articles citing GOP senators and Congress people that are really unhappy with this deal, even though they're not going on the record. There's some news articles where it's, they weren't comfortable providing their name, but they're saying it as a source that's unnamed. So you have Ukraine, a few things have been changed already, the amnesty, the troop limit on Ukraine's army, things like that. And we're also seeing some headlines that Russia is not particularly too keen to accept the deal right away. So these news headlines will drive a lot of volatility over the next week or two as they get fleshed out in the media. And that could be volatility, the upside or the downside. But my view is that, the F6 contract we're trading at 4.4, that's around the October swing high. It's around the resistance that we saw through most of September. And, I think it's a decent place to take a stab here, given the risk to reward on the trade. I'm already in a short put spread on the F6 contract, so now I'm in the G6 contract, the next contract out as well. And we are trading in contango, so, that's one thing to also consider when you're trading these. But let's talk about the weather a little bit. That's the other big thing that goes into this. So if we go to the second chart, it's questionable because a lot of the East Coast is where your demand is concentrated. And you see, this line of cold weather starting in West Virginia, go over to Delaware. Above that, chances for cold weather that could drive a lot of what we call heating degree days, where people are using more heat than versus the average and things like that. So that increases demand. But we're still kind of mixed, I think, on the weather outlook. The longer-term forecast, December, January, February, according to the NOAA, it looks like it's going to be mild temperature, but usually I don't have too much confidence in those longer-term forecasts because a lot of crazy things can happen. Anyone that looks at the weather day to day, you see that it changes a few days out. It's always could be drastically different. So really, what we're going to be looking at is a volatile landscape for natural gas over the next week or two as these headlines get fleshed out. But if you want to take advantage of the volatility, it's already high vol, trading at 54, 55 IV rank. So this is your spot if you want to choose a tactical spot to express a directional view. It's definitely a lot of options there. The volume is, natural gas, you can do pretty much anything you want, at least within the first few next month contracts. I'm going to get long. I usually don't do two put spreads at the same time in the same direction, but I'm rolling the dice here. I'd say moderate confidence. Of course, it's natty gas, so anything can happen, right? And been thrown to the wolves a few times, but overall, I think it's if you want to get a little risky, and every trade is, right? But I think it's a good spot, especially the risk to the upside. If this deal falls apart in any way or even gets pushed back, you're going to see probably a lot of today's move retrace and get out of there. Another thing people say is when you're trading natural gas, you take your positions, the market makers will flush out your positions and then it'll whipsaw right the other way. That's more like conspiracy speculative, but it's not outside the realm of possibility either. So, overall, I'm taking the shot here. If you're going to go in it, you got to watch the position and structure it in a way that's not going to, of course, blow out your account, right? Something like that. So just be wary if this is your first time trading natural gas, you're new to it. Look at the chart, what's happened in the past. There's a lot of these days where you get 5, 6, 7% moves in one direction or the other way. And just be ready to stomach that. I think the good thing with going out to the 63-day out contract is you really give yourself time to go through some of this volatility over the next week or two and return more to the fundamentals and rely on, if we get a good winter where it's going to boost demand And, these flows are going to continue to go to Europe, because it's not going to reverse right away. They're not going to make a deal and all of a sudden Russia is, importing back to the levels they were. That's not going to happen. So I think the market got a little scared here. And, the chance for it to retrace, I think, is pretty high.
Yeah, I like it. I just duplicated your trade. So I got into the G6 contract, which is a 63-day expiration. That has a current price of 4,104, which is significantly less than the near-term contract. So we are dealing with a little backwardation here, but that also increases implied volatility in these near-term cycles, which is what you would want to see if you're selling premium anyways. But yeah, 63 days, 4140, risking less than you can make. And this only takes like $200 in buying power with span margin. Thanks to the longer term cycle, the real-time risk isn't the full max loss. So nice efficient trade. Picked up $580. And yeah, I like the idea of staying defined risk just in case something crazy happens. And to your point, like if you have a defined risk narrow spread, you don't need to be stopped out because you already have your level there where you take that max loss. So yeah, we'll see what happens. I like it. And we've had analysis before where when Natty Guess is down 5%, going forward, you typically have days where you can see a bounce.
Oh, yeah.
And with a credit so high like this, you could take $100 out of this thing, even if you got a 2% reversal from this move. So I like it.
Yeah, that's the thing too. If we get a quick reversal tomorrow up 2-3%, if you could take $100-$200 from this trade, I would do that instantly and just, recalibrate for the next trade.
Yeah. Especially with the holidays coming up. Anything can happen.
Totally.
With the lack of volume, you could see some big pushes or pulls in either direction. But yeah, I love it.
Fly like a G6, huh?
Fly.
G6 contract?
And the nice thing about like equity market volatility is going to be low. Natty Gas, the nice thing about this is with these news headlines going on, there's probably going to be enough people coming back in to trade it and trading those news headlines to where you get the volumes to where you can get in and out of your trades pretty quickly. I don't think you have to be as concerned about, volatility or a volume collapse. If there are these news headlines coming out, you're going to have that volume of people coming in to get in or out of their trades to where you can exit without really worrying about it too much.
Yeah.
I love it. I love it. While we were chatting, NASDAQ ticked green in a pretty big way, up 50 now, so almost a 100-point reversal. E-mini's up 44. Bitcoin catching a bid, only down 1,500. Now the Dow and the Russell also catching a bid here. The Russell, the leader of the pack, almost up 2%.
Santa Claus is coming early.
Hey, I hear those sleigh bells. Yeah. People keep telling me that it's not coming this year, but I think it still might. Still might. Yeah.
Sleigh bells ringling.
I think especially if we continue to see higher probabilities for the rate cut in December, and if the market digests that well, we could see a retracement back to near highs. Maybe we don't blow through, but I think we could easily get back to 68.50, somewhere around there, which is where we fell from. We've already erased 50% of that move. So, and we've said this time and time again, like, we're not seeing the vol reaction that you would expect into a big sell-off like we saw over the past week. And until we get that, until we go from a teen VIX future into the mid-20s, into the 30s, into backwardation, like I'm just going to continue to play for buying these dips, but still doing it in a small way, defined risk way, diagonal spreads, calendar spreads. That's how you protect yourself from a continuation to the downside. But if you want to take a stab at like something like a short put, you just have to be willing to take the shares at your strike price. You can still defend it by rolling it down and out, but it's a riskier trade in this environment for sure, which is why we're sticking to mostly defined risk trades.
I mean, if we finish at this level or higher, in my opinion, I think the rest of the week ends up being fine. This morning, I thought the continuation of the rally was in serious jeopardy. I mean, when you saw Nvidia, you saw Oracle, you saw AMD getting beat down the way they were, even though you had some up names like Google and Meta, It didn't look good this morning, but lo and behold, here we are.
Have you been trading any other futures products outside of natty gas?
Yeah, I mean, I'm still in corn. I'm long there with the short put spread, 440, 430. So we're $2 under my short. I'm gonna leave that on because I got some time to ride on that. 31 days. I'm long both ZN and ZB. And with these rate cut bets coming back in, I think those bonds are going to perform well, coming back. So ZB, I'm 59 days out, got plenty of time there with the long call spread. ZN, I got a short put spread, 31 days out. Probably take that off or roll that pretty soon. But, with the December cut looking like it's now more and more likely coming back, I think bonds are going to perform pretty well. We need to get back over that October high level. And then I think we trend higher. I think Vecchio's talked about this a lot. There's a long-term trend reversal right now that's happening, and it's not confirmed yet. But a bottom, being carved out is looking more and more likely as we go more into these rate cut cycles that we get. Other than that, I'm in an iron condor on crude oil between 57 and 62.5. So we're 50 cents above my put side. Getting a little nervous, but again, this Ukraine deal, this is why oil is kind of coming off. You get a deal, the U.S. sanctions on Russian product comes off, so it's easier to get their oil onto the market. Other than that, I'm not in too many other products. Like I said, I'm going to, through the holidays, Thanksgiving for the next week, I'll stay light. I might get, levered back up December, and then as we get into Christmas, I'll tone it down again.
Yeah, that makes sense. Especially if you're spending time with family, not staring at, we have the privilege of staring at the platforms all day.
Yeah.
So when we're not doing that, I think it makes sense to lighten up, maybe set some GTCs, taking some profit if you have positions. But yeah, crude, you were right about that, setting a new range. I think you said between 63 and 55.
Yeah.
You had this initial sell-off, and we've kind of chopped in there. But crude has continued to be a great trading vehicle, regardless of whether you're bullish or bearish. I mean, you've had entry points and exit points all year, really. This thing has been super volatile, but if you've kept your size in check, you could hold through any. If you're trying to buy a dip here, you had profit taking there. If you're trying to sell the rips, you had profit taking here. It's just this is why size is so important for something like this, to where you don't get stopped out into a big move. You have the ability to hold through time, and time has proven in this year specifically to give you that ability to get out for a profit, literally regardless of whether you're bullish or bearish. I have a micro crude contract. I got in at 58 or so, just under 58. So right there with you. But again, small contract, one contract. I can hold this for whatever movement this has, but just looking for $100, $150, something like that.
Just a little bit.
Just a little bit. All right. Thank you very much, Thomas. Love it. We are in the natty gas train, which means it's time for some pain, because that's all I have ever felt in natty gas. But we're happy to bite. Defined risk, short put spread.
Next week.
Yeah. What could go wrong other than natty gas going to 2?
Which is always possible.
All right. Popping over to the YouTube chat now. Again, if you want to join us there, just head to tastylive. All right. Saltwater Wizard. Love that name. 2x IBIT 65 short puts. Looking to roll to Jan to avoid assignment. Considering selling an inverted call to help at 60. Never been inverted. Thoughts? Yeah, it's possible. I have a similar position. I have the December 65. I'm willing to take the shares here. The only problem with this position, if we just look at the put side, is that rolling to January doesn't give you too much premium. But to your point, if you're just trying to avoid assignment and keep this an options trade, then yeah, rolling to January will do that. It'll infuse about 30 cents of extrinsic value into that short put, and it'll give you enough to where it's a lot less likely to get assigned. If you're assigned, it's still basically 100 shares of stock at the end of the day. This is a 90 plus delta short put. So yeah, if you want to roll it out, you totally could. If you want to add the short call against it, you'd pick up another $100. I think this is totally fine if you have over $5 in credit. If you have over $5 in credit and you sell the 60 against it, you would have $6 in credit and you'd have a 5-point wide inversion. So even if IBIT rallies all the way back up here, you could still make $100 on that trade. And it's still a long ways away, 10 points. If you get that move, you could roll Jan out to Feb and readjust this position to get rid of the inversion. So inversions can be temporary as long as you stay on top of them. How do you interpret the market being up big, but volatility hasn't decayed that much? Isn't a rally short-lived and VIX? Isn't the rally short-lived and VIX has to decay as well? Not necessarily. I mean, this is still. So when you consider what the VIX futures tell you, this is still a big crush here. We went from the low 20s to the 19s again. Like this is near the lowest point we've been in the VIX futures. If you look at the VIX itself, another situation down well below 20 into 19, almost into 18 here. But what does the VIX tell you? What do VIX futures tell you? A 19 VIX is basically a 1% move projected. So what you're seeing here is a 50-point rally in the E-minis, which is just shy of 1%. So we're within that. We're getting a vol crush, but we're still kind of in line with what volatility is telling us. And we had a couple days ago, the VIX 1 day, when it spiked up to 30. This is when we were getting that huge move. Now the VIX 1 day is sitting at 11, tells us we shouldn't expect to see too much volatility the rest of the day, but we're still moving. Like the Nasdaq's still ripping higher here, almost up 100 now. But yeah, I think what you would need to see, if you're trying to get the VIX back into the 15 handle where it was, you need to see a handful of days where there's no fear and narrow ranges, really. Like you need this 50-point move turn into a 20-point move, and you need a couple like sub 20-point moves, I think, to get a real vol crush in this market.
Yeah, I mean, the VIX is essentially telling you that you talk about somewhat of a wall of worry, which AI and tech valuations is at the top of that wall, or maybe at the bottom, depends on how you think about it if you want to pull it out. But it is still a thing. It is still something that the market seems to be worried about, I would think. And just look at what's going on today, right? We saw the move in Google to the upside, but you saw the reverse move in Nvidia. And, obviously CoreWeave moving along with Nvidia and Oracle and AMD. And those are some big names. And they were down, pretty swiftly. So I think that's what VIX is still telling you. This is still here. This is, still a thing. Maybe the FedWatch tool is showing that we're going to get a rate cut and that we're not as worried about that, but this is still a thing.
Yeah. Big reversal today in Nvidia. Still, though, not out of the woods yet, but I do like the idea of doing something longer term in Nvidia.
Yeah.
And just trying to buy this dip here, assuming like maybe if we're trying to get in early and buy the dip in Nvidia, a Feb Jan is really not that expensive. So that's what I'm going to do here right now. So the 180 strike, just right at the money, cookie cutter setup, 87 days out, pretty long term here, and then selling Jan against it. Yeah, so like the 180, 190 call diagonal spread for $700. Easy way to get some delta exposure for less than $1,000. If we just look at the Theo P&L here, with no volatility contraction right now, if we got a rally back up to 190, this would be a $150 winner. Nice winner. But as you pass time, you can see this green bar increasing. So if we go to the end of the year, let's say, December 31st, now all of a sudden you're getting a ton of value out of the 190 call that you sold for $660. And in the same example, you've got an almost $400 profit if you get a rally back to 190 by the end of the year. So I like this trade when you have the ability to hold this 180 call for quite some time. And we've bounced from there previously. Like this has been a floor previously, 180, 170, 165. Like we haven't really dropped too far from where we are now. So I think, given the fact that it's still down 6 points today, it was down much more earlier. I'm willing to take a shot here.
Love it. I'm thinking the same thing. I actually needed to clean up some stuff. I was still, I don't know, I had leftover position, but I love that idea. I'm about to do the same thing with you.
Healthcare and financials are stonking. Yep. Yeah,
Yes, they are.
we've seen this for like the last 3 months, I want to say.
Yeah.
Just like pure sector rotation, day to day, really. It's not even really been a macro thing all that much. I mean, it's just been like a daily, feels like it's been a daily rotation in and out in a lot of these products. NASDAQ up over 100 now. Bitcoin catching
Also.
a bid. We are seeing a nice little rally, second day.
Yeah, it kind of makes sense when the rate cut odds shift because you're like trying to play into defensive and then get back out as they come back up. And, you know, you do see those rotations when the rate cut bet odds do change because you're trying to, you know, if rate cuts go down, then you're getting more defensive. They go back up, you're getting more speculative.
Mm-hmm. Yeah, I think you'll continue to see that. But I think as the probabilities for another rate cut, which is what we were looking at a month ago, getting down to that 350, 375 level, 82% now. And literally a week ago, it was 50%. So we're seeing a strong pull in that direction. I think the market likes that. Just having more certainty around what to expect in December, I think also gives us the ability to have more certainty around the narrative of what we are to hear from the press conference. And maybe you just get some lower volatility for the rest of the year, and then 2026, maybe it's a whole new ballgame. But as of right now, we're seeing some relative strength in the E-minis and NASDAQ. And again, we've erased a lot of this big sell-off we saw from the recent drop-off of around 6,900. We dropped all the way down to 6,550, and now we're sitting 200 points higher at 6,770. So we'll see. We'll see if it continues.
Almost about 100 handle range today already.
Yep.
And I have comparisons for that in a second.
Let's see. Could a slightly negative delta Iron Condor on Lily be an idea? It's not for me. I mean, there's a couple things with this. So first of all, it's a $1,100 product, and the markets are not going to be that liquid here.
Mm-hmm.
So if you're going to like January, these markets are over $1 wide. So that's even more emphasized when you have 4 legs that you're dealing with. But we can take a look just to walk through it.
You also got to remember too, like Lily's so big that when you start looking to the upside, the strikes are not 10 wide; they're like $20 wide.
Yeah.
So that's the other thing. But to your point, and that's actually what kept me out of doing the zebra. The markets are fairly wide, and I literally talked myself out of that. And I mean, you know, I'm fine with that because that's exactly why I didn't do it.
Yeah. I mean, I get the idea. You're looking for some chop, decent range, but at the same time, you have just over a 200-point range here that you're covering over 52 days, picking up $700, risking $1,300. The bid-ask spread is $500 wide, so that's problematic. But 200 points is ultimately covering above this chart and down to like where the rally, the midpoint of the rally. But with a product like this, like you could see this flip in a second. Seeing a lot of positivity, but I might just pick one direction and just roll with that. Get rid of 2 of the legs, make the markets a little bit better for you. But if you're trying to be bearish on this thing, like it's still pretty difficult to get a decent bid-ask spread. If we got rid of the put side, for example, and we just went with the 1,200, 1,220, you're looking at $500 in premium, $1,500 in risk. Still a pretty wide bid-ask spread. So yeah, I think this one's, I'm out on this one. December is not that much better, but it's a little bit better. But you're just not picking up enough premium to take the risk here. I'd rather just do like a calendar spread if you're picking a direction.
Yeah.
Either way, the markets are too wide.
I just wanted to quantify what I was trying to say earlier about daily ranges here. So the range we got right now, specifically in ES, you can do this in ES or SPX, and I just looked this up on another website, barchart.com, but 99.75 point range today. Over the last 9 days, 133.3, let's call it, range, average daily range. 14-day period, 115 points. 20-day period, 106 points. Obviously, start going further out, they get smaller. Over an 80-day period, 87 points. So far, we are within the range. We are lower than the average range, average daily range that we've seen over the last 9, 14, and 20 days. I think if those get tighter between today, tomorrow, and Friday, vol is going to come in. It's going to be like 18 on the Z contract. Yeah, maybe not 18, but maybe like 19.
Yeah.
Closing in on maybe possibly 18.
Yeah, I think, you're getting vol crushes on rallies, but you're also getting vol crushes on previous ranges that were priced in that are now getting more narrow, regardless of direction. If you got a 20-point sell-off in the E-minis tomorrow or a 10-point sell-off in the E-minis tomorrow, you could still see a vol crush just because the intraday range is getting more narrow. So it's not always about green markets mean VIX crushes. It could be slightly red market means VIX crush too if the range is much more narrow, to your point. Looking to get long ETH A or IBIT. Yeah, I think both are in play. They're both really small price points. So ETH A, 22 points, IBIT, 50 points. Like these products have plenty of implied volatility. You could sell a put if you wanted to take a shot there. You could do a call diagonal spread. Like the world is truly your oyster here when it comes to ETH A and IBIT. But yeah, I've got that 65 straddle in IBIT, and in ETH A, I have a call at 30. This was part of a diagonal spread gone wrong. The 30-40 diagonal spread, that was a longer term one, and it just got vaporized with the sell-off in ETH A. But is it time to step in with a short put or another diagonal spread? Could check it out.
Probably, perhaps.
I mean, these are pretty cheap here. Like a 2025 or a 2027 diagonal spread, buying February, selling January for $300. I'll bite. These are easy risk reward trades. Like we've seen the liquidation already. We've seen ETH A go from 40, almost 40 down to 22. Like these are the defined risk shots that I'm willing to take. And we'll see if we can hit it. I mean, it's not going to take much for this thing to be a $100 winner, considering it's a $7 diagonal spread, 7-point wide diagonal spread that I bought for $350.
I like it. I still have the zebra in there. I haven't changed anything. It's in Jan. Might have to roll at some point, but I'll wait.
Yeah, it's
further on this thing.
If it was a larger product, I might wait, but because it's a smaller product, it's easier to take that shot for sure. All right, what else we got here? What happened to LE? Those live cattle.
Yeah, this it's been
I heard it was limit up yesterday. That's what Q told us when he was on the show this morning.
Oh, was it? Yeah. Yeah, I mean, I've been out of this trade for a while. I was bullish in the summer. We got some good trades out of it. I think I sold one call spread on the way down, but I haven't been touching it. This is just a huge reversal. We're kind of over the demand season, the seasonality.
Yeah.
And after such a big run up, I think the profit taking is incentivized so much that really this is just a lot of people getting out of their positions that they've been in going back to March, April, May.
Yeah.
Yeah.
I think LE, so yeah, to your point, we were doing the 230 215, 230 put spreads here. But we were also doing these micro call diagonals, the 236, 235, October, September. And those were ones where we were just like taking small chunks out of it on the way up. But this was also driven, when you look at the LE rally all the way up to 250, that was driven a lot by that screw worm situation. And it's just fallen out of bed. But yeah, crazy range there.
Hopefully our steaks get cheaper.
Yeah.
Yeah, hopefully.
Let's see. Oracle almost green now.
What? Now that is saying a lot, because that's
been
death this morning.
That's been a troublesome. Yeah, that was down. This range has been crazy. This range, low of 185, high of 199. Crazy.
When the market latches on to something that it likes or it doesn't like, it will show you. And that's what's happened here.
Yeah. Oracle, how about IBM?
Yeah, where's IBM nowadays?
I'll never forget this move. This 2-day post-earnings move.
Yeah. Wow.
XLV is up 25% since August. Yeah. XLV contains all those healthcare names that we just were talking about earlier today. It's been a big legislative boom here for healthcare.
Lilly is the largest holding in there. Johnson & Johnson is second. Abbey is third. UNH is fourth. You're UNH.
Yep.
I still have a Humana diagonal, by the way, just from when the stock was down. The Jan 250, D's 265 diagonal. Just keeping it rolling.
Humana. Yeah, I think XLV is in play for either direction when you consider the fact that we're dealing with a 37 IV rank, but only a 17% implied volatility. And you're seeing this thing go up and down 5 points a day. Literally last week, this was trading at 150. Now we're at 160. And when you look at implied volatility, the next 10-point move isn't priced in for 87 days. So you're seeing realized volatility exceed implied volatility here, at least in the near term, which is always interesting if you're trying to take some stabs at directional moves, because it's not currently priced in what you're seeing right now. It's not priced in.
And not to be left out, XBI is doing a similar type of move, actually more uniform, surprisingly, considering it's a biotech ETF. So when you look at the S&P 500 and you're like, we are crashing, but yet we're bouncing back. How are we bouncing back with all of these tech names still struggling to some degree? That's why.
Yeah.
Literally, that's why.
Yep. Are there any other year-long, other than the year-long strangles, are there any other campaign trades you do regardless of volatility?
Campaign trades, interesting.
The year-long strangle and the year, you could do year-long whatever. You could do a year-long short put in the E-minis if you just want bullish exposure. That's my year-long trade next year is I'll do it in MES to get some exposure to that. And I will do the trade that I always talk about, which is just having a strangle or short put in the E-minis and then just adjusting to the upside so that you eliminate short delta if you do get that move to the upside. But I would say regardless of implied volatility, I'm always doing diagonal spreads and calendar spreads, because even in high implied volatility environments, yes, you're buying a more expensive long option, but you're still selling an even more expensive short option against it when it comes to implied volatility. The short-term implied volatility exposure is going to be more exposed to implied volatility than a longer-term option. And that's true for a VIX of 12. It's also true of a VIX of 40. because the near-term options are the ones that explode relative to the longer-term ones in terms of implied volatility. So those strategies, regardless of IV rank, regardless of IV, are always on the table. They're cheaper to get into if you have a low IV environment like XLV, like we were just talking about. But that doesn't mean they're not viable for high IV products if you're trying to keep risk defined and still go about it that way. Let's see. I will cry tears of joy if this market rolls over and takes back all the premium folks out there getting in this. It's totally possible. Like, really, it is completely in the possibility of like, yep, Monday, Tuesday, everything's good. Wednesday, 150 point sell off, or Friday, 200 point sell off. Like it's there. I think the market, I think the lack of big vol crush here, to everyone in the YouTube chat's point, I think the lack of big vol crush is a direct reflection of that possibility of like tomorrow you could get thin volume, big move. Friday, thin volume, big move. Like these things they've happened before. So I think the fact that we're not getting a 5% vol crush today after a 2 points or a 2-day rally that's pretty strong, I think is really reflective of that possibility for the rest of the week.
That's why we trade. Anything can happen.
Last one here. Any adjustment to the UAL trade? So yes, the UAL trade, I was saying I was going to wait for a rally and see if we got it, and we're getting it today. So this trade I'm in, the 100 strike call, I've been in it for 41 days. This was a earnings trade that I put on. The 100, 110 call diagonal spread. The 110 expired worthless. We dropped all the way down, and we're trying to claw back here. So down $100, what could I do? Good question. So we're at the 100 strike, and we're at 100. I'm down $150. I could just close the trade if you wanted to close the trade. I think alternatively, you could consider something like this. So this trade was a $600 debit. It's trading for $500 now. You could consider a diagonal spread. So like throwing on a 10-day option at 105, picking up $120, brings my basis down to $500 or so. And if we get a rally up to 105 next week, it'll be a profitable trade. And you can see this here. If I were to throw this on, look at the analysis for both positions, go to December 5th, and then change the cost here to, actually, I might have to throw this on. Yeah, we'll have to throw this on as a new trade. So the 100, 105 for 10 days. Bring this down to like $5.30, which I think is what my basis would be. Yeah, 530 debit, curve analysis, get rid of what I have now. So yeah, you could see a decent move to the upside and a profitable trade if you throw this on. So that's what I'll do. I'll throw on the 105 for 10 days, get some premium out of here, and see what happens. There you go, $1.22.
There it is.
That's it. We're out of time. Thanks so much for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Thomas is at FX Westwater. Keep your eyes on the markets tomorrow and Friday. Markets will be closed Thursday. But again, keep your risk small. Thin volume doesn't always mean nothing's going to happen. You could see a lot happen in a short period of time. So any new trades I put on will be defined risk, most likely. But I'm also not super inclined to throw anything on right now. But if we do get a move like tomorrow, big move tomorrow, I'll look for stuff. Big move Friday, I think it makes sense if it creates new opportunities. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Tasty Trade's Money Match event, unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it. And I get my way. I'm proud and I'm howling around. What can I say? Ooh, let me see you move your body, see you shake you, make 'em turn it up and drop. Ooh, let me see you get it started, see you working up a sweat.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday, a little bit of some Thanksgiving action prior to Thanksgiving this week, but we got a little portfolio management to do. We took a couple trades today, so we'll do a little bit of trade analysis as well. But before we get into all of that, Brother Gus, how are we doing today?
Doing good, always good. Yeah, Meta moving for me. I'll tell you what, Meta heard us talking crap yesterday. Yeah, I said bet, and it moved to the upside.
What's been going on over there in Meta?
I'm actually not entirely sure if there's a catalyst driving this or not. It's up almost 3% on the day. I mean, potentially just with the broader market, which obviously is also having a very serviceable day here. But yeah, interested to see how Thanksgiving affects everything. I mean, much broader than just Meta, how Thanksgiving impacts the whole broader market here. I always think Thanksgiving is so interesting in a market context because the Friday is a half day, correct? Am I mistaken?
We'll double check on that, but it should be.
I'm of the belief that Friday is a half day in the market. And so it always, because Thanksgiving must always fall on a Thursday, it always creates this weird situation where it's like market close market open, market closed. Like it's just, you just get 1 second there on Friday. And I always think that Black Friday market action is very interesting to follow because it's often highly, highly volatile as people try to jam their stuff in between Thanksgiving and that following weekend.
No, agreed. But we got a little bit of market action because of that this week. Got some Thanksgiving this Thursday. We got Black Friday on Friday. So it is a shorter trading week. Like Jared mentioned there, volatility has been coming in a little bit more. So I know that VIX position should be working out pretty well, but we got volatility collapsing a little bit headed into this Thanksgiving week on Thursday. But the market has been given a little bit of, opportunities here and there. So I'm excited to get into it.
Yeah.
Anything top of mind for you though? Just Meta for the most part, top of mind this week?
Yeah, Meta is kind of what I'm following, and then hopefully UNH can show us a little bit of life here as well. And then I will also be keeping a very close eye on my Rivian position, particularly the short side of that position, as it's hovering right around the mid-15s right now, and I need that to stay under 16 for another 17 days, ideally. If it looks like it's going to start to break out of that range, I might have to reposition or just get out of those shorts, but still feeling pretty good as it stands right now. What's up, everybody in chat? Jackie, Jared, Charles, Mike, Emilia. Good to see all of you. Yes, Friday short day. Thank you for the confirmation,
What's going
Emilia. Mike, Gus, sorry for asking if last Saturday was the Aggie Longhorn game. I think my subconscious was protecting me from the disaster known as Razorback football. Yeah, no worries. Totally fair question. But yeah, we got it. We got it this weekend. I'm hoping, hoping that pans out well for the Aggies. I will be distraught if it does not. Do not get it twisted. I choose that word very carefully. I will be distraught. But it would be so awesome if we won, because then they're 8-4. They love the Texas 8-4 thing. Anyway, okay, I'm done.
Distraught.
UNH isn't known for keeping anything alive. That's good.
That's crazy. With that being said, we'll jump over to the TradingView platform. No, the market has been a little volatile today. We took off one of the positions. It was our QQQ position we got long, but I took that one off a little early. I wasn't really able to catch the meat of the move to the upside, so we ended up getting that dead cat bounce that we were kind of talking about over the last couple of days. It's looking like the market's getting that right now. So we got a little bit of that bounce. We took off some of the out-of-the-money put spreads that we had sold to get a little bit of long delta on. Now, we sold an out-of-the-money call spread to get a little bit more short delta on, and then in the meantime, through those larger framed, opinions on the market, we're taking some opportunities on the micro NASDAQ at the same time. So we're in a short opportunity right now. Our trade is around 25,048. We're up a few points on it right now. We're up like 50, 51 points, not too bad, but this is the third trade of the day. We're just gonna look to set some stops in, but let me refresh something over here and log back in. So just give me like 2 seconds.
Yeah, we've got like nested dead cat bounces going on. We got dead cat bounces within our potential dead cat bounces.
Right. Yeah, no, it's like the overall market is all following each other. It feels like.
Yeah, and I mean broader market too. I mean, does look like it looks to be working towards higher highs. We've almost fully engulfed this, what was this, November 20th candle now. Is that last Friday, whatever? Was that Friday, Thursday that we had the giant sell-off? It's funny how these things feel like the sky is falling intraday, and then I can't
think it was last
remember
Friday.
what day they happened.
Yeah.
Was it Friday?
I think it was Friday, yeah. Or was it last Thursday?
No, it was Thursday because I think we streamed Friday and things were moving back up, and we were like, this is going to be dead cat.
We got it right here. Let's check it out.
I mean, if I just knew dates, I would know. It's the 20th.
Okay, so this sell-off right here, let's zoom in. This sell-off was
Today's the
20th.
25th.
It was Thursday, the 20th. Correct.
Hey guys, thoughts please. I messed up a roll on CoreWeave. I meant to keep the short 85 call in December 19th, but I accidentally rolled it to January 16th. So now I have December 19th 115 call and January 16th 85 call. I see long and short. Interesting. I appreciate the detailed explanation here so we don't have to speculate about anything that you have going on with this position. Let me look at CoreWeave.
What was CoreWeave's ticker real quick? We can take a quick
peek. CRWV.
CRW.
Yeah.
We'll go back to
CRWV.
CRWV.
Yeah.
Back to NASDAQ here in a moment.
Okay, so you're long the 115 December 19th. Woof. You're short the 85 for January 16th. That is not as woof at the moment. Man, that's really you've put yourself in a bind here. Neither of those is in the spot that you would want it to be. You could entertain. I meant to keep the 85. I mean, I suppose you could entertain pushing the whole time horizon of this thing back, like pushing the December 19th back behind the January now, but then obviously you really mess up, I'm sure, whatever your original thesis behind this trade was. I think if I were in this situation, I would probably just chalk it and liquidate the December 19th as sad as that is to say, I don't know that has a particular ton of life to it. I don't know. What do you think?
I mean, golly, Corey Weave has been absolutely beaten down. I know this was one of the names that I think this was one of Jamal's, names in his basket that he's been bringing up quite often. Didn't recognize how volatile Corey Weave is over here.
Oh yeah. Jamal is a big fan of Corey Weave, like long term and then also short term as a trading vehicle. I'm setting this up right now.
Let's see. I meant to keep the short 85 calls, but December 19th, but I accidentally rolled it to January 16th. So now I have a December 19th 115 call long and January 16th 85 call short. Yeah, here in a moment away, we'll jump over to the Tasty Trade platform, then we'll put that in the options chain. We'll just take a look at that together.
I'm piecing it together right now. Oh yeah, you could just go for it if you want. That's tasty there. And then it's the December 19th.
But if we go back to the TradingView platform, we'll cover some of these trades, and then we'll get into the individual underlyings here. But we did take a few trades today. So with that being said, we got a little bit more volatility into the market. But today we're getting more opportunities. But I've been a little bit cautious, been a little bit hesitant to really take any more directional stabs at the market, just with us having a shorter week this week. But we did take a couple this morning. We stopped out of those two. Then if we make new lows to the downside over here on the micro NASDAQ right now, debating on taking that position off as well. Because again, I don't want to get on too much short delta at the same time, because we put on another position today where we sold an out of the money call spread on QQQ. So not only do we have a short contract on the micro NASDAQ, we have the calls that we sold on QQQ at the same time. So if this reverses on us, we make a new high to the market, or we make a new high on the market today, we're going to close this position right here. But if we make new lows, then we'll look to cover that short to the downside. How's Abercrombie? Is Abercrombie and Fitch still up a massive amount?
I'm not sure. ANF.
Yeah, actually, I can
know who's doing it there.
Yeah. No, it's still going absolutely ballistic, right? Abercrombie and Fitch really popped off in popularity over the last few years. I don't know if you recognize that amongst your peers as well. Abercrombie and Fitch kind of coming back onto the scene. Did you notice that?
I guess. I mean, I don't know. I don't know if I ever really noticed it take a lull. I used to do a ton of Abercrombie and Fitch stuff, like middle school and into early high school. I had everything. All my shirts, my sweatshirts, everything.
Was that like a go-to store from your parents while you were exposed to Abercrombie and Fitch?
Sort of, yeah. I think it was just what I landed on, kind of an efficient market situation. It was just what I liked. It was
efficient market situation.
I mean, it was like
efficient market
American Eagle, and Abercrombie and Fitch, and like all those adjacent stores were kind of floating in the ether. And then the efficient market led me to ANF, and then I kind of graduated into PacSun for late high school into college.
Oh, didn't we all?
And since I have graduated into shirts that I buy on Amazon, pretty much is my day to day. I really like True Classic also for my shirts. Specific shout out to them if anybody's familiar with the brand.
No, I love that. I know down in I know in Tampa at least. I don't know. Maybe sometimes it's depending on where you're at on the map. There's certain trends that arise, but I know down in Florida and Tampa when I was down there, Abercrombie and Fitch got super popular again. So I was like, I wonder if this is like a nationwide thing, just like how certain food places were popular. Down in Florida, wasn't sure if that was the same with Abercrombie. But I'm putting in this, so if we make a new high right now, that would pretty much invalidate, I guess, the trade thesis or trade idea that we believe that we're taking right now. So if we put in a new high, that's where we're going to put our IP, the invalidation point, and that just lets us know, when we want to be in this trade. Because if we put in a new high, it invalidates my original trade thesis. And again, I know it sounds very redundant, but then again, that's what lets me know I don't want to be in this trade anymore. And it really is that binary because the market can only go up or down. So I think we can put it in binary terms like that because the market can only go up or down. So that being said, we're consolidating a little bit here now. I know we're on the 15-second. If we zoom out to the 1 minute, give a little bit larger time frame, you can see we pretty much just broke out and ripped after the consolidation and after the test of the point of control this morning. It's not on this chart, but we can chart it here in a little bit. But the point of control is sitting somewhere around, I think, 24,673 on NASDAQ. So we sold off, tested that a little bit, and then now we're trading outside of our level of value. And then we had a direction to move to the upside. And, I was kind of debating on, taking this long over here at this value area high. Obviously, I was looking to get short here and recognized I was wrong. So when I seen that, I was like, we could have the potential to shift from balance and have more of a breakout type move. But got to ask yourself, after taking 2 losses on the day, Thanksgiving being on Thursday, it's a shorter week in the market. Volume is already a little bit lower because of the shorter week of the market. So it's like you got to, kind of balance the risk that you want to put on. And obviously that long would have worked out. But that was a mental battle for today, at least, just deciding on if you want to make that trade or not, but decided not to take it, decided to take the short today at the next level of value. Will we get rejected? I have no idea, but the market is still proving to not be in a state of balance. That's why we're taking a directional move to the downside, and we'll see kind of just how it plays out. But that's just the thought process headed into it, and just going to manage the risk from there. That's the only thing that's been exciting for the day, though, Gus. I know we've had some other names. I know we've had UNH. That still has some time to play out. I know BABA, some Chinese names have been a little bit active today, too. I know crypto has been pretty active, too. I don't know if anybody else is trading crypto. Have you heard anything from your crypto boys at all?
I have not.
No.
I have not heard anything at all on the crypto front. I'll tell you what's making me mad is Novo Nordisk.
Novo Nordisk, what's it doing over there?
NVO. I've been long Novo Nordisk for some time, just on the thesis that this is a really strong company that's like down in the doldrums, and it was basically a gamma play. I was just thinking, if we can catch the upside, because it only takes one like super successful trial for these pharmaceutical companies, and you'll shoot up 25%.
Right.
So I took just a naked leap on the thesis that Novo Nordisk, it's just NVO. Novo Nordisk would eventually catch a bounce here, and I would be able to get gamma juices those up, and I'd be able to get out. That obviously hasn't manifested, but what's got me pissed about Novo Nordisk specifically right now is that for like the entire month of November, they've been hyping up the fact that they are doing trials on GLP-1s, or maybe it was semaglutide. Are those interchangeable words? I'm not entirely sure. On Alzheimer's.
Right.
They were like, we're doing research on Alzheimer's. We're doing research on Alzheimer's. Big reveal at the end of November. We're doing all this. And then they come out and say that nothing happened, that it was unsuccessful, and that they knew it was a long shot the entire time. What do you mean you knew it was a long shot the entire time? They were hyping this up like it was going to save the company. I thought it was going to save the company.
He said they high-bought into it.
Yeah, so anyway, they took a dive on that back yesterday, and have pretty much gotten all the losses back. But that was not the home run, slam dunk, slap shot, hole in one that I thought it was going to be. How many sports analogies can I do here that I thought it was going to be? Instead, it was a gigantic nothing burger, and now I would exit if these were not so close to worthless that it just makes sense to keep holding them. But that's where we're at.
Massive gap down, and we've recovered the entire gap. We've almost recovered the entire gap. I think we're 47.56. We recovered the entire gap right now. We're trading 47.10 on NVO, so we're almost there. Such a short amount of time.
What happened in Lilly for making it shoot up? I guess they passed something. Yes, Lilly had, I think, as I recall, cheaper options is the deal. They've managed to make their manufacturing the weight loss drugs cheaper now. I think is part of the thing with Lilly. NVO has been all over Wall Street bets. Bummer. Maybe it should be a filter like liquidity. Yeah, and I mean, NVO has been a value trap. Yes, precisely. And I am in it. I have my foot in the value trap.
Eli Lilly looks insane. We can jump over to the Tasty platform and check out these other individual underlyings.
Yeah, fun thought experiment of if I had just taken leaps on Lilly instead of Novo when I did.
Right.
Hindsight's always 20/20. Maybe I'll just YOLO everything into short Palantir.
Honestly, that would have been the move. So. Market's kind of consolidating here, so we'll take a quick look here in like 5 minutes, see where we're sitting. But with Eli Lilly's been going on an absolute tear, big deal. So give us a heads up next time on this one. But with that being said,
next time you have insider info on Eli Lilly, as you clearly do right now.
This man, big deal over there, hogging all the info. But with that being said, we were consolidating for a while in Eli Lilly. I mean, trading within a range from 915. And inside of 680, really wide range Eli Lilly was trading on. Now we're kind of breaking out of that range.
Yeah, Eli Lilly is oral GLP-1s and cheaper. That's the two reasons.
I gotcha. No, it's looking like they've maybe been running off of this sentiment for quite some time now, maybe even a little bit before they released the news. It's kind of seeming like the market was pricing that in because we've had such a massive move prior to the announcement. With that being said, IV rank is pretty low on Eli Lilly. Surprisingly, the volume is only trading at about 1.99, just under 2 million shares on the day. A little bit surprising considering how large of a move that it's kind of putting in.
Well, yeah, and they're the first pharma company over $1 trillion now. I mean, you would expect $1 trillion company to do more volume than that.
You would expect at least 10 mil volume. What we got going on over here, Eli Lilly? We got the CEO and we got the board members trading amongst themselves on Eli Lilly right now.
Dan said, "Gus, chew your leg off. You'll get out of the bear trap." I could have chewed my foot off like 2 months ago, but now it does have to be the whole leg.
Careful on a gap on Friday.
Careful on a gap fade on Friday.
With that being said, we got the OKLO position on. I know OKLO. I think Nick was trading this one a little bit more often. It's not doing anything for me, so I don't think this is going to be one of my stocks, but we're pretty much break even on it. We're down about $18. Testing the put side right now. Maybe we can look if we can roll that call side down a little bit. Let's see if we can get a credit for it, actually. Let's see if we roll these strikes down a little bit. What will we get? We can get a little bit of a credit. We can get a credit because these strikes are sitting pretty far out of the money on the call side and pretty far outside of the expected move. We can at least bring it right inside of the expected move. Man, these markets are pretty wide, and honestly, it's not even that great of a credit that we're collecting over here. These markets are pretty wide on OKLO. But we're just going to put that in and see if we somehow can get filled. Very wide markets. Might not be able to roll that.
I'm frustrated. My directional trade isn't working, so I'm going to go neutral instead.
I'm going to go neutral instead. What is that?
I like it.
For OKLO?
Yeah.
Oh, yeah.
If we're talking neutrality, a little bit. I'll throw some other neutrality. Well, Rivian is king neutrality, but Starbucks has been incredibly neutral for me for the last few months, which I'm fine with because I just need it to hang over 80 for
some S-Bucks?
Considerably longer.
What you got in there, like an iron condor?
I have a formerly 3x2 trimmed down to 2x1 amid last week's sell-off. 80-75 short put vertical, which is bullish. So I need it over 80, but my time horizon on this was radically too long hand up on that one. So I have 205 days left that I needed to stay over 80, and I'm actually in the red, despite the thing being at 85, just because theta has not played any semblance of a factor yet. But yeah, this thing, it just chops. I mean, for the past, what is this, dating back to like August, like the beginning of August, basically. Mid-August, we just have this chop between, highs of 90, but then more consistently 87 seems to be the level, and then it goes down and it tests 80 and it comes right back up, and we've just been hanging there for a little while. And my long-term bullish thesis still absolutely holds up. I'm basically just buying Brian Nickel here. I think he's going to revolutionize this company. So I don't know that I necessarily want to get neutral for anything super long dated, but as it stands right now, we are seeing some serious chop on Starbucks.
No, a little bit of serious chop, no doubt. I like those neutral strategies. It's been a little while since we traded something like Starbucks, but with it moving sideways, the IV ring's pretty decent, not going to lie.
Market's finally breathing a little. Take the credit and roll. Oh, that's a good point. Well, I don't. I suppose I could do that. Roll it closer. I never ever think about rolling things closer to me. Could you do anything in cost? Asks Brian. Surely you could. Costco. What do we got here? Are they split this soon? Am I hallucinating that?
They should. I would.
They should.
I'd do
they
it.
should. Gus Downing will die on this hill. If your stock is over $500, split it. I don't care what you're worth. I don't care if you have 4 shares and your company's valuation is $2,000 and you have 4 shares at $500 each. 10-to-1 split. Right then. I'm sick of it.
And then
split
if it goes up $5 after that,
yes,
you're now above $500 per share. So split once again.
Exactly.
Yes.
Exactly.
Dilute those shares.
Yeah. Dilute. It doesn't dilute my shareholders.
No, right.
And it makes it more affordable for everybody. It's just, I don't know. Obviously, you can trade partial shares like literally everywhere under the sun now. This is sort of a old school argument here, I guess. But yeah, no stock has any business being over $1,000 if it's not called Berkshire Hathaway Class A.
No, agreed.
They can do whatever they want. Our King Warren, he can make his own rules. Who am I to tell Warren Buffett how much his stock should be worth? But I will tell Costco that their stock's too expensive.
Gus Downing, that's who you are. Gus Downing.
That is who I am.
Yeah. Now, with that being said, the market's been consolidating for like the past 10 to 15 minutes while we've had this futures position on. So we'll kind of see how that plays out and how we're going to manage it. But we'll manage it if we return to the highs. But is there anything else top of mind sticking out to you in the portfolio? Any names that you're going to be keeping an eye on into the close, into tomorrow, market sentiment, market news, anything?
Affirm, AFRM.
Some Affirm.
it was starting to die for me. I was thinking that I was Michael Burry brilliant here, and then we've kind of bounced a little bit. But Affirm is something that I will be keeping a close eye on. It's just, I mean, my nakeds are very few, and so anything where I am naked, I'm going to have a pretty pointed eye on that. Novo Nordisk and Affirm both fall into that camp. I wish I was defined on Novo Nordisk, but yeah. So I'll definitely be eyeing Affirm. This is, dare I say it, actually kind of a similar play to Novo Nordisk. It's just a major gamma play, but to the downside, because I think this BNPL bubble is going to pop. Even if the BNPL bubble doesn't pop, if a firm moved down to trading at a 300 PE right now, they would be worth, quick math tells me, $54. That would be a $14 dip, and they would still be trading at a PE of 300. So, yeah, I am majorly bullish on Affirm. I will be keeping a close eye on this one, and I will be here when it goes to zero.
I'll be here right by your side when it goes to zero, guys.
AutoZone ticker AZO enters the chat. AZO took a bong hit, says Dan. AZO. I might know why this is. Hold on.
I'm gonna assume they're in the clouds, is what you're saying. Yeah, they definitely did. IB rank of 73.5. Very, very low volume trade on AZO. I bet if we go to the 1 minute chart, it looks a little choppy here. And there we go. There's the chop. There is the chop.
I can't seem to find anything about why this is popping. I'm not sure.
I like expensive stocks for cowardly iron condors, 5 to 10 DTE, about 10 delta. That's a very valid take, very, very valid perspective you got on the iron condors for some expensive underlyings there. I will say, if it wasn't for the iron condors, I wouldn't be able to trade some of these more expensive underlyings that are even, above 300, 400, 500 bucks.
Everything I can find on AutoZone is like highly technical. Like, from what I'm gathering here, analysts love it, but it's for like all the most boring reasons. Like, they really love the valuation. They love that they've offset margin pressures from tariff-related costs and a non-cash LIFO charge. All types of stuff, but it's all highly technical. I can't seem to find anything like super breaking on AutoZone right now. Which there has to be, though. There has to be. There has to be. It's AutoZone, for crying out loud. It doesn't move like this.
No.
Oh, we were referencing stocks that are priced stupid high share price. Oh, I didn't even notice. I thought this thing was $393. What is this? $4,000 a share? Get rid of it. You should. Oh my gosh.
Get it out of here.
200 to 1 split. I decree AutoZone has to do a 200 to 1 split today. You hear the ka-ching. Yesterday. Have it on my desk, yeah. AutoZone. Golly, $4,000? You're AutoZone. I thought it was ridiculous when Chipotle was $1,000. Okay.
Dr. J chooses bad coffee over bad stale chips. Can you blame him? No.
I buy my auto crap at Walmart. AutoZone is expensive. That's true. I find myself a O'Reilly's man if I need some parts. O'Reilly's is just great customer service in general. I've come to find.
That being said, we're running out of time here. Anything else top of mind before we wrap it up for the day?
No, nothing else. I'm gonna go do some research on this move in AutoZone. Cool. I'm curious now. You guys have opened a can of worms for me.
Yeah, we'll see how far this dead cat bounce wants to bounce in the market. If we make new highs in the market, we're gonna manage that micro NASDAQ position we have to the downside because we already have some more short delta on. So just want to keep a focus on that as we head into the Thanksgiving portfolio. But with that being said, thanks for taking the time to hang out with us today. Be sure to stay tuned for more segments coming on next. We will catch you guys next time. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
tastytrade's Money Match event. Unlock 30 days commission-free trading. plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Jamal, it's still Tuesday, November 25th, 2025. This is Futures Power Hour. I'm your host, Chris Vecchio. You are still Jamal Chandler.
I am.
How are you doing today, buddy?
Fantastic. Fantastic. You know, it's a great day. The markets are up. Tell the truth. You were really, really glad to see me this morning on Let Me Explain. I know how it is. I've been there when you talk to Tom and Tony back in the day, and now it's, you know, Tom and Nikki, but they just don't get you. I get you. You were really excited to see me this morning, weren't you?
Relieved, quite frankly.
Yeah. I know how it is when you're presenting a new age topic and those dudes are like, that doesn't make sense. I get it.
You know.
I do know.
You understand the plight.
I do.
But now the inmates run this asylum, Jamal.
That's right.
So we're going to talk about TPUs if we so feel like it.
As we should. No, this is an interesting day here. It's funny. talking to our good friend Josh Fabian yesterday, and he was like, "Are you going to sell some? You should sell some SPOOs here." Yesterday when it was up 100, I was like, "Nah, I really want to see if there's going to be continuation, even if that means that I'm at risk on some of the long delta positions that I have." I really felt like there would be continuation. Not saying that we're going to end the day here or even higher, but I felt like there was a possibility for it. Sure enough, that's what's happening today. I'm glad my bet kind of worked out, and so I've been riding long deltas.
Riding long deltas has been the way to go. This morning when you and I were talking about, potential signs of the market turning around, wasn't looking like a good observation, but 100 points higher since then in ES on strong volume, on improving breadth across the board. Friday, of course, saw that big vol crush that continued into yesterday where the majority of single stock names saw volatility just fall off a cliff. Today, we're seeing that the equal weighted indexes are moving well above their market cap weighted ones that we look at here on Futures Power Hour. You're seeing some churn in the AI space related to Google and Meta and Nvidia, Oracle, Microsoft that carries some interest as well. But we've also had a bunch of U.S. economic data today, Jamal. We were blessed with a very disappointing consumer confidence reading that has all but gilded the lily for a December rate cut. A December rate cut, which, by the way, if you've been taking a look at these rate cut odds as they've moved across the session, we're now sitting around 83%, continuing to bump back up.
Yeah.
From yesterday, from a week before, from where we were 2 weeks ago, in part because the economy seems to be slowing down. I use air quotes like Dr. Evil there because, quite frankly, going from 4.2 to 4% in the Atlanta Fed GDP is not necessarily anything other than a minor wobble, nor is it anything to write home about. The New York Fed is a little bit more placid about the situation. It hasn't been really moving up and down either way, and it hasn't incorporated today's data yet, for the record. So this is still the reading as of November 21st. Still 2.5% growth there. So we may be getting a rate cut, Jamal, with anywhere from 2 to 4% GDP. No wonder stocks are flying. That seems kind of reflationary. I guess we're going to run it hot for a little while. But what's your takeaway with this market action? Because this is a heck of a turnaround. I don't really think we need to linger on these GDP slides. We can go right to what's been the EKG market today, where we had that big sell-off this morning during Let Me Explain. We bounced back, up 40 handles, down 40 handles. Now here we are at 67.71, nearly 100 points off the low at this point in time. On high volumes, 1.14 million contracts traded, Jamal, and that continued vol crush here. What do you make of this market heading into the holiday now that we've had this big turnaround intraday?
Well, that's just it. The fact that there's 1.15 million contracts traded on a Tuesday right before Thanksgiving, I think, is a positive sign. It tells you a lot. The other thing I have been, it's something that I'm intrigued with, but it's something that actually somebody in the chat made me look at and double check this morning. I'm always talking about intraday ranges, you know this. If you've been paying attention to a lot of them more recently, let's just go back to last Thursday, which obviously was a crazy intraday range, 241 points, right? And nearly almost, 3 to 4%. 153 on Friday, 106 on yesterday, and then 99, and let's just call it 99 and 3/4. Let's just call it a 100-point range, right? So why does that matter? Well, if you look back over certain periods, 9-day, 14, 20 days, and this gets to the question, I know some people are looking at things today and saying, well, why is VIX still where it is right now? Well, today we have a 100-point range. Over the last 9 days, the average range has been 119. Over the last 14, it's been 101. Over the last 20 days, 89. So you have to really get to 20 days before we get below where we are right now. So truth be told, we have a pretty decent range, and it's basically within the 14-day range that we've had. But I think if you start to see those ranges sort of tighten up over the next couple of days, which potentially could happen as we head into the holiday, or they could get crazier. Who knows? Obviously, we expect a little bit of liquidity to leave the system here over the next between Wednesday and Friday. I think that's your real key here to see where volatility is going and if we have a chance to keep moving higher.
You know, one thing that I take a look at, you talk about these trading ranges. I look at ATR every now and again. It's not something that I consistently look at, average true range.
Yep. I have that here too, actually. But yeah,
you know, and I put the 14 period because the 14 period is the standard, which 14 period for like RSI, it's half the moon cycle, which is how they came up with that number. I kid you not. So I don't really, 14 as a standard. Okay. But let's just use the standard default that people would see on the platform. And in fact, maybe we just put this up here,
Yeah,
Jamal,
I'm sure it's
rather
in
show
there.
than tell.
Yeah.
Average true range. So let's put up ATR, average type. I do exponential. Length is 14. Yeah, and we got to go to a daily chart to get here. So the ATR for the S&P 500 recently crossed 120. What is the ATR? The way the calculation works out is you're finding the maximum of three different values: the current high minus the current low, the current high minus the previous low, and the current low minus the prior close. Calculating the initial ATR, you're finding the first ATR value. I actually don't need to go into this. I'm wasting everyone's time. The point is that when you exceed 120, that's a fairly unique occurrence. We're paying attention to what's happening in this bottom bar here. And for the sake of this conversation, let's actually turn this into something a little brighter here. Let's turn this into bright yellow, Jamal.
Ooh,
okay.
Yellow.
And I think even the continuous contract to better exemplify the point. So it's at 120 right now. When have we seen it cross 120 in the past? Well, we had it cross 120 in April, which if you were looking at a market thinking that this is too much range, there's too much gyration in the market and it's bound to calm down. If you thought about this on April 3rd, you were a little early, but previous times in March, if we scroll back through history here, here's another instance when you cross 120 right near the lows that you have back in August of 24, following that obvious Japanese yen carry trade day. We have the lows in April 24 around the Israel-Iran tensions. ATR is north of, getting into that zone where it becomes problematic. The point is that volatility has gone up. We talked about the VIX spread yesterday on overtime, today on Let Me Explain. And you're seeing the market behave in a manner that if we are making a turn, there's a lot of different technical pieces on the board to give you that confirmation that even today's intraday reversal in the VIX, Jamal, you're not seeing that type of fear stick around because this is a market that isn't overboard on its long positioning right now. There's a big wall of worry here. And it's not something that you can ignore or dismiss as a catalyst for this market to rip into the end of the year.
Yeah, and that's the thing, right? Like how's that wall of worry doing, right? I mean, obviously we saw some remnants of the worries about AI valuations a little bit this morning, but they quickly kind of faded, which they're not completely faded, right? You still see AMD and Oracle down on the day, and Nvidia as well. And again, that's not really. I should preface that that's not really AI valuations. That's just more like Google is taking market share away from those guys. But again, you're just still seeing these big moves in those names is really the point here. But yeah, something else I've noticed. I mean, a lot of what's been carrying this market over the last month has been the healthcare names, and I'm really not looking to trade any at the moment, but just out of observation, like those, you look at XLV, you look at Lilly, those are the type of names that have been carrying the market here more recently. And the one metric I look at a lot, the number of S&P 500 names above the 50-day moving average is upwards of 50% at the moment. Sharply higher from 30% just a few days ago. So there's changes that are happening that make you feel like things are calming down some. This could all be smokescreen, and we could get a little bit worried again heading into the Fed meeting starting next week, right? So it's one of the reasons why you got to be nimble, and you don't want to put all your eggs in one basket in the near term, trying to YOLO calls, expecting the market to just rip higher because everything is over. I don't think that's quite the case yet, but I think you've had some volatility to be able to sell a little bit, and that if you've done that appropriately, that's kind of worked out.
Yeah, you mentioned the number of stocks above their 50-day. I typically, when you're in a territory where the number of stocks above their 20-day, 50-day, and 200-day are all north of 65% at the same time, you're getting into some territory where it gets a little bit frothy, right?
Yep.
The 200-day one, that happens rare. So like you're focusing on the 20 and the 50, and the threshold for me is above 80%, and just those two in conjunction. And coming into today's session, today it's obviously improved, but coming into today's session, the number of stocks above their 20 was 47%. We'll call it 48%. And for the 50-day, it was 41. So like talking about that improved breadth over the course of the session, you're seeing more stocks start to turn higher above some of their recent moving averages. And that it shows there's also momentum kicking in now. these rates of change are becoming positive, and you get momentum junkies like myself who like to latch on for short-term trends, seeing that the tide has turned a little bit here. So seeing this extension today is not surprising, but are we out of the woods yet? I mean, yesterday we were talking about thresholds where I would want to really double down and say we're in the clear. We got to get through Thursday's highs. We got to get through Thursday's high in the S&P 500 at 6791. We got to get there on the NASDAQ. That's 25,310. We haven't breached those levels yet. So we haven't necessarily broken the series of lower highs and lower lows. And it's unfortunate that this is a holiday shortened week because I feel like the story is going to be cut short before we actually know a resolution to it.
Well, it kind of reminds you a little bit of what we dealt with at the in the middle of October there, right? I mean, when you look at the chart pattern, it's a little bit of that. And so we needed to clear some highs. It took a little bit of time. I mean, it looks like it took about a little over a week and change. So we got to give it a little bit of time here. I mean, you know, with no real research to this in my mind, a lot of times these type of things can work themselves out over a shortened holiday or sometimes get worse afterwards. And so I think that's what we're up against right now. I mean, we really have no idea of knowing until we're on the other side.
We don't know. So there's a few technical barriers that remain, namely today, where are we finding resistance first off in these equity markets? In the S&P and the NASDAQ, at least, it's right near their 1-month moving average, which has been a little bit less support and acting more like resistance recently. We failed to climb through there last Thursday or last Monday, both in times of the NASDAQ here, treating it as resistance, Jamal. So perhaps today's a change of pace. If we can punch through there, that's 25,058 right now. In the S&P 500, you got a similar story, except this time we are punching through it. So a little bit more positive development there. And then nothing speaks to the broadening rally quite like the Russell, which as of a few days ago looked like the cruddiest crud here on the board. Now all of a sudden is looking like the best thing since sliced bread, Jamal. It's back through the neckline around 2,400. It's breaking the downtrend off the October and November highs. I guess you could say there's a little bit more wood to chop. You got to clear 2487 before you're clearly out of the woods. So another 1% or so. But this is another indication that this rally is broadening it out. And how many times in recent years have we seen the Russell have just a really explosive late November, early December, outpacing the rest of the market as traders feel like they're underweighted to stocks that have exposure to a U.S. economy. A U.S. economy, by the way, that as we just reviewed, that may be growing at 4%.
Well, how does that make you feel overall when you see, S&P, NASDAQ, Russell, and Dow all sort of 3 days in a row to the upside and all sitting around some moving averages where if they pierce through, we could get bullish? I mean, how does that make you feel? Does that make you feel nervous as we get near there because they could reverse, or do you feel encouraged about that?
I'm like the Hulk, Jamal. My superpower is I'm always nervous when I'm trading. So I wouldn't know if that's a new feeling. No, if I had some short-term exposure here, right? Like if at the end of this week, it's 21 DTE, if I'm in that neighborhood, really like my level of concern about a position is directly scaled to how much time I have left. Mm-hmm. If I have a week left on something versus a year, I'm going to respond very differently to a 0.5% drop or a move against me.
Yeah.
Yeah, I mean, where I sit, where I stand, the Russell thing is a little painful today because it's a position in which that I still have the long put spread on. But quite frankly, I don't see a rationale to have it anymore because we're no longer sitting below support levels and the S&P 500 is ripping back. My weighted exposure between the two is that I'm more long the S&P because it's long ES or MES as opposed to the Russell position, which is more of a defined risk and it's bleeding out a little bit more slowly. So net, I'm long more S&P than I am Russell here, but doesn't mean I'm actually loving the positioning decisions I've made of recent. I'm happy that I've stayed long MES. I'm not happy that I'm not long the Russell throughout all this. So I think the only adjustment I'd be making is I guess I would have to get long a little Russell and maybe put on a short put or long put spread in the NASDAQ because that's been the laggard. And given the index weightings of what's really been pushing the NASDAQ higher, for looking at a leadership rotation away from the Nvidia flywheel and into the Google flywheel, there's just not enough there in the Google flywheel there to keep the NASDAQ pushing to the upside the way that the Russell could if we get those rate cuts with a hot economy in our pocket.
I mean, I hear you. If there's one to take a short position in, it's the NASDAQ. I mean, it is a little weak considering a lot of the names that we've talked about, right, have struggled. And so if there is one to do it in, Chris, that's probably the one. Because we just talked about it. S&P 500 has some healthcare in its sales, and it's actually helping push it a little bit higher. A few other different names, if you will, but healthcare's kind of been leading the way just from my quick eyeing of different names that have done well over the last month. So, I mean, the NASDAQ would be the one.
And healthcare is one of the top performing sectors today, up 2.02%, which it's an interesting leadership board today. You get retail XRT is at the top, up 4.32%. Can't ever say that's a problem. Home construction, home builders, those are also sitting near the top, which interesting reversal here, Jamal. It had been a really soft market over the past few months. We fell below the uptrend from the April and the June swing lows. And here we are today, breaking through that again, breaking through the downtrend that's carried us here off the highs in September. So home builders are a really interest rate sensitive name. So this is like, there's a strong vote in the market today that we're getting rate cuts, that the economy's in bad enough shape to justify them, but not in bad enough shape where we think we're going to get a recession. Like maybe this cut helps nip things in the bud. It's quite the gamble, but everyone's in a risk-seeking mode. You have discretionary likewise bouncing back in a very strong fashion. Financials, XLF and KRE. XLF never broke down, by the way.
No, didn't.
We were watching this as it was teetering. It never teetered. It only teetered. It never toppled. KRE here, likewise.
And that's great, man. Like we need these names. We haven't talked to. Look, again, we've been doing shows for 3 years now. For the better part of that time, we're talking about tech, right? Like there was a small time in 2022, I feel, was the main time, late 2022, when we were talking a lot about Russell. We were talking a lot about financials, but I mean, I can't wait till we're talking about home building stocks on this show and pleading with the CME to get a home builder future. You know what I'm saying? Like I can't wait for that because it has been a long time coming for a lot of these stocks. I mean, look, I love trading the tech names as much as the next person, but I'm only trading them because that's where the liquidity is, that's where the heavy volume is, honestly. And so I think at some point or another, it might be a while. Who knows when that's going to happen? But at some point or another, there will be more and more rotation into some of these areas of the market that have been underserved that we're talking about.
You know what's the best part of today's rally, in my view? It's the fact that stocks are up while Bitcoin and Ethereum are down.
Yeah.
These have been...
It's different.
It's different. And I know that we're off the lows here, right? So it's a different market than it was earlier today. And sure enough, after that brief sell-off around the US Open, Bitcoin stabilizes and starts moving higher. So it's not, down on the day the way that it was. Yeah. And its rebound has tracked what's happened in broader equity markets. But it's still down. And the fact that it's down and stocks aren't, sure, your NASDAQ is lagging a little bit. But maybe we've started to clear some of this sentiment issue from the system. Like that impulse has finally worked its way through. This to me is the whole key. If we're looking over the next few days, right, stocks are not trading, but Bitcoin is still moving up. Green week at the close. Friday, Black Friday, that may have been last week. We may have had Black Friday a week early after Thursday's sell-off. So if crypto, we're looking at like a 90K Bitcoin tomorrow night, Thursday afternoon. We're looking at green futures Thursday night. We're looking at a market that's going to probably have a pretty good Friday.
Yeah, I would think so. No, that's a really good call out because it's different. I mean, I've talked a lot about this over the last couple of weeks ad nauseum in some regards, but Bitcoin, S&P, and gold largely been moving in the same direction, kind of higher correlation. And it's different today because the fact that Bitcoin is down. Now, if Bitcoin somehow turns around, I agree with you. I think that will actually push markets a little bit higher. Because again, it just means that there's another thing to buy. And that's just, there's been that high correlation between those three. I can't figure it out fully. I guess they just become, all of them are just a symbol of risk on assets now. Because look, it was not too long ago that a day like this in gold would probably see the markets being down, but guess not.
Guess not. If Ethereum and Bitcoin keep fading, maybe it has some issues for gold and silver, and perhaps it spills over into stocks later in the session. Gold and silver have sagged a bit as Bitcoin and Ethereum have lost some of their gains over the past 30 minutes to an hour, Jamal. But outside of that, stocks, they're just rotating. Again, the big thing here, RSP equal weighted S&P up 1.3 compared to our S&P futures, which are only up 0.74. Your QQEW, your equal weighted NASDAQ, up 0.81%. The NQ futures, those are up 0.37%. And of course, the Russell is up nearly 1.9% right now, leading the way. So small caps up, regular kind of tech stocks up, Jamal, retail, healthcare, interest rate sensitive things on decent volume, strong volume, improving breadth.
That's the big part, the volume. Again, I mean, like to have volume like that on a day where we're heading into possibly a low volume period. I mean, that's the part that I think you can hang your hat on the most. So I don't necessarily know if I'm adding here. I mean, again, speaking personally for myself, I don't necessarily need to. I got a decent amount of long plays. I don't necessarily know if I'm adding here. I'm just watching closely, I would say, to see if there's more confirmation for follow through.
We will see if there's more confirmation for follow through, as we are going to be back on overtime later. But until then, we have more to talk about here on Futures Power Hour for other markets like bonds, which are having a pretty good day. They're not quite at their highs, 117 and 24 ticks right now. The high was 117 and 31 ticks. But it's another day where we're kind of just squeezing to the upside, and yields just kind of keep dropping here, Jamal. 10-year yield is flirting with a break of 4% right now. So our positions that are effectively looking for lower yields or higher bond or note prices, it's working out thus far. It's been really nice acceleration the past few days, at least with respect to ZN, the double bull, short put spread, long call spread, as I like to call it. We're moving up towards range highs, though. So if this was a week in which I was looking at expiration and we have the holidays coming up, today is a good day just to roll the position, if that's something people are still interested in operating around. Otherwise, for the people who think this is a range-bound market, you're getting pretty close to resistance. So maybe it's a time to take a quick short. Although I don't know if selling a call spread here is the right thing, considering it's a 5.9 IVR and people tend to panic buy treasuries, right? So if you're wrong on a short call spread, you're probably going to get whacked right away. Vol expansion, sharp updrift in price, from my view. I still like this on the long side, though, Jamal. It's one of the positions where, unlike stocks, there could be a little bit of skittishness hanging on to something going into a market close period. Bonds, cool as a cucumber from my perspective.
I think I remember when you put this on. I mean, is this the market that you expected it to thrive in? I mean, because it seems kind of right. Yeah, that's like. I mean, hey, whatever. I mean, I'm sure you'll take it, but I know it's not the market I expected your trade to thrive in either. I mean, and again, when you look at this, it's worked when markets were down, and it's worked when markets are up. That's. I think this definitely. Again, we always talk about how obviously when the Fed makes moves, it affects this to some degree. Not obviously as much as it affects the near part of the curve, but this still speaks to how crazy that whole thing moved around when we're talking about the chance of a rate cut.
Yeah, I think the thesis that I laid out for some intellectual consistency is that when the U.S. government reopens, we finally get the data are going to be so bad. Because if the data were souring in August and September, what happened during October when we got rid of all that aggregate demand, then surely the Fed would have to cut rates in December because we would be looking at recession. It looks like the Fed's going to cut rates. Doesn't look like we're looking at recession. The data haven't been terrible. Some have been awful. The consumer confidence today was awful. But consumer confidence has just become like it's become a political proxy, basically. I take such issue with how those are conducted. And more importantly, you can just see that within the data series itself. I digress. But we're still having higher prices, so right for the wrong reasons, who cares? The goal is to make money. We were in the right place for the wrong reason, but at the right time.
Amen.
Chalk it up to a win.
That's what it is.
Always reassessing priors, though, right? Like, why this time? And it certainly begs the question. I haven't had a chance to talk about you with this that much. It feels like in past months, whenever Fed cut odds have gone up, we've seen treasuries get hit, right? There's that reinflation mantra.
Yeah.
You're going to pour gasoline onto a fire? Okay. Why is it different this time?
Because they're eliminating every data point and dates that is out there. I mean, that's why, right? There's no CPI coming. There's no jobs report coming. I mean, I don't know. You tell me. That's what I think.
I mean, yeah, that's as good of an explanation as any. Even with this upward price movement, Jamal, one of the accolades of bonds that I've been pitching is not just the lack of correlation right now with broader equity markets, although the past 3 days, obviously, they've both gone up together. The volatility is really low right now. So it's not your typical tasty trade where you go in and look to sell puts or anything, particularly right now, north of 117.5. There's a better deal down there when you're sitting closer to 116, which in recent months, if you go out to the continuous contract, you can make an argument that 116 or so, 116.5 has been more or less a ceiling from May through August, and then September onwards, it's been a bit of a floor. So when you're close to 116, being bullish against it makes sense. But now that you're up near a recent swing high, establishing a fresh long position vis-a-vis a short put spread, you could be right, but you might have to deal with a bit of pain first and really ride this into expiration to see full realization of the position. So instead, right, looking at some out of the money things that are on the call side, like at 59 DTE, looking up into the recent highs near 119, 120. If we wanted to look at something like that, a simple long call spread here for further extension, it's almost a 2-to-1. It's a 2-to-1. You're risking 1 to make 2 at a 43% probability of profit. But it's a cheap trade because volatility is so low. And if you're expecting a swing higher in bonds, I much prefer that than say, let's do a short put spread on the other side of 116. Max profit potential is lower and the max loss is greater. So you got to take what you want to get right now if you want to be a bull in bonds. You just got to structure the trade the right way.
Yeah, either way, I think the risk to find works. But yeah, I mean, I think you know this about me. I would definitely much rather the upside play vis-a-vis the call spread for sure. And I'll tell you what, Chris, regarding your win on your trade, I'm going to say something to you that's become a bit of a mantra here in Chicago. Okay, you don't apologize for a win. All right, you don't apologize for a win at all. You accept it.
A few good games from the Bears, and all of you guys are unbearable.
You don't apologize for a win, Chris, okay?
I'm not either, because you and me both snuck into the Tasty Fantasy Football playoffs this year.
Snuck in? What are you talking about? I'm number 2, baby. I've been
A
busting
few
ass
weeks ago,
until
you
last
weren't in the
week.
picture. Yeah, well, you had like a string of like 4 weeks where you cleaned up.
I did, yeah.
I think you were like 7-1.
Yeah.
It's a nice finish. I, on the other hand, fell flat and somehow landed in there. We just got to beat Ryan. That's really the most important thing.
He's got a tough team, man. I thought I had him, man, and he got me. He got me this week. That's all right, though. I'm gonna see you again, Ryan. I'm gonna see you. That's right.
We're just gonna get a shot at him. I'm gonna try to take him down first in the first round, and then you have your pick at him. So I'm at 31 DTE and the notes position. This would be rolled. I really do like the double bull structure. I think I would structure it a little bit differently, get a little bit more aggressive, and see if 113 holds on a pullback. But either way, this is something that I'm comfortable holding through the holiday. It bears no reason to change ground. And worst comes to worst, let's say the data that's out tomorrow morning, it's awful, recession, stock sell-off. I would posit that it's probably going to be good for bonds.
What's out tomorrow morning? Well, I know you're going to mention it anyway, but what's out tomorrow morning?
There's a few things. They canceled the GDP report, which is technically still on the calendar, but the calendar doesn't remove events.
I mean, I think it's hilarious, actually. I mean, Josh corrected me on the fact that they couldn't move the Fed meetings. I'm sure they won't, but, nothing is off the table.
I mean, they could. They could.
I think they could. I think they totally could.
These are like laws of men, not laws of nature, right? We're not talking about like changing gravity here.
Yeah, or cycles. The cycles I mean.
Is gold breaking out? It did punch up to a new high today, relative to where we've been going back to the 14th of November, so not too long ago. It has pulled back in over the course of the session, noting that Bitcoin and Ethereum both had slagged off a little bit here. And well, they've been pulling back over the last 30 minutes or so. You've seen stocks run into a bit of a ceiling, so maybe not way down, but certainly if this is a liquidity gauge, gold and silver have pulled back in a skosh as the session has moved on. But it's still a pretty strong day. Gold up nearly 1%, silver up 1.1% here. I have a little bullish falling wedge on this 4-hour time frame for silver right now. So we get our breakout, we pull back into the place where the market starts to break out. We'll zoom in a little bit more. The high that we had yesterday, that becomes support intraday today near $51 an ounce. And we started to turn higher again, treating moving averages as support, which on a 4-hour time frame, what does a 21 EMA mean? It's not like it's okay. Regardless, though, the momentum profile has improved. Volatility has turned up over the past several sessions, right? We had low IVRs in the 40s. We're now back in the high 40s here. And in the most recent 4-hour candle, we had a high IVR of 51.46, which is to say that as this market's breaking out, vol is expanding. And that's what you really like to see if you're a gold or silver bull, just given the cadence of how these markets have traded over the past several months. And really, I go say 2 years now, going back to October 6th, 2023 with that non-farm payrolls report, and then obviously coming out of the weekend from when Hamas attacked Israel, gold and silver have been different animals since then. But that volatility up, price up relationship has been fairly reliable, just as it's been on the other end of vol coming in, price probably running out of steam to the upside, if not ready to come down or already falling. So I'm constructive still here, Jamal. Shocker. But in terms of nervousness, I don't like the fact that we're oscillating around 50 because my strikes are 50 and 50 and a half on that long call spread. So I do think the next time that we get a punch into 52, I'm going to take some profit there and roll out an even longer dated position. I'm going to go out beyond 63 and go into 91, which is still the SIH6 contract. I'm going to pepper in a little 56, 57 into here. Just because, why not? You only live once.
I see what you did there. I heard the 6-7. You didn't think I heard it. That was real smooth. You tried to pull it off. I saw it. 56, 57. I heard it. It was real smooth.
I don't know the reference. Oh, is this the South Park thing?
I don't know where it comes from. 6-7. I know you've had the baby. You've been gone for a little bit. It's a funny little thing. It's been going on for a while. You can look it up later. I know you're becoming a real dad now. This is good. You're joining the ranks of me. You're really not supposed to know that reference. Neither am I.
I try to be like snappy with my wife recently, and I said like goodbye, Felicia, and she's like, holy, that's so embarrassing. She's like, that's not the meme, and you sound like an old man.
It's true. Yeah, you're not supposed to say goodbye in front of that. It's true.
Yeah, that's not how that works. Anyway, 56, 57, it's almost a 4-to-1 probability of profit, 30%. Expiring out in February, yeah, that's something that I'm happy to entertain and give myself plenty of time. 55, I think, is going to be hit if it's as a bullish falling wedge. The way that you trade these technically is looking for a return to the base. So in a bullish falling wedge, that means the high from which the decline began. That gives you a target of 55. I'm already positioned there. I've got my exposure, 55 and a half at 63 DTE, but I want more, Jamal. So we're going to go for more because silver has been working out very well and none of the underlying drivers have dissipated.
It's so funny because I'm just looking at the IV for both silver and gold now in the high 40s. I can't tell you the last time I looked at IV for them because I don't pay attention to it. I trade this thing directionally. When it pulls back, I look for ways to get long, and I just figure the volatility is going to do the rest. We've talked so many times about how volatility is just different in the way that it works in gold and silver. They crash up, right? That's when the volatility goes high. So it's just funny. I don't look at it. What I do look at is when it pulls back, and that was the last time I decided to put on a position, and I've done it in GLD, was on the 17th on a pullback in gold. And again, it still dipped on the 18th as well, but it's been on the move since. I did, the interesting part about all of us moving around, doing different things, whether it's times or different shows, is the interaction that we have with different people. And so for me, day to day, being around Mikey B, I get a sort of I get to hear from him / Nikki, right? Those dudes are almost like one brain in a way. And their trade that they always talked about, their crab trade. I'm like, what the hell is a crab? I used to hear about them. What is that? I don't even know what that is. Well, I know what it is now. And so I use that to sort of put this position on in GLD. It's essentially like a butterfly, but you're just using different strikes. So I say all that to say that I have a crab trade. I actually have two of them, but I'll just talk about one. I'm long the 375 call in January in GLD. I am short 2 of the 400 strike calls in GLD, and then I'm long 1 extra of the 420 strike in GLD. And so that's one way of limiting the risk, right? Did you get me on that? Yeah, short 2 of those.
Yep.
And then I am long. The short. So the short 2 is actually in Dece, so it's nearer term.
Oh.
Yeah. So it's like you space out the butterfly. So you're long 1 long term. I'm long that 375 in January, and then the other options are in Dece. Yeah, and so then you go to Dece.
Which
Sell
Dece?
regular Dece. Yeah. Sell 2 of the 405s. And then, 405. Obviously, 400. Sorry, I'm sorry, 400s. And then obviously your buying power goes up, right? You sell 2 of it. And yeah, I'm long 420. And then I'm short 1 more of the, so I'm short 2 of the 405. So essentially it's a butterfly. You're just spacing out your legs. You know what I mean?
Yeah, I get what you're getting. I'm curious.
You get what I'm getting at.
Why?
So essentially what they're doing is
I
like
get what they're trying to do.
Yeah, it's like a diagonal, right? And you're short in the nearer term, right? And then you're offsetting your risk in the nearer term by that further up call. Essentially all they're doing.
So I'm curious, I guess let's say there are 3 things here on the plate, right? Assuming money is not an object. And maybe you're not using GC to do this, you're doing GLD, where you could obviously scale your position sizing a little bit.
Right.
A little bit more fine-tuned.
Yep.
Outright long gold, just doing this crab, or would you have both on? Do you think that's too controversial? Where you're basically weighing down returns one versus the other.
You're saying would I do this crab trade in GLD, or would I just have a call spread?
Like, would you have this trade on in GLD and also be long MGC? Or is that self-defeating?
It depends. The way that would happen, I would have to work my way into that. So if I put this trade on and gold fell more, and I was like, this is stupid, yes, that's how I would do it. That's how I would eventually be like, okay, I'm getting long GC as well, whether it's a call spread or I'm just getting long MGC future. That's how I would do. Most people probably wouldn't. Most people don't want to double up like that. But for me, if I felt that strongly about it and I felt like I saw a fall that just didn't make sense, yeah, I would do that.
Metals.
But the main reason I decided to put on this crab trade, which I normally probably wouldn't have done in gold, because again, the way the gold moves and the way it runs, I expect it to slightly move to the upside in the near term. That's why I liked this trade. And sure enough, that's kind of what we've seen a little bit. When you look at it from the technical standpoint, it seems like gold is sort of working its way back up here. And if you're just looking at GC contract, I need to see it meaningfully above 4,200, probably even 4,250. And I think that's going to take a little bit, and I'm trying to be patient with it. And so that's why I'm playing GLD the way that I am.
Yeah, Mike has a great write-up on the website, by the way, about crab options, which is just effectively a calendarized ratio or butterfly spread, as he so succinctly put it. And when you're kicking out that long option leg, giving it a further date, you're giving traders more time value as opposed to IV value. I get it. I also just like being directional.
No doubt.
It's probably the right trade. But gold, this is a symmetrical triangle, bottom left to top right of the screen, holding our little envelope here. Same thing in silver prices. Sometimes you just got a race chip. As for me, I like the future itself.
Yeah, it helps me a little bit. I think not, because I got a bunch of different things on it. It helps me not necessarily focus on it as much, right? I mean, on a day where it pulls back some, it's not as annoying. I will say it has helped with that. If this were the market that you and I were trading a few months ago, I don't necessarily know if I have this on. I'm just going straight up call spread because it was definitely pushing a lot higher, right, quickly. Whereas now it's kind of slowed down a little bit. And so it feels a little more appropriate to do this trade.
I hear you. Copper's not quite at expiration here for us. We're still at 28 DTE, but it's a consideration we're going to have to look into next week. I would point out that this is still a market that's grinding sideways. So what do we do with the market that's grinding sideways, Jamal, with relatively high IVR? We look to do a short iron condor. I know the volatility has fallen off here. If we go to CPER, which is the copper index fund, a proxy for the lack of volatility because of the history of the futures contract here on the platform, easy workaround. It's still a 32.9 IVR. So it's not where it was a few weeks ago when this position was initially put on, when the IVRs were 50s and 60s. But in terms of still sizing something up, what I want to go to 63 days here. Recent high, recent low range, 490, 535, 490, 535. So that's inside the expected move, 490. And that's the wrong side here. Go here, 490 and 535. So if the coiling were to continue in the range that's been carved over the past 2 months, which who knows, the market's not priced for that to occur. There's 37% chance for this trade to work out, but you know what? It's better than a 1-to-1. And I think it's an appropriate bet to make, where even if we wanted to widen this out, Jamal, and say, okay, well, what if we wanted to get a little bit of a higher probability of profit here? We could size something up, and maybe that we could size something up where perhaps this is more like the strikes we're trying to do, 5 cents wide. Why would you go so far wide on there? Okay, now you're in the mid 60s. Now you're at a 3-to-1. Obviously, the risk to reward isn't as appealing, but you're giving yourself way more breathing room. And given where those strikes lie, you're talking about a market that's going to have to get up to where we were prior to the tariff nonsense or below the tariff nonsense. That's a bet I'll take, that we're not going to break the yearly lows in silver near 445. We can sell puts down there and get paid out on it. I just think short iron condor and copper is something people should be tinkering with because it's so uncorrelated and it's directionally neutral. It's been working.
Yeah, and the chart says it all. You're right. I mean, it does look like it's coiling. So until it breaks that range, trade it like it's supposed to be traded, which in this case looks like an iron condor.
Maybe it's a coiling spring. Maybe we're getting ready for a breakout.
It could be, but who knows when it's going to break? I mean,
I don't know. I have no idea. I'm not going to play for the breakout. I'll play for the continued chop. And if it starts to get directional, right? If you start to get through 525, you start to drop below 490, change the approach. And if you go with the wider strikes, that's the benefit of the wider strikes. You'll have more time to react and the loss will probably be smaller.
And you could also give it more room to the downside than upside, right? Like kind of almost like I don't remember exactly how the trade I was structured, but my point being is you already have the longs in gold and silver. So if it does break out to the upside, sure, you may lose on the copper, but you're going to make on your gold and silver because you would imagine they're all going to do the same thing.
All going to do something similar. If I want to pick up pennies in front of the steamroller and sell around that low, we could, risk 9, 10 to make one. That's not for me, though. Not my trading style. Russia-Ukraine peace deal coming into focus. Ukraine has agreed to the U.S.-Russian plan with some adjustments, namely the 28-point plan was cut down to 19, which I don't know if that constitutes an agreement then on any deal. Sure enough, the Russian government rejected Ukraine's adjustments to the deal. So even though Ukraine has agreed to a deal that Russia has not, the market reacted quite negatively today upon these headlines. We've been recovering ever so slightly. There's that headline that there's a Russia-Ukraine peace deal. We've been recovering off those lows ever since then, but directionally the market seems to think that one is still occurring. or one might be occurring. I don't see that reading the tea leaves here. But that's the headline that's carrying the day, Jamal. Do you have any insight into how one should trade oil if this news is not fake?
Ooh, if it's not fake, yeah, that's a tough one. I don't know. I mean, I tend to believe that that's not exactly real, or it's not imminent, if you will. And so I think just trade oil the way you have been, which again, you can put an iron condor on that. Those have worked more recently. Another thing that's been trading within a range. You've also been able to do like MCL contracts, which aren't super expensive, being able to buy those and take $100 out of it, maybe sometimes 150 to 200, just depending. So I know I've done that actually a couple of times over the last couple of weeks. I didn't do it today because I had so many different things on that I wanted to save some cash for a trade a little bit better than 100. I wanted to save. I was thinking there was going to be a little bit more downturn, and I was going to look to do a few more what they call the Delta Busters, but I didn't end up doing them. So, and then this thing has bounced back up. It's almost at 58 again. But you can do a couple of different things in here, whether it's trading it for deltas using the micro futures or using iron condors.
We're using the iron condors. I am trying to do the iron condors still because they've been working. Where are you, crude? There's two different things going on here today, and crude is kind of bothering me. So yesterday, the new iron condor was put on. I still need to get out of the short-dated one because today is 21 DTE. This has been a good enough trade. Squeezed a few bucks out of it, $130.
Ew.
Right? If that's what we're doing with crude several times a year, that's fine.
You just mount up the gains.
Right? If only we could do that in crude every few weeks. That'd be nice. Yeah. So the new position's on. This one's coming off the board. I'm likewise still doing my little geopolitical hedges, although those are, the one that's 3 DTE is probably going to expire worthless because we're, from where we're starting from now in terms of a Venezuelan news headline, if that were to be one that transpires over the next few days, probably not getting 63. If the rationale is you maybe get a $2 or $3 bounce when this market was closer to 60, then we're trading at 57, 80. So we'll call it $58 right now. A $2 to $3 bounce is 60 to 61, maybe a little bit more convexity. Yeah, the adjustment needs to be made. We've dropped about $2. We need to reduce the strikes on this geopolitical hedge position. Hopefully it gets filled. I'm just wary of any headlines that occur while we're on the holiday, considering the posture of everything that's going on in the Caribbean. We've talked about that endlessly here, so we don't need to regurgitate it today. But the Russia-Ukraine peace deal certainly bleeds the market out a little bit. Whether or not that's a deal unto itself, Jamal, remains to be seen.
Yeah. I don't know. I mean, the headline was interesting. I just thought it was fascinating that most stuff didn't really move outside of you saw some blip with crude and gold, actually. But outside of that, nothing really seemed to move. As a matter of fact, those things end up kind of reverting. So it tells you that's not quite worked out yet.
Natural gas down 3.79%. And where are you bouncing from and holding right now? You're bouncing and holding near former highs that we had in August and again here in October. Not terrible news for us, Jamal, because we've been looking at a short iron condor position here. How long does this last, though? This is the NOAA 8 to 14-day temperature outlook. It's been evolving the last few days. A polar vortex is about to set in once we get on the other side of the Thanksgiving holiday, Jamal, and is expected to last for 3 weeks. So one might surmise that given, you can draw a straight line through Indiana, 70% of the population's on this side, and most of us are up here. Yeah, there's how far can natural gas actually fall is a good question. But with a 52 IVR, I don't think there's a need to be directional, as being directional in natural gas, for me, has just rarely ever works out. So, yeah, we do lots of dumb things around here. Not today, Satan. Let's take a look at the NGF6. The highs are near 540 recently. The lows are near 380, 390.
I got an iron condor in here. Arguably, it's probably. I could tighten up the strikes. It's a little wide. It's a little wide, but it felt appropriate to do it wide because honestly, I had been short of strangle for a while there, and that worked great the month prior, but it was not working so great this month. So I decided to at least put some training wheels on it. And putting those training wheels on felt like, oh God, I can do whatever I want now. It's way better than being short the strangle, but it's still a little wide. I could probably tighten it up. But that said, I think you're on the right path. Like having these iron condors might be the way to go.
What's so interesting right now is that natural gas is in a position today responding to these headlines, of course, because if Russia is going to come to a Ukrainian peace deal, do we really think that Europe's going to be able to ignore the temptation of Russian energy again? Right now, in terms of billions of cubic feet, storage levels are quite low. This is the lowest level since where we were right after COVID. So there's a lot of demand in Europe right now for energy, which is one of the reasons why I look at this decline and go, okay, well, like Europe has clearly said they don't like the deal that's on the table with the US and Russia and Ukraine. Do they think that they're going to immediately start pouring money back into the Russian war machine to let them restock their coffers and build things back up? Immediately? Will the energy start flowing again?
No.
So, Jamal, I'm looking at this chart here. If we have lows that are near 390, if we have highs that are near 540, we can pull this in a bit and go 20 cents wide on either side. I'm getting close to my roll date, so this is under consideration. But we're looking at basically a 1-to-1 at a 52% probability of profit. And so absent a dramatic change in geopolitics or weather patterns, saying that this market isn't going to break the yearly highs or the yearly lows, I don't think is too much of an ask in the next, I know it's 63 DTE, but over the next 40 days through the end of the calendar year, basically, I think that's a worthwhile assessment.
Yeah, I mean, there's no way I'm going to disagree with you. Mine is still in the 31 day, and I have exactly those are my short strikes, basically where you mentioned. In this case, I have 4 and 540 as my short strikes. But yeah, I mean, I completely agree with you.
Maybe we get it working today. Maybe natural gas doesn't want to hurt us again. Wait, just
I feel pretty
so
decent, knock on wood, that I was able to withstand this move. Almost 5. It was a little over 5% to the downside earlier. Well, immediate fill. Oh gosh. Oh no.
Not so immediate. If that was like when I pressed send and it got filled, it's like, oh gosh.
Oh, okay.
This is going to max loss tomorrow.
Okay. All right. Good.
It's not going to max loss immediately, Jamal. Don't worry. The dollar index today finally responding to that hike in cut odds. So we briefly crossed the 90% threshold earlier in the ZQ Z5 contract. In the SR3, which is available on the platform, which is the 3-month SOFR rates, you could see that we're poking through 96.26. Just as a quick explainer, if you're looking at the right-hand side here, your y-axis, you take that number and you subtract that from 100. That gives you the projected rate in that particular expiration window. So for December, we'd be saying 100 minus 96 point, we'll call it 25. You're looking at a 3.75 Fed funds rate, which would mean we're going to get a rate cut. Okay, but one rate cut. Every 0.25, that's a rate cut interval. So when you're at 96, 4% Fed funds rate. When you're at 96.25, 3.75, 96.5, 3.5%, yada, yada. So we're priced in for a cut now here in the 3-month SOFR contracts. In fact, we're now at a 5% chance of a 50 basis point cut. How things change. So this is a market now that, at least for the dollar, it can't ignore the fact that cut odds have shot up. It's a decent reversal across the board in a number of things. I'm keeping an eye on the pound in particular because they have their own fiscal issues going on. If this breaches 132.16, I have some short call spreads in 6B that need to be jettisoned. Similar story here in the euro. If we start to punch through 117, good night, sayonara. And then in the yen, this is the most interesting thing because this is something I have been riding into the ground. Today may be a breach of that 1-week moving average, something that we haven't seen going back since November 6th. So while that's not a long time, Jamal, it does suggest that there is a potential short-term trend change. And for a dollar index that has been consolidating in a triangle, this recent rejection of resistance may mean another retest of support. So being bullish on the dollar for the next 2 to 3 days could be something you have to just digest and sit through.
So do you think with the yen here, do you think it's sort of trader stepping in a little bit ahead of potential yen intervention?
I think it's people who have been short the yen getting out of their short yen positions ahead of a holiday when intervention risks are going to be high because the BOJ and Ministry of Finance, they like to do these kind of things in thin markets. And I know while markets have short memories, it wasn't that long ago, last year, December, that the BOJ decided to step into thin markets. So nice to take profit on that iron condor here as we go out the show. But that to me is the biggest risk. If I'm trading 6J, if I'm short deltas in 6J, if I'm a long dollar yen in the spot market or any yen cross in the spot market, this 48-hour window coming up is when some hijigs could occur.
Makes sense.
You mentioned the calendar for tomorrow. There is a GDP reading on our IG calendar, but that has since been removed, Jamal. What are the odds? Other than that, this is an important autumn budget coming up for the UK, given what's going on with their fiscal standing. So we'll see what Rachel Reeves has to say tomorrow morning, if that's something that you care about. But I do, because I'm trading the British pound futures. So I'll be watching for that nice and early. Beyond there, smattering of things, durable goods, initial claims, some PMIs. Other than that, we're basically into the Fed blackout window, Jamal. It starts Saturday, but we don't have any Fed speakers tomorrow or Thursday. Maybe someone pipes up on Friday. But you know what? I'll be back in about an hour and a half for overtime later today. I think you're done for the day here on air.
It's been a fun day. It's been great.
Yeah, it's been nice. It's nice when the market goes up.
Can't beat it.
Yes, you're long. For now, though, we'll catch everyone in a little bit. Take a quick break. Dr. J's up next. You're watching Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with forex, now available on tastytrade. Get in on over 80 forex pairs, 24 hours a day, 5 days a week, with the forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Tuesday edition of what it is that we are trying to do. Welcome to the extra long edition of what it is that we are trying to do. We are going to be live all the way until 2:30 Central or 3:30 Eastern. If the video holds out, which I checked Polymarket before the show, it is only about a 15 delta. So I would get ready for the sultry voice, because it is coming your way. But if you are watching or even listening on the Tasty Live Network, I would actually bounce on over to YouTube, because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. Man, you can celebrate if you're a bull. You can commiserate if you are a bear. The Thanksgiving rally is in full effect. And of course, if you have any questions for me, I would drop them in the chat box. I see you guys already doing some work on the algo. And so that's some good stuff, man. Nice job out of you guys out there pumping that algo for good reason. So Ryan, go ahead, bring us into the market. Let's have a quick little look at what's going on in the stock market. Got even the S&P's up 42 on the day. Got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, up 27. You got the boomers up 584. And then you've got the Russell 2000 futures index up 44 on the day. You got bonds up 13 ticks. You got notes up about 8 ticks. You got oil down about 80 cents. Got UB40 up 13 ticks. Got the Shifty celebrating with gold up 35. Where my Hunt Brothers at? Let's see. You got the Hunt Brothers are up 45 cents, so they're doing pretty good. I mean, you stack that alongside some Supreme pizzas, you got a nice little business model on your hands. Like you get a little 45-cent rally in silver, and you get some hot and readies coming out of the old Hunt Brothers Pizza establishment. That's a pretty good business plan if I've ever seen one. So silver looking pretty good, the metals looking pretty good. Volatility, I almost don't want to look because I kind of feel bad for it, but it's probably getting smashed to pieces. Volatility futures down 35 cents. And then you've got spot volatility. The old VIX is going to be down to $1.50, man. Yes, definitely smashed to pieces. Volatility getting beaten up pretty good indeed. And so, yeah, I mean, everybody's happy. Everything all is well in the world. Everybody's excited. What are you guys most excited for coming up here on Thursday? Because, we are now, I mean, we're very close to Thursday now, right? I mean, it's Tuesday at 2 o'clock Eastern time, 1 o'clock Central time. It's like, I mean, it's basically the next tick. Like the next tick in the market is going to be turkey. It's going to be stuffing or dressing, depending on where you are relative to the Mason-Dixon line. And then, of course, it's going to be pecan pie, chocolate pie, pumpkin pie, maybe some $1 million pie. I didn't even know that was a thing until maybe it was 2 years ago that my stepfather-in-law, so not the Tesla guy. The Tesla guy is my father-in-law. But my stepfather-in-law, he made a $1 million pie. This was maybe 2 Thanksgivings ago. And he wouldn't even tell me what was in it. He's like, just have a bite of this. It's going to be the best thing you ever tasted. And it certainly was, but I have no idea what's even in a $1 million pie. So somebody let me know out there. Do you guys have a recipe for a $1 million pie and what actually goes in that guy? Because it was pretty good. It was pretty good indeed. But let me know what you guys are excited for, because I'm excited that you're excited. Everybody's excited, man. I see you guys in the algo, man. Look at you guys, man. GV in the house. Steven Bivens in the house. Man, Sam L in the house. Ashvin in the house. I'm laughing. I'm laughing because of the sultry voice thing. So I told my wife about that the other day. Because I'm like, the video gets choppy. I get so frustrated, whatever. You guys know all that, right? And so far, so good. I mean, I don't know. Maybe we figured it out. I'm not super hopeful, but you never know. It's possible. So I told her about the sultry voice thing on the show, and she's like, there's no way you actually said that. I'm like, have you ever met me before? Like, have you ever seen the show before? Now, that's not really a fair question because, again, the delta that Autumn watches the show on any given day, any given Sunday, for my Willie Beeman fans, it is 0. I can assure you she has her invisible juice pumped up to max volume. She will be nowhere to be seen. And so we don't have to worry about that. But it's just so funny that she's like, you're not telling people that you actually have a sultry voice. I'm like, oh, yes, I am. Because I tell people the truth. And you guys know that is true. But anyway, I digress. We got an extra long show today. So you guys are going to get some tangents on tangents. But I see you guys in the chat. And I just appreciate you guys, man. Greg Lutton in the house. Man, Albacore's in the house. Man, when's Chunk Light going to show up? Like, Albacore's here. So that's obviously good. But when is Chunk Light going to show up? Because Chunk Light, now you're taking me down memory lane. Now you've got the nostalgia thing going on and just a bunch of stuff. So, all right, let's go into the portfolio, though. I'm actually going to spend a bunch of time with you guys here in a minute because I don't have that much to do in the portfolio, and I'm not super excited to do too many new things today because, again, I mean, tomorrow Tasty's going dark at 11 o'clock Eastern, 10 o'clock Central, whatever it is. And so there'll be no From Theory to Practice tomorrow because the network will be dark. And then, of course, we're dark on Thursday. We're dark on Friday. We're not back until I think Monday morning. I'm not even sure if there is a first call on Sunday night. There might be. I'm not positive, so don't quote me on that. But we're not back until Monday, and I'm like, I don't know, man. Do I really want to mix it up? Do I really want to, end up stewing in the bathtub of filth over the holidays? I mean, obviously the answer is yes, but I'm going to try to fight it. I'm going to try to fight it for the next 45 minutes or so. And I need you guys to help me, man. I need you guys to help me to exercise a wee little bit of restraint here on the show. But if we take a look at what I do have on in the portfolio, man, you pair me. So this is a dangerous combination. Like, you guys thought tuna fish and applesauce was a dangerous combination, and it is. Here's an even more dangerous combination for the P&L Open Bros. You pair me with A, an extra long show, and B, Starbucks up $2. Man, the P&L Open Bros are going to be really in for one today. They are going to get beaten to a pulp with Starbucks up $2. And man, look at how well we are doing today, up over $300 in the Starbucks position. The P&L Open is now only $200 to the downside, $267 to the downside. That's basically a rounding error relative to where we've been. That's basically like, all right, that's pretty close to a scratch relative to where we've been here in Starbucks. And so feeling really good about the Starbucks situation. And everybody's ready. Everybody's excited. They're like, man, I need a whole bunch of B-, maybe C+ coffee in my life for the holiday season. And it is showing up here in the Starbucks stock price. So that's really, really good. So Starbucks, I'm going to sit tight and do nothing. I'll open up the position in case you're brand new to the show. Hey, welcome to the show. This is, we're right around that B- level. I would say this is what you can usually come to expect from this program. And so I hope you stick around. I hope you stick around for this show or the other shows we have on the network. We have a bunch of shows, obviously. If you're looking to actively participate in the markets and kind of take a more active control of the reins of your portfolio, you're in a really, really good spot, man. Mostly derivatives, obviously, options and futures, but you got a little stock in there. You got a little crypto bro and bro set action in there. You got a little, some futures and futures options in there, but options and futures are going to be the primary drivers, with options, of course, kind of leading the pack there. But for Starbucks, you can see we're long some shares. We're long 100 shares. And then we are also long this deep in the money call that I wanted to use as a synthetic dollar cost averaging mechanism, if you will, because I didn't want to fork over all the capital to buy more shares. I wanted to do something that was going to be a bit more capital efficient. And so just remember that you can always use deep in the money options as a share or future substitute. Like, rather than buying 100 shares, you can buy a deep in the money call, which is exactly what we did here with Starbucks. Instead of shorting 100 shares, you can buy a deep in the money put, which you could do that on the downside, of course. And then, of course, from a future standpoint, you can essentially do the same thing. Instead of being, long a future, I could go to the futures options and go deep in the money with that, with those options to kind of replicate a similar futures position. A lot of times the futures give you some really nice buying power relief from the outset. So that's not necessarily something you need to turn to too often, but it is, it is there at your disposal. So Starbucks is looking pretty good. I don't know that I have much more to say about this. Even for me, I think could we be at the end here for Starbucks? I think it's possible. I don't know. I think for Starbucks, we sit tight, we do nothing. And so looking and feeling pretty good about Starbucks. Let's go to MES. So this will be our second victory lap of the show. And so MES, you've got the index up 35 today. Obviously, everybody's excited. And I don't know. I mean, was there any news today? Because the morning was really interesting. Because the Nasdaq, in fact, let's go to the chart of the Nasdaq. So the overall market was kind of weak today. Even the S&Ps too, but the Nasdaq was the weakest of the bunch. Like you can see, the Nasdaq right here was all the way down to 24,602. So it was 300 points, 340 points lower at one point today. And so, in fact, let me get hold on. Let's unlock the Errol Coleman settings by clicking on a 2-minute chart. Don't forget, whenever you guys click on a 2-minute chart, anything between a 1-day and 5-day time horizon, Errol Coleman gets a 19-cent royalty. And so hook my man up. Like, he's got Christmas shopping to do too. Like, he's got loved ones, he's got relatives, family members, friends, what have you. And so if enough of us kind of pitch in, like, we're going to really help my man out. But if we look at a 2-minute chart of the Nasdaq, you can see that, this morning it was, right after the open, actually. Wow. I thought it was earlier this morning, but no, it was right after the open. You can see there was a low of 24,602. So they smashed them. They squashed them on the open, and then all of a sudden, they just ripped them right back higher. right? You got manipulation on the way down, you got more manipulation on the way up. And so that's a pretty normal market, I think, from a functioning standpoint. And so NASDAQ hit a low right after the market opened. You've got E-mini S&Ps, I think are going to be fairly similar. Yeah, you've got E-mini S&Ps were basically the exact same candle. They were down to a low of 66.74. Yeah, so they were down 30 or down 35 on the lows here today. And then again, they ripped them back higher. And so Thanksgiving rally in full effect. The Russell's been strong all day, I think. I'm pretty sure the Russell's been strong all day. And so if we look at the low, what was the low on the Russell? Is it around the same time? Yeah. Same timestamp exactly. But it was basically unchanged on the day. So NASDAQ was super weak, the weakest of the bunch. I'm not going to look at the boomers. I mean, the boomers, they can fend for themselves, right? It's jungle rules now with the boomers. Like, they're going to be just fine. Don't worry about it. But the Russell was kind of the leader of the pack in terms of the strength because the NASDAQ was down 300-something points. Even the S&Ps were down 35, 40 points, whatever. Russell was never really red all day. I mean, it was unched there right around the time that everything else was kind of falling out of bed. And now it's up 42. And so there you go. There's some market commentary for you. That is it going to make you a better trader? I don't think so. But is it on par with anything you would hear anywhere else? It absolutely is. And so there you go. There's your market commentary. But if we look at the MES, we've got our strangle on here. And guys, we did it. Like, we did it again. Look at this, right? A little Britney Spears action for you guys. I mean, you've got the stock or the index at 67.57, and then my strikes on the strangle are 6,400 and 7,000. This is exactly what you want. Like, this is a textbook setup for a strangle. We were never tested on either side. I mean, the index just kind of meandered between the two, and like all was good for the position basically from the very beginning. If I bring up the chains here really quick, let me bring up the chains here really quick. Video is holding out, man. I'm super pumped about this. I actually can't believe it. But if I go into MES, you can see I did this trade on 11/7. So we did this trade almost 3 weeks ago, 2.5 weeks ago. We did this trade for 99.75, right? So we did the trade on 11/7. So let's go back to the chart of MES or ES, same thing. It's either micro or mini. If I go to MES, I go to the chart. Let me bring up a daily chart now. So we already got my man, like what, 38 cents? It's 19 cents per chart. So we did it with NQ. We did it with ES. So we just got Arrow Coleman 38 cents. It's pretty good. And just think, right? I mean, if we actually extrapolate this out, like, and we've got 500 people watching. If each one of you guys does that once or twice, I mean, he's going to be able to get like his nephew like a PS5 or something. Like, it's going to be some good stuff. But if I go into the daily chart for MES, if I go to 6-month chart, it's fine. It doesn't matter. We did this on 11/7, so you can see it was right here, right on this super big, long wicked, what is that, hammer candle? I think so. Is that a pin bar? I've always learned those to be pin bars. But some of the peasants and the peons might refer to those as hammer candles. But that's a pin bar. So if we look at that pin bar, you can see that we did that trade right around there. So let me bring up, man, I can't even, oh, there we go. I got to scale the y-axis so that we've got 6,400, we've got 7,000 right there. So those were our strikes. So we did the trade right there. So you can see that we were never tested. We were never even close to being tested. And so that's like super awesome and super amazing from a strangle standpoint. I mean, this is exactly what you want. You've got all kinds of room to the downside. You've got all kinds of room to the upside. You know, like if you're brand new to the network or you're brand new to selling premium, like this is exactly what you want. This is the textbook definition of a perfectly, I don't want to say perfectly run strangle. It's just basically a perfectly kind of situated strangle, let's say, right? You were never tested. You don't really have to worry about it. You just kind of sit and observe the market and like do its thing. And then the next thing you know, you're at 50% of max profit or 55% or 45% or whatever. But 50% is typically the reference point that a lot of us use and that I tend to kind of stick to for my own purposes. But MES, this is a really, really good example of what you want out of a strangle. And so let's go ahead and let's close this guy down, and then we can move on with our lives. And so MES, let's see if we can get this guy off. Trying to get out at 45.25, and they won't give it to me. So let's do 45.50 should do it, I would think. Be surprised. All right, can't even get out for 45.50. I bet you we're going to get improved here. When we get filled, that would be my guess. Oh, we didn't get improved. They got us. Man, somebody out there got an extra quarter of a point in MES, but nevertheless, here we are. So MES over and done with. So that was a really, really nice trade. You know, the other one that I want to look at is Target. So this was an earnings trade that we did a couple days ago, or maybe a week ago. Let me look at Target. It wasn't a couple days ago. Yeah, about a week ago exactly, actually. So we did this trade on 11/18. So you can see that guy right here. We did it for Target earnings on 11/18, and the original move for Target was, man, I can't remember. It was like, it did a bunch of things, actually. Let's go to Target. Yeah, so 11/18. Yeah, so basically, yeah, there's your, let me zoom in a little bit. So here's the candle. Here's the 11/18 candle, right before earnings. And then it gapped down a little bit, and then it just kind of chopped around. And, you know, I know we love our expected move butterflies. I know we love our directional earnings plays. And I know we all love lighting stacks of cash on fire together for these earnings plays, especially those of you out there that still think it's a good idea to follow me on these earnings trades. Like, you know, the smell of smoke is in the air. Like, the smell of smoke, like, it is nearby. It is very, very close. And so for Target here, it's a really good thing we didn't do that, because the strategic nature of the short put, the buffer that you have built in, the wiggle room that kind of comes along with the position by selling it out of the money strike. I mean, that just really, really shined here when it came to shined? Man, I'm not even sure. Is it shown or is it shined? They both feel correct to me, which means they're both probably wrong. But you guys let me know. Like, I'm genuinely not sure. Is it shown or is it shined? Like, if I want to say that something at one point in the past had a shining quality about it, would I say that that thing shined or that it shone? I'm pretty sure it shined, but that doesn't feel right at all. But I'm like, I'm pretty sure that's right. Anyway, the thing that really had a shining quality about it at some point in the previous days was the short put here in Target. And so had we done a butterfly, had we done something directional, we would have gotten crushed because we were bullish on Target, and so it just would not have worked out. But look at how beautiful it is here for Target, where, you know, on a trade where we were not right direction, we were basically never right directionally. There was never a moment in the life of this trade that we were right directionally, and we're still going to be able to take it off today for an economically significant profit. And I see you guys. Some of you guys are saying shined. Some of you guys are saying shunt. Yes, I think I'm going to start going shunt. That's some good stuff there, BDH. I like that a lot. Yeah, shunt. That's what I'm saying. So right there. So let's go to, if you look at Target here, you can see we're going to pick up like $100 on this trade. Like, that's pretty solid, right? We pick up like $1 on the trade, and, you know, we're at 24 days to go. So it's a wee little bit early, but I kind of like taking this guy off now, simply because, again, like, we're dark tomorrow, we're dark Thursday, we're dark Friday. You know, we come back on Monday, 18 days to go. We're probably okay, but those are famous last words, right? It's like, why would I look a gift horse in the mouth, right? A gift horse in the mouth, not the mouse, not necessarily, on something that has clearly shined for us. So let's just take it off, right? We've got the economic significance. We've got everything we've been looking for. You know, I really think that this is pretty much a no-brainer for Target. So let's go ahead and let's close this guy down. Let's see if I go ahead and do this. Okay, beautiful. All right, so Target is over and done with. Man, look at the portfolio. That's looking paltry, man. Look at this thing. All we have left. Wow, this is crazy. So look at this. All we have left are 4 positions. We have our Delta Airlines strangle, which is working out really well, which actually, you know what? We're going to talk about that here in a second. I'm probably going to take that guy off too, because why would I leave it on? For the same reasons I took off Target. And we've still got an extra long show. We got plenty of time. And so I think let's go ahead and do that. But then we've got Home Depot, right, which is a short put spread that we had on for earnings. That didn't look like it was dead to rights, but look at Home Depot today, up $15. Like, that's an amazing day for Home Depot. We still have 24 days to go. It's defined risk, so I don't have to worry as much about the 21-day marker like I might with something undefined risk. And so, yeah, Home Depot, we sit tight, we do nothing. Qualcomm, Qualcomm, wow, look at this. Are we going to be left with, man, Because look at this, guys, right? Can you guys kind of see where I'm going with this? I just took off target, right? I just got on the soapbox. In fact, I may still be on the soapbox. And I'm lecturing you guys, like I'm doing this, I'm doing that, like you got to take it off. It's economically significant. Like you don't want to take, the risk through the holiday. You're going dark for 3 days, blah, 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 blah. We take off target. It makes a lot of sense. Look at Delta Airlines. So look at that guy, and then let me grab a different color just because we can. We'll grab a little Glacier Freeze for you guys. Look at Qualcomm, exact same thing. Exact same thing. And by exact same thing, I mean there's some key differences that we want to make sure that we're aware of. So with Target, we were up $1, right? That's obviously economically significant for anyone, almost regardless of your account size. I would say everybody can kind of agree that if you're up $1 on an options position, it has cleared the threshold of being economically significant. Now, you may not take it off yet, and that's totally fine in terms of where you're at in the cycle, like what your profit target is. Like there's a lot of factors to consider, but I think everyone can agree now it's economically significant. Okay, if you look at Delta Airlines, you look at Qualcomm, we're actually in a little bit of a different situation here because Delta Airlines is, we're up about 60 cents on the trade, right? So again, not $1, but is that still economically significant? I would say yes. If you go to Qualcomm, this is another trade that we weren't really in an amazing spot up until basically right now. And I'm looking at this now. Qualcomm's actually down today. So we were in a better spot yesterday. Because we're down 40 cents on the trade just today. So now we're only up 50 cents right now. So this would have been a better trade to take off yesterday or what have you. But again, for those of you that have seen the show for a long time and you've been following along, like I appreciate you guys so much. You have no idea how much I appreciate you guys that follow the show on a regular basis. I appreciate everybody that's just passing through. Like if you misclicked and you're like, how did I get here? Man, I appreciate you too. I don't appreciate you as much as someone that might stick around for 2 or 3 minutes, but I still appreciate you very much for giving me the click there for a couple of seconds. But man, for those of you that have been following the show for any length of time, like I really try to do all of my live trading on the show. Like I really want to give you guys a unique experience that maybe you can't find too many other places. And so because of that, I'm missing a lot of openings. I'm missing a lot of economic numbers. I'm missing, FOMCs and things of that nature. But it's worth it to me so that you guys that are following along the show, looking for education, you're looking for instruction and understanding, like you have a clearer picture of what's happening from start to finish. Like if if I put on a Qualcomm trade, whenever I put that guy on, then, if you follow the show on a regular basis, like on a daily basis, I would think that a reasonable expectation for me to you is you watch live and then you hit it 2 or 3 times a night in the archives. Like I would think that's a very reasonable expectation for me to you. So let's say that you do that. You're not going to miss any links in the chain. You're not going to miss any links in the chain. And so that's going to be good for you if you're trying to understand, hey, how do I manage a strangle? How do I manage a ratio spread? How do I manage a vertical spread or what have you? And so that's what we're trying to do here. So for Qualcomm though, only being up 54 cents, that's getting closer to the edge of not being economically significant in my opinion. I still think it meets the criteria. 50 cents to me is like, all right, that's close, but still economically significant. It's when you start getting into like the 30-cent range and kind of that 33 to 28 cent region, that 40 cent region. It's like, I don't know, because you have to factor in transaction costs. You have to factor in, all the things that go into, obviously the winning trades and things of that nature. And also don't forget, if the trade is winning right now, like if you have some kind of profit on the trade, I can't think of a scenario where the trade is not working to some degree. Now, some trades may be working better than others, which of course will show up in the P&L itself. You'll make more money on those trades. But every trade that is green to some economically significant degree, or at least close to being economically significant, is going to be in some state of working. It's going to be in some state of, all right, this thing is doing pretty well. And so if I were to leave it sit tight, the most likely outcome is it's going to continue to do well. Of course, there's no guarantees. It's all probabilistic. It can all come crashing down. We all know that very, very well. But again, just thinking through it kind of probabilistically, it's probably going to be okay. Still, though, when I think about this and I think about going dark, and I think about, being off the next 3 days, and I'm thinking about, the simple fact that it's like, man, it'd be kind of nice to really freshen up the book for, the last month of the year. Like we're going to come back after Thanksgiving and it's going to be December. It's going to be December 2025. That means that once the December contract expires in the futures world, we're going to be trading March. We're going to be trading March of 26. That's going to be the front month futures contract. Man, that's crazy. I still feel like it's 2021. Like, I still feel like we're just stuck kind of in like that 2021, 2022 kind of window of time. But anyway, let's go ahead. Let's go into Delta Airlines. Let's just close it down. I'm going to close them both down. Let's freshen up the book. Let's give it kind of a new look and a new feel. And we'll kind of see what, the last month of 2025 has in store for us. All right. So 216. So let's see if we can do, oh, there it is. Is the video choppy? I don't know. Maybe a tiny bit. Every time, right around that midpoint. I don't know. It looks like it. Yeah, it's a little choppy. Brutal. All right, so hopefully it'll come back to us. But let's go ahead and let's see. Delta Airlines, 218. I can't get filled. Let's go ahead and do 220. All right, so we got filled at 220. We got improved to 219, so that's not too bad. All right, so let's do. Let's see. If I do Delta Airlines, let's go to Qualcomm. We'll do the same thing. So Qualcomm. Let's go to close this guy down. Yeah, we'll try like 431. That should be okay. All right, perfect. So we got filled at 424 there. So 431, 424. It's perfect, man. It's beautiful. Look at the book. Man, look at the book. Wow, we have nothing left. We have Home Depot and Starbucks. That's crazy. Like, that's so crazy that's all we have left. And so, wow, that's really, really wild stuff. So, all right, let's see where you guys are at, though. We're right around the halfway mark of the show. And so that's pretty good. But, man, I see you guys. Let me see here. Where are you guys at? Man, where are you guys at? Let me see if I can surprise and delight somebody in the middle. Well, I see John Covington just says, Happy Tuesday, Dr. Jim. Super long show. There's only 6 positions. I know. And now there's only 2. Like, now there's only 2 positions. Like, what are we going to do? I'm sure we'll find something to talk about. Like, what do you want to talk about, man? Like, let me know. What do you got on your mind? Like, we'll talk about whatever you guys want to talk about. And so, thank you, though, there, John Covington. Thank you for being here, my friend. I appreciate you very, very much. Let's see. Who else can I surprise and delight? Well, this is pretty funny. Jared Kramer says, Dr. Jim Tom, I'm ready for the B- humor and the D- video feed quality. That is correct. Although, look at what happened. The video's back. If I'm seeing this correctly, it's hard because I got one eye on you guys and I got one eye on the video. It's like monovision, right? It's like I'm distance here, I'm close up there. Like, none of it really works. It's all pretty blurry. But yeah, it came back. Like, I don't know. It needed a warm-up set or something. Just need a little rest between sets, and now we're back. So that's some good stuff. Man, that's good stuff. So let me see here. Well, I see one more. So Stephen Bivens. Stephen Bivens says, Dr. Jim, what are your thoughts on rolling short naked positions when volatility rises? I've been doing this to capture more extrinsic value during volatility spikes. Okay, so this is a great question. So, like rolling when volatility spikes, like waiting for volatility expansion to roll your positions, is this a good practice? It absolutely is. So if you find yourself in a situation where volatility has spiked, just like it did the last few days or the last week or so, is that a good time to then roll positions? It absolutely is. Is that a better time than if volatility were lower? Yes, it most certainly is. And so if you happen to find yourself in a position where volatility has spiked, the VIX is up to 26, it's up to 28, 24, whatever. Is that going to be a good environment to roll positions? Yes, because generally speaking, you're going to get a better credit for your roll. And the reason why that is the case, we can actually look at the Greeks and we'll all understand actually why that is the case. So if I we can look at any option actually. If I could look at Home Depot, I could bring up, let's look at something that we haven't looked at in a while. Let's look at Chipotle. Are they still in business? Look at Chipotle up $2. What a piece of garbage. And now my video is choppy again, as it should be. Wow, that's unbelievable. Look at Chipotle up $2. That is so funny. Man, this thing is a piece of garbage. Oh my gosh, it's such a piece of trash. Unbelievable. So Chipotle up $2. But let's look at Chipotle for the purposes of our example. Whatever. So if I go to December, and I go to sell a put. So like, let's say, for example, I'm looking at you can look at any option. The relationship is still going to be the same. It doesn't really matter which option you might look at, out of the money, in the money, or even at the money. Like if I look at the at the money strike, right? So I'll look at like a 33 put, look at the Vega in the December cycle, of 24 days to go, right? So like you can see that the Vega is only 3 in the December cycle with 24 days to go. Now let's look at the same option, but let's look at the January cycle, and you're going to see that the Vega is going to be greater for the longer dated option. So if I go to January and I click on the 33 strike, you're going to see that right here, the Vega for the at the money strike is now 5. Okay. Are we talking about a huge difference? No, not necessarily. But again, to your point there, Stephen Bivens, like what does this mean? Well, this means that, when volatility increases or when volatility changes, it would obviously be the same on the downside too. But since we're talking about volatility expansion, this quite literally means that volatility expansion is going to impact the later cycle more than it impacts the current cycle. You're in the current cycle, sort of by definition, and you're thinking about rolling to a later cycle. So if you roll to that later cycle, are you able to benefit more from the volatility expansion? The answer is yes, because the extrinsic value will have increased by more because the volatility impacted that later cycle greater or more greatly than it impacted the front month cycle because the Vegas are higher for the same strike in a later dated cycle. And so the answer to your question is obviously yes. If you have a volatility expansion and there are some positions that maybe you were thinking about rolling anyway, is it a good idea and a good practice to go ahead and roll that position, on a volatility expansion day? 100% yes. Now, the only thing that I will add to this, you got to be a little bit careful waiting for volatility expansions to find a good time to roll. Right? Like you've got to be a little bit careful constantly waiting for that huge volatility increase or any type of volatility increase for a good opportunity to roll, because you may find yourself going days, weeks, sometimes even months without getting that volatility increase. Because remember, volatility likes to contract. It likes to live on the lower end of the range. Like it absolutely wants to grind down. And so we may find ourselves, this is actually a great example. If the seasonality bros have their way, what's going to happen? The Thanksgiving rally is going to end, and then what's going to happen immediately afterwards? The Santa Claus rally. Right? Like you've got the Thanksgiving rally, and then the Santa Claus rally, and then the New Year's rally, and then the MLK Day rally, and then the Valentine's Day rally, and the Easter rally, and we don't see another volatility expansion for 6 months. Like that could 100% happen, especially at the end of the year with the Thanksgiving rally and the Santa Claus rally being quite strong, historically speaking. So if that happens, Stephen, we could see, the VIX is 19 now, right? We could see, 17, we could see 16, we could see 15, 14, 13. That's very possible later this year. And so waiting for a volatility spike to make your rolls, not my favorite move. It's more of a situation where if you happen to find yourself in a volatility expanding regime, then by all means take advantage of it, roll the positions, and I think that makes some sense. So anyway, hopefully that helps a little bit. So, all right, so let's go to, let's see. Where are we at? Okay, there we go. Orgdenu's in the house. I'm all the way back to the beginning now. Orgdenu is in the house. What's going on, my friend? Orgdenu, greetings from Italy, Dr. Jim. I hope you have a wonderful Saint Giving. That's how they call it here in Italy. That's a great name. I love that name. That's amazing. And so, yes, I hope you do too, my friend. I'm very excited to see, I'm going to obviously spend time with my immediate family, my mother-in-law, my stepfather-in-law, and then my sister-in-law and her husband and their new little baby boy that was a foster baby that they're going to be adopting within, I think they're days away at this point, maybe a couple of weeks away. It's just a formality at this point. Absolutely unbelievable blessing in their lives. Little baby Shiloh, he's going to be 1. They actually fostered him, like they got him from the hospital. And so like he's all they've known. Like they got him like he was a day old or 2 days old or whatever. And so just an unbelievable situation. And so they're going to be adopting him in the next couple of weeks. I've spent some time with him before, but I'll get to see him for Thanksgiving here in the next couple of days. And so I'm very excited about that. And so Orgdenu, I hope you have a great Thanksgiving yourself, my friend, out there in Italy. And so let's see. The gentleman's in the house. I only have 2 questions for Dr. Jim. What's going on there, the gentleman's? The gentleman's goes on to say, Dr. Jim, when are we going to get a mauve Monday? I don't even know what mauve is. Mauve. Isn't that like a bluish color? That's like, isn't this mauve? Like, this is what I wore yesterday. So obviously I'm going to wear it again on Thursday. Well, I won't have to because, we have Thanksgiving, but I'm typically on like a 1-on-3 off type of split with the wardrobe. But this is mauve. Is it not? Or is it like a purple? Mauve might be like a purple, maybe. I mean, we've got magenta on lockdown. Obviously, that guy's right over there. That would probably be tomorrow's pick if there was a tomorrow show. But mauve, yeah, I could do a mauve Monday. And then the gentleman's goes on to say, where is question number 2? I don't see it. I'll scroll down a little bit. Yeah, I don't see it there, the gentleman's. But put it in the chat anyway. I won't get to it, but the algo will see it, and we all know that's all that matters. And so Ash Finn's in the house. What's going on there, Ash Finn? I appreciate you, my friend. Appreciate you very, very much. Remember, hit me up, man. Let's do that Discord on the other side of Thanksgiving. Let's find a time. Let's make it happen. My kids took me down last time, but I'll make sure they don't do it again. And so Sam L's in the house. What's going on there, Sam L? Doc, what's the Thanksgiving strategy this year? Max calories? Yep. Max theta? Yep. Minimal movement? The least possible. Basically, an iron condor with gravy. Yes, that's correct. That's a good way to put it. I like that a lot. I actually probably will train in the morning on Thursday just to kind of sensitize, get my insulin response to be a wee little bit more sensitive to the onslaught that's coming. Is it going to make a difference? Probably not. Is it going to put me in a better state mentally? Yeah, I think it might. And so we'll probably do that. But the max calories for Thanksgiving, completely undefined. Truly the only trade where you want unlimited upside in gains. That's correct. Sadly, though, you also get unlimited downside. And so it is very Strangle-esque in that regard. Like, you want the unlimited upside, but you've got to be willing to accept the unlimited downside as well. And so Brian Dowdy's in the house. What's going on there, Brian? Sorry, Dr. J, for IBIT. I meant run over. Oh, yeah, you were asking me about the getting run over. I meant run over as in missing out on the upside potential, okay? I bought back my call this morning, and I think I'll just keep static deltas because it's not worth capping the upside. Man, I think that's totally fine. I think that's 100% fine. And again, I mean, that's kind of what you have to keep in mind, right? And so you were kind of thinking of getting run over as having the short call there. Right. And so, again, I wouldn't really think of it that way because you're missing out on potential gains, obviously, but you're not, when I think of getting run over, I'm thinking of a losing position. Again, nobody gets run over with a $130 profit. Like that just doesn't really happen. But I can respect why it would feel that way if you have a short call and IBIT skyrockets because Bitcoin skyrockets and whatever. And so I got it. Like I understand that. But yeah, I mean, I think it's totally fine. Like if you want clean deltas, there's nothing wrong with just holding, static long shares or whatever to have those clean deltas in some type of play that is a longer term play for you. I don't necessarily love it in the short term. Like I don't necessarily love it in like a 3 to 6 month time horizon. But if you're looking at something that's, you feel good about the company, you feel good about the asset class, you feel good about, the imaginary nature of Bitcoin being a store of value, whatever it is, right? To each his own, that's what makes a market. If you feel good about all these things, and then by all means hold the clean static long delta, and I say go for it, man. 100% go for it. And so Stephen Bivens, oh, there we go. We got to this. Wow, I surprised and delighted somebody that early in the stream. Very, very interesting. And so, okay, well, Stephen Bivens, I hope that helped the conversation earlier. Sam L, Thanksgiving expected move plus 5 pounds pure gains. Implied volatility extremely elevated. That's IVR will be pinned at 100. The risk is fully undefined. I agree. Again, it's upside and downside. You can't have one without the other. But let's see. Ashfin says, what happens first? Trade Wolf, CMG, or Jim gets his haircut. I'm done with Wolf, man. I got to be done with Wolf. Where are they at? $19 stock now. I remember when we traded Wolf when it was just a tiny little whippersnapper. I think it was like, a couple bucks, $1.50, whatever. Like, I remember that, man. I remember that like it was yesterday, basically, because it was about a week and a half ago. But Wolf, yeah, I'm all set on Wolf. Now, Chipotle, that might be a little bit different. I mean, Chipotle, maybe we'll make our way back into the Chipotle ranks at some point soon. Or maybe we won't. I mean, we'll have to kind of wait and see, of course. But yeah, Chipotle, I would say of the three, like if I had to rank them, we did it kind of like a little ranked choice voting. I would say number 1 is we trade Chipotle. I would say number 2 is I get my haircut. And I would say number 3 is we trade Wolf. Now, I'm not getting my haircut. So that you can bet your bottom biscuit we are not going to touch Wolf. I'm all done with the Wolf trades, I think, for any time going out into the near future, i.e. forever. And so let's see. Samuel, and honestly, how do we even know you're the real doc? That's true. I mean, the video's skipping a little bit, which you guys are now accustomed to, but then it recovers. Like it's kind of like a weird little deal. I don't know. And so that's how you know it's probably real because AI would have all that figured out. But let's see. Brian Dowdy. I I think Best Buy Butterfly would have worked out. Oh, are you serious? Let me look at Best Buy. Nah, there's no way. Wow, look at that. Best Buy up $3 today. Man, everybody's excited about is Black Friday still a thing? Like, is that still a thing? Like, everybody does early Black Friday now. Like, I'm getting inundated with like emails and like social media ads and like people coming by the house talking about early Black Friday, which, apparently has started now. And so is it still a thing that like Friday, I think we've moved on beyond that. Like, I think we've graduated beyond like the Black Friday being the day after Thanksgiving. But maybe I'm wrong. But Best Buy doing pretty well for itself, up $3.90. And so let's see. Brian Dowdy says, for now I'm just holding 100 shares of IBIT, but not quite ready to sell another put in case BTC really slides down. Yeah, again, I love it. Like, I love it. If you want to have the clean delta to the upside, by all means, go for it, my friend. I think you'll be fine. And by that, I mean, it's probably going to be pretty rocky. So Albacore says, hey, Dr. Jim, please review the mechanics of a put credit spread. I have the SPY 640, 630. Let's take a look at it. No problem doing that at all. 640, 630 expiration December 12th through the 17th, or December 12th through 17. And hold on, did you continue a thought there? I don't think so. Let me see here. I can't find the continuation, but you said 640, 630 expiration December 12. 17 DT. I got it. Okay, I got it. So you're 640, 630 put credit spread? Yeah, I mean, no, this is easy, man. Yeah, I mean, this is a huge winner. I don't know when you put it on or what you put it on for, right? But I mean, if I sell a 640, 630 put spread, this guy's only selling for 55 cents. And so you've got the market up huge. You've got SPY up huge. Like, everything is rallying significantly. And so there's no real good reason to keep this on, in my opinion. Like, there's no real good reason to hold this trade any further because you've squeezed about as much juice as you can out of this orange. Now, again, I don't know what you sold it for, but if you sold it for $3 or $4 or whatever, like, you've got a massive profit on your hands. I would not hang on to this position any longer, especially given the fact that you only have 17 days to go. And so remember, on an out-of-the-money option or even an out-of-the-money spread, it's going to be a little bit different when you have a spread because you have a short option and a long option, of course. But on an out-of-the-money option, inside of 21 days, this is part of the reason why we like to manage at 21 days. For the last couple of weeks of the life of the position, kind of right between 21 and 14, I would say. Or I'm sorry, right between 21 and 7. So for a period of about 14 days, I can't picture the graph and like the exact points. I can picture the graph, but I can't picture the exact points on the graph right in this very moment. But right for about a 10 to 14 day stretch, right around 21 days to go up until about the final week of the life of the trade, the decay curve actually flattens out. Now, what that means for you in practical terms is the extrinsic value does not decay off of the option as quickly as it was decaying. It quite literally slows down. So in other words, you get paid less for each additional day that you hold that position. Now, of course, that's using the ceteris paribus assumption, right? If you relax the ceteris paribus assumption, you have a bunch of other things happening, you may actually get paid more if the stock or the index keeps moving in your favor. But if you leave everything else constant and just focus on how the decay changes from one day to the next, it literally slows down right from 21 to about 7 or so, give or take. And so right now you're at 17. This is right kind of in that slow down wheelhouse where it doesn't really make a lot of sense to keep holding this. And so I would take it off. I would definitely take it off there, Albacore, and use it to go out there and get yourself some Albacore, man. Like, you can get the good stuff now. You don't have to get the chunk light. You got a nice window on your hands. And so I would 100% use that to my advantage. And so that's what I would do with that trade. But let's see. We've got E-Media's in the house. 1 hour of Dr. Jim. I know it's crazy to think that it's almost over. Like, it's really crazy that we've actually been together now for 45 minutes. That's crazy. Like, I feel like we just got started. And I'm pretty happy with the video. I mean, there have been a couple little tiny little stutters, but definitely an improvement for sure. And so let's see, Jared Kramer, the demonized video quality. That's true. Steve Aguilera for the algo. That's my man. GV22 for the algo. That's my man right there. Man, you guys, I appreciate you guys, man. For the love of the algo, right? That's what it is. Kevin Costner for the love of the game. We've got for the love of the algo. And that's it. So tell Autumn to upgrade the internet package. I'm actually honestly going to go tomorrow. I am actually going to Spectrum tomorrow. Because, we're off, so I don't have to, I'm not working like a normal day. I am going to Spectrum tomorrow, and I'm going to say, listen, You guys got to hook me up. Like, I need something better. Like, what can you guys do for me? So I'll keep you guys updated. And so, we did some different things kind of behind the scenes that apparently have helped a little bit. But I think if I can upgrade my internet even more, that might help a little bit with the upload speed and all that kind of stuff. And so let's see. eMedia, we're helping Google stock. What's Google doing these days? Didn't Buffett buy a bunch of Google? Yeah, Buffett's crafty, man. I mean, Buffett's super crafty because it's so funny. If you look at like when everybody thinks of Buffett, right? Like, what do you think of? You think buy and hold. You think unbelievable investor. You think long-term focus. You think all these things. And he is all those things. I'm not taking any of that away from him. But if you actually look at Berkshire Hathaway's like 10Ks and you look at like their actual statements, like you will see homeboy selling premium. Like you will see, I can't remember like what he actually titled it, like in the line item on the 10K. It wasn't like premium sold. It was way more vague than that. It was like other or like TBD or like don't look at this. But if you actually did some digging, which I haven't done in a couple of years, I looked at it like a few years ago, which I just thought was super funny. He's selling premium. Like he's selling premium. Now I can't remember if it was like against his long share positions or if he's wheeling it or if he's, obviously watching from theory to practice and lighting stacks of cash on fire. I can't remember, but it was net positive. So he was probably taking the opposite of my trades. But it's so funny that when you think of Buffett and everybody thinks of him as a long-term investor, all about value, all about whatever. And he is all those things, but don't let him fool you, man. He's a wolf in sheep's clothing and he's selling some premium. And so it's pretty funny stuff. But BDH in the house. What's going on there, BDH? I appreciate you so much, my friend. Danish Dynamite, Dr. Jim, we are closing unched. You just watch. Man, now that would be something. Like if they take them down today and close them unched, man, that would really, really be something. And so I'm here for it, though, man. I'm 100% here for it. And let's see where we at. Andrew Fansler in the house. How about a Wolf earnings trade? I think it might be related to Wolf. All right, I'm not trading Wolf with an L. But Wolf with a couple O's? I mean, I'll give it a quick look. $2 stock? Yeah, I ain't touching this, man. I am not touching this. And by that, I mean, ask me again when we come back from Thanksgiving, and we'll give it a thorough look. But I'm not touching it today. I'm going to try to keep things buttoned up and disciplined here before Thanksgiving. But you guys are going to take me down on these dumpster stocks, man. Like man, you guys are a bad influence on me. You guys are a really bad influence on me. The gentleman's back in the house. Most excited for the Chiefs at the Cowboys. You've got Chiefs Cowboys. I think my Bears play on Thursday night, if I'm not mistaken. And I know that my Lions play earlier in the day. And so it's gonna be a big day for me. Really, really big day for me. And so let's see. HB 6866 P&L Open Bros nowhere to be found. I know, man. Look at this. Look at this again, right? This is Team A. This is Gryffindor. And this is Slytherin right here. Like there it is. P&L Day, that's Gryffindor. P&L Open, that's Slytherin. Right? This is basic. I'm not even a Harry Potter fan. In fact, I don't even really like the movies. But my kids are way into it. My wife's way into it. So I'm like, I got to at least pay homage to the incredible nature of this series because it's been an unbelievably successful series. And so now my kids are reading the books. My wife's making us all watch the movies. And so I know how it works. I mean, this is Gryffindor and this is Hufflepuff or Slytherin or whatever. What's the fourth one? It's Gryffindor. It's Slytherin. It's Hufflepuff. And then what's the fourth one? Can somebody hook me up? Again, just for the algo, but hook it up. What's the fourth one? I can't remember. I mean, I could look it up on my phone or whatever, but that's not fun. I want you guys to hook me up. And my kids right now will be so upset that I don't know the fourth one. So it's Gryffindor, it's Hufflepuff, Slytherin, and then what's the fourth one? Somebody hook me up in the chat. But let's see. Ashman says, I'm just thankful to get to look at Jim's flowing locks for 45 minutes. You're the first person to ever say that, man. So I appreciate you. I usually get comments going in the other direction. And so I appreciate you there, Ashfin. I appreciate you very, very much. Grumpy Mike excited that one more holiday will be over. One more to go. It's brutal, man. It's brutal. Go outside, man. Feel the sun. Right now, if you live in like the Midwest, it's going to be a brutal 6 months for you. But watch some YouTube videos of the sun, man. Like watch some YouTube videos of like sunrises. Just watch a live feed of St. Petersburg, Florida. Just a live feed anywhere in the city, right? Man, you'll feel so much better. So much better. And so, but thank you for being here, Grumpy Mike. I appreciate you. Albacore's back. Can you show us an MES strangle and talk about the future expirations and when to roll? Well, we just did my MES strangle. And so remind me of that, Albacore. Remind me when we come back. I want to get to a couple more. And we already did kind of my MES strangle a little bit. I didn't go through it like the gimmies and the gotchas, but remind me of that. I'll address that on the other side of Thanksgiving. But Greg Lutton's in the house. What's going on there, Greg Lutton? Let's see. Sam L's in the house. Doc, just want to say we're genuinely thankful to have you around. Man, I appreciate you, my friend. Beyond the trades, the jokes, and the cast, you bring real heart to the show. Wouldn't be the same without you. Man, I appreciate you. Man, look at you guys. Man, look at you guys. You can get me all emotional. Going into last call. Isn't it last call after us, I think? I have no idea who's on last call. But I know the last call is after us. I think it might be Liz and company, which would be a huge uptick over a Dr. Jim. But I appreciate you, Sam L. I appreciate you so much. I'm serious when I say this, man. Like you guys give my show so much purpose. Like I feel so much purpose with what I do every single day. And I do not take it for granted. I do not take it lightly. And I appreciate you guys. I feel so blessed to be able to do what I do every single day. And so I thank you guys, man, because we couldn't do it without you guys. I certainly couldn't do it without you guys. And so just thank you guys, man. Really, thank you guys so much. Sergio's in the house. What's up, Sergio? We got the Southern Show in the house. What's up, Jim? What's up there, Southern Show? I think I'm saying that right. Grumpy Mike says $1 million buy, probably a little Labrador. I don't think that made it in there. Almost definitely not. Away from the numbers in the house. What's going on there away from the numbers? Or Neil? Some thoughts, please. I messed up a roll on CRWV. I meant to keep the short 85 call in December 19, but I accidentally rolled it to January. Okay. So now I have a December 19, 115 call long and a January 16, 85 call short. Okay. So let me think about this. You're long the 115 call. Let me bring up the stock actually. CRWV. $71. Okay. So you have a calendarized short call spread. That's basically what you have. Wait. No. You have a short diagonal spread. That's what you have because you have different expirations, obviously, with the strike. So you're long in January and you're short in the 85 call in, hold on. Keep the December. I actually rolled it to January. So now I have you're long in December and you're short in January. So you didn't tell me what you're long for and what the basis is on the trade and things like that. But here's, essentially what you have on your hands, because I'm thinking about diagonals. Like normally we're buying, an in the money call, and we're selling something that's out of the money in the front month. So you are short. No, you're short the back month. Yeah, it's kind of upside down. It's a little bit upside down. And so I would really have to think through the gimmies and the gotchas with something like a diagonal. And I don't know that I can do it in the next 1 minute or so. And so thinking about this, like on the surface, obviously, CRWV being below 85 is going to be your best case scenario because you're going to want everything to expire out of the money. I think, again, I'm assuming your net credit on this. If you're net debit, that's a very different scenario. But just reading through how you kind of put it in the chat, I am operating under the assumption that you are a net credit on this. If that's wrong, then obviously everything I'm going to say is not going to apply. But if you're net credit, then CRWV being below the short strike is going to be good for you. Now, if you're not net credit, or if you're looking for something that's a bit more complicated out of the management, email me away from the numbers and I'll think through it a little bit more. And then tell me more about the situation so that I can better help you and give you something that's a bit more, targeted to what you're looking for. Let's see. BDH. Ashvin says, looks like Dr. J got a new polo. I don't remember this one in the rotation. No, this one has been in the rotation. It's kind of like the Sonny Gray, your brand new Boston Red Sox Sonny Gray. The problem is we're getting 2025 Sonny Gray. We're not getting 2017 Sonny Gray. And so that ain't that good. But no, this polo has been in the rotation for quite some time. So Emmett Morrison says, thank you for the email response, Dr. Jim. The advice is much appreciated. Yes, you're welcome, my friend. Thanks for being a part of the show. I appreciate you guys so much. By the way, if you guys ever reach out and you don't hear from me in like a day, send it again, because sometimes it slips through and I treat my email inbox like a Google search. Like if it's not on the first page, like I'm not super interested in it anymore. And I know I should be better than that, but that's kind of how I operate. And so if you ever write me and you don't hear from me in like 48 hours, just send it again. You're not bothering me. You're not anything. Like I try to stay on top of everybody within a day or so. But obviously sometimes they do slip through the cracks. But wow, it looks like we're done. We made it to the end. I don't know, guys. We did it. Somehow we did it. Man, I appreciate you guys. Oh, Ravenclaw. Look at you guys. That's huge. Ravenclaw, that's it. Okay, good stuff. And mauve is purple. Okay, so I was right. I thought it was blue, but then I kind of knew it was purple. And so I was just tricking you guys. I knew it was purple from the very beginning. But I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have last call coming up next. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys after Thanksgiving. So happy Thanksgiving, and we'll see you guys Monday.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University, #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago, #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign, #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Best one forward. You've got every
Hello, everybody, and welcome to one of my favorite half hours of the day. If you didn't get enough of that guy or me yesterday, we're back together, Tony.
We are.
Happy last call.
Yes, happy last call it is, for sure. Absolutely. On what feels like a synthetic Friday, even though synthetic Friday really isn't until Friday.
It's synthetic Friday for me because I will be going to liquor store immediately following this.
Nice. Good for you. Good for you. Getting ready for everybody coming over for Thanksgiving?
Yes, we are. Well, they're not Thanksgiving. I'm the week after, or I'm the day after. So I just got to get everything done because Thanksgiving I get to go to my aunt's.
Oh, you're like a Friendsgiving.
Yes. So I think we talked about this before. I have I have two parties on Friday. I have my cousins that come over for brunch from 10 to 1. Then after brunch, I have a 2-hour time frame to clean up. And then at 3 o'clock, my in-laws come in for our tree trimming party where we all wear matching pajamas. So yeah.
You all wear pictures or it didn't happen? I mean,
I've got them for years. Like, you want to talk about family Christmas pajama pictures? I've got them all.
All right. Pictures or it didn't happen. You can put it out there on X. You can just send them to me and then I'll slide.
If you want, I'll give you 10 of them. The last 10 years.
I don't overperform. I'm just looking for a picture or two. All right. That's all. Not too many more. We did one pajama picture family thing, and then we never did another one. During COVID, that was the only one we ever did, I think.
You know what? I'm not going to lie to you. I mean, you're, like I said, I always say, how long did it take you to get ready for the show? But it is so nice to wear pajamas because you don't have to worry about anything. Hair in a bun, pajamas on, big pajamas. You can eat as much as you want.
Well, the market, I'm going to pivot here because I've got different pictures of pajamas of you right now.
Exactly.
But even the S&P seemed like they have their pajamas on for the last 2-3 days. Quite a huge rally. Matter of fact, I think we're 100 handles over your 66.84 call. We're 67.81. We got as high as 82 and change. We're just a tick or two off of the highs. You can see here this big move up back into the middle of this most recent move that we've had here from the highs of around 69, now just under 68, the lows being around 65 and change. I got a lot of emails about the NASDAQ being heavy, and I can't lie. Obviously, on a percentage basis, it's definitely the heaviest of them all. I believe Nvidia is really what's dogging it. Nvidia down 5 and change. It was significantly lower than that today. Nvidia traded all the way down to like 169 and change. It's 177 right now, down $5 and change. But there are a few other NASDAQ stocks that are lower today. AMD is actually more lower or lower than Nvidia, down $10, about a 4% move there. Obviously, MSTR with Bitcoin lower. SanDisk, which traded all the way up to 229, and it was like 239 pre-market, down to 209. So there's been definitely some movement in the NASDAQ. Oracle down $5.
Your baby Oracle can't get out of its own way.
Can't get out of its own way. It was actually down $10, $10 more, down almost 15. There's your Nvidia down 5. Coin, Bob, I have to catch a bid the other day. OKLO down to 81, up to 85 right now. So
that's Jenny's baby, OKLO.
She likes trading that?
Her brother is actually the one that brought that stock to our network because she started trading it. He runs like a nuclear magazine, and it was in the magazine featured. So he said buy the stock a while ago.
Wow.
So yeah.
That Jenny Stillwater running real deep over there. Pretty good. Well, volatility has been collapsing down another 55 cents back down into the 19 handle. 1935 is the low where we sit right now. You can see here over the last 3 days, really taking the last 2 weeks of up movement in volatility out of the market. You
and I were on with the highest point, I think. We were on when it was about 23.50 vol. And that's what we had said. It was kind of bizarre that the vol, no matter what we did, the vol was still almost 22.5. That's pretty big.
Yes, you're our good luck charm. So we like high vol. We like when it collapses pretty quickly. It certainly did that. So we have to have you on more often when volatility expands and get rid of that kid, Nick, who can't get volatility to come down ever.
Oh, yes, he can. Yes, he can. But so I think so we're looking at bonds, but I do think IWM, if we're going to put a what's your assumption together, I want to get Chris Vecchio's thoughts on what he thinks of the major four will move if interest rates get lowered.
Yeah, IWM really benefiting from that. Bonds are 117.19, but all four indices, even the
Are
Nas,
up.
yeah, right, even the Nasdaq. I mean, not near its highs. Like when you look at the Russell, the Russell is really just a skosh off of its highs compared to the Nasdaq and the even the S&Ps, which are more.
What are you, Tim Knight? A skosh?
Yeah, I did actually learn that from Tim Knight. Well, I didn't learn it; I stole it from him. So yeah, so I use it from time to time. It's a decent word. Don't ask me to spell it because I don't know how to. But
I do like the fact that all the on-air personalities slightly morph into each other, and everybody steals each other's phrases. It has happened over 15 years. You can steal things from people.
Well, Tim's the weakest link, so I tried to throw him a bone every once in a while. So that's my homage to
So
Tim.
do you know that Tim Knight comes on our show on Tuesdays? I didn't know that he was unavailable today. I was going to surprise you with him, but he's off.
That's okay. That's okay. Good. I do know that, but I don't want to share you. I like having you on to myself. Bitcoin down 2,000. That's the weakest indice or weakest commodity in the pool here today, and for some time down well over 20-ish%. 87.5 got up to 89 earlier. It's been sitting here for most of the day. Ethereum caught a little bit of a bid, but it too sold off. It's down 1.5%. Bitcoin down almost 2%. Even with the talk of the Ukraine war, signing a treaty, it doesn't seem like Russia's going to do that. And a lot of people thought oil would go a lot lower than that. It's down 76 cents. It's about $1 off of its lows. Gold, there was some pressure there, thinking that the war might be over and gold would get a little bit softer. It is mid-range for the day, maybe a little bit on the lower end of mid-range. But you can see here it's been going sideways for most of the day. Nvidia was the big loser to the downside, I think. I mean, being such a big part of the overall market, 8-9%, depending on what ETF you look at. But Meta was the big winner today, right? Up $21 last 3 days, really catching itself a bid. I know a lot of people were catching a falling knife in there, so it probably makes them happy.
Yeah, but I mean, that's been such a laggard for so long that it finally is catching a bid. You look at that chart, it's not even a blip.
No. If you believe in catching a falling knife, yes, there's probably still some room to the upside, but it really has had a nice move from, I don't know, like 580 something to 635 or so. So it might be a little too late in there. Ivy rank is only 11 in Meta.
I'm just bringing back a recall from yesterday when we were on with Vanetta, because she was saying about how she had Lily at like 20. I had Meta at 30.
Oh, dude.
Yes, I was right there on the IPO, and it tanked after it went from 36 straight down to, I think, in the teens, and I was like, oh.
It went into the teens. We actually accumulated some in the teens and let it out into the low 20s. It came back into the teens and 20s again. It was a decent trade. Remember, it was all about when that whole lockup story, the stocks lockup period was over.
Oh yeah, the lockup period for the investors. Yes.
And the stock was going to go even lower. It was trading around 20.
Yeah.
I don't think it ever saw a downtick. Relatively speaking, didn't see a downtick since that day.
I don't think it has. I really don't think it has. It's pretty funny.
Yeah.
Okay, so we have a lot to cover in this. I'm just going to set it up so we can manage our time, because I sometimes get a little long-winded. We have cherry picks. We have to talk about Dr. Jim's last show, and there's one other thing, and what was it?
Well, let him put a card there.
And what's your assumption?
What's your assumption? Sure. We got here's options crash course with Dr. Jim. It's the last one. So please come out. It's about 2 weeks from now, December 7th. Please come out and see Dr. Jim. Show him some love out in Tampa. And then we have the cherry picks.
And we have the cherry picks too. But Tony, you're old enough to understand this. Did you ever see the movie Dr. Detroit? I wouldn't recommend watching it with children.
It's been quite some time, but yes, I kind of.
I cannot believe he doesn't come out to the theme song, Dr. Dr. Detroit, because he's from Detroit and he's a doctor. I would be doing that every time I got on stage.
He can't carry it. Like, he doesn't have enough intestinal fortitude to carry it. he's not worthy. He's not
Yeah,
worthy.
do not watch that with children. Public service announcement. That is not for children's eyes. But yes, what's your assumption tomorrow? You and Chris Vecchio. Have you done what's your assumption with Chris Vecchio before?
Tastylive.com/assumption to submit your assumptions. I would love to hear from you. We need your help in the assumption category here. We do 10 trades. I don't believe I've ever done it with Chris. I like putting him on
the morning show before.
Maybe, but not on a Wednesday. I don't think.
Yeah.
I don't think we have. But it'll be interesting to get his take on it because he's got a much different macro view than I do. I like working with Chris because it's nice to have a little bit of a different assumption or a different way of looking at things.
100%. I like listening to him and Ilya too because they're macroeconomists, right? And you and I are traders, so I'm very bad at the news. I always just look at the markets.
Yeah, me too. Matter of fact, I couldn't tell you what the news is 9 times out of 10.
Yeah, unless Vanetta tells it to us first.
Not anything. And there's a cherry pick by Tom Preston, looking at retail stocks and how it could signal maybe a better holiday shopping experience. I don't know, a lot of Black Friday sales out there, and here's the symbols. You got Kohl's 35%, Macy's, Best Buy. You can go through that yourself. No worries there.
It's kind of crazy because all of those have been pretty much laggards, and now it's kind of they're rising.
Yeah. I think Costco is actually down today. Costco's it's up $8 and change. It was down yesterday. Apologize.
Oh, yeah. I mean, look at that.
Yeah, and then their Ivy ranks pretty decent. Costco has an Ivy rank of 35, and they did a trade in Chewy. So.
And TP's doing a trade in Chewy. Yeah, I had TP. TP was my fill-in today, so he did a great job, and he's fun. He's a funny guy to do the show with.
A lot of good feedback from emails from TP. A lot of people say they always they don't think they're going to learn something from him because he looks kind of weird. But they really learn something from him, so it's good.
I love watching the chat when TP's on because sometimes they're like, you got to rein him in a little bit. I was like, I'm trying.
You do. For earnings, you got a couple today going into tomorrow morning. You got Dell, Autodesk, ADSK, Workday, ZS, NTAP, if you're so inclined. I took a look at all of them. They didn't seem like
trade earnings. You do after. I know you used to do after earnings trades.
I do like to do post earnings trades. I usually don't like to do pre earnings trades, and especially in the kind of market that we've had the last 2 weeks or so. There's just been so much action and volatility expansion and contracting now that I really feel like earnings could take a back seat. When I do earnings, it's I got to be really bored with myself to do.
No, I do. It's true. It's kind of, and you're as about it as articulate as this as I am. But you're right. When the market is boring, I'll look at earnings, right? So if there's nothing else going on, I'm looking at earnings. When the implied volatility is high, and I understand that the VIX is in the 19, but still VIX is 19. We've traded through VIX 7, and guess what we got to do then? Look for earnings because implied volatility.
Well, we did a good little article today, I believe, on the option jive and the market measure. Good little piece of research where this 19 vol is pretty much the mean here of volatility. I really consider it the lower end of the spectrum. I don't know if you remember, it wasn't too long ago in IWM where we had over 30% IV rank, and now you're down to 16. SPY, you're at 20. And I think the Qs are just slightly.
It was Friday. It was close to 50.
Yeah, there you go. I mean, So if you were thinking, again, I said this earlier on our show, because everybody's talking about this is the roll period for us. Usually roll on Friday. That's 21 days. If you're looking to roll, meaning take off delta, this is not a bad time, in my opinion. You got December with 19.7 implied volatility. You got January with 20. You're basically buying volatility at the same price that you're selling it to roll and maybe reduce the number of contracts if you got a little bit too big in December when volatility was expanding and you want to take an option that might have 25 to 15 deltas, and you have 2 or 3 of those, and you want to take to 130 delta option, a little bit closer obviously in January, just to give yourself some unit. It's all about units. I mean, when you saw when volatility expanded, if you had too many units on, you were either handcuffed and couldn't do anything, or you were forced to do something that was defensive. And when volatility is high and you look to do something defensive, it hurts. So you've got a chance here. I don't know where we're going to go, for the rest of the week, obviously, but you've got a chance here to reduce unit risk for sure if you don't want to reduce delta risk.
Yeah, because last week hurt. I mean, it was more of a flesh wound for me. It was more than a flesh wound for me last week. And you're right. You've got a chance again to kind of get yourself back and readjust and do wherever you are. I try not on days like that, on those violent days when it hurt, like the real down one. I try to sit on my hands. I really do. Yeah. I try to. And it's so hard, Tony. It is the hardest thing to do, I think, is to do nothing. Because I always say, let the dust settle. If I wanted these positions, great. If not, I'm just panicking and closing them at a loss.
Well, last week, intraday, I was having my best day of the year.
Oh, best and worst, all in the same day.
In the same day, yeah. And I had one of my worst, I don't know if it was the worst day, but it was pretty close to the worst day by the end of the day. I just didn't react fast enough. Got a little peggy. So Peggy.
But doesn't it hurt worse when it's the same day when you see your P&L so good and then see it so bad?
It always hurts, but that hurts a little bit more because I had an opportunity to do something. I just thought I didn't think we would have that reversal. I mean, I didn't think we'd have that reversal of that magnitude. And
I don't think anyone did. I really, truly don't. And it was on nothing, really, from my understanding. Maybe Chris Vecchio could explain to me what exactly happened. When you have him on tomorrow, we'll pin him down and ask him. But I have no idea what made it reverse.
Right. Only to be matched by this week, yesterday's move, which was a great move. So I caught that one. So it's been a trader's market. It's been a nice little trader's market. I think bulls and bears have both had some opportunities, and here we are, like I said, pretty much in the middle of our most recent move. I'm just going to put SPY up here because that's what I had.
You're right.
But it's place your bets now. Volatility a little bit lower, but like I said, if you're looking to roll, you're not paying anything extra in volatility points, at least, to roll. So if you want to roll same number of contracts, you're going to be rolling for a decent credit because you're not paying any vol. Again, if you want to, play the volatility game, you could stay in the front month a little bit longer, going into the long weekend or holiday weekend. If you think that volatility is going to contract a little more, you could play that game. But remember, the weekend comes with risk.
So are you rolled out in time already? And, okay, I have a two-part question. Are you rolled out in time, number one? And number two, do you have the same pack that I have with Jenny, with Nikki, where when he's out of town, you take care of his account?
I do not take care of his account. We are, I don't want you touching my...
Oh, yeah, you are father-son, though. Jenny and I have a death pact where I take care of hers, she can take care of mine.
I have access to it. I don't touch it, usually. What's yours is yours, what's mine is mine, kind of thing, until I die, and then you can.
And I said that one time on air, and I'll never forget my father-in-law. He's probably watching, so hi, Larry. But so my father-in-law is like, "Hey, if something happens to me, will you roll my account out?" I was like, "Sure."
Yeah, sure. I mean, we're not talking about a vacation in Arizona because that's where he is. I mean, we're talking about something else, a demise. Sure, I would take care of whatever. I would take care of anything for anybody if I.
I know. The chat even says you're a very nice guy. They think you're going to get Glenn an iPad.
So what do you think about the market from here, Liz? I mean, like I've been saying a few times now, we're in the middle of this most recent move. The bottom was falling out of the market. We were going significantly lower. We met with nothing but bids. It really is, a V-bottom type trade again. But what's your take?
Okay, so you got right now the VIX. I know you look at forex/VX, but I look at the VIX. VIX right now is 1842. So the VIX is down 10%, which is, what you should see on a day like today, but it's still 1842. I say buckle up because, like I said, in my heart of hearts, I've seen Thanksgiving weeks where it is violent moves in one direction or the other.
Well, we're halfway ththrough it, right? I mean, today's the end. You only got all day Wednesday.
I mean, I've been sitting there with turkey halfway in my mouth where I was like, what just happened? So, like, yes, it can and does. And then I remember even when I was a clerk being there and it's just being whippy swings. So years and years and years ago. So there's some where there's nothing. But I've always, I think I'm once bitten, twice shy on Thanksgiving. So I always say, watch out for the next 3 days.
Yeah, I agree with you. And we talked a little bit about that today, too. I think Thanksgiving can have a little bit, could have some volatile swings, and you're right. I mean, volatility here, in the 19 handle on VIX, on Flow/VX, 18 handle on VIX, doesn't matter, same thing. Still warrants some two-sided action. I thought today was actually going to be a lot more two-sided action than we had. We were down around 40, 50 handles, and I thought we'd get to unchanged, but I didn't think we would get any more than that. And we've got another 70 handle rallying here. As a matter of fact, even the S&Ps have had a 125-point range today, top to bottom, overnight into today. When today, I believe the expected move in even the S&Ps when we first started was around 34. So you definitely had a outside the expected move type of day today. Same thing like yesterday. So maybe volatility is contracting, but it's not really, pinpointing the kind of action that we've had in the market because it's been up. And it doesn't.
Do you think, okay, so Thanksgiving, and I was actually talking to my son about this today, that the markets cannot be closed for more than 3 consecutive days, which is why we're going for a half day on Friday. Now, Thanksgiving is the only holiday. Now, granted, I know we'll have like random holidays that are in the middle, like, you've got Juneteenth, whatever that falls on. And sometimes you get like a random Tuesday and things off. But Thanksgiving in my mind is the one where it's like off and then a half day. But I also think because of that, you've got Christmas off, but Christmas is the end of the year where most traders are paying attention to their portfolios. I think Thanksgiving is the one where they're like, oh, it's Thanksgiving, I'm not paying attention, and that's when something happens.
I would agree with that to a degree. You're not like quite as attentively because you're thinking about the end of the year, Christmas, and you're looking at your Christmas marks and
correct. There's more eyeballs and there's a lot of volume at the end of the year, and everybody's, you're getting to between Christmas and the end of the year is when you have to have your marks, right? That's not true of Thanksgiving. So it's kind of like the right hand forgets what the left hand's doing on Thanksgiving in my mind.
And it's really not even a holiday anymore. I mean, I don't think Target even had any Thanksgiving stuff up. I mean,
I don't think they did.
They went right from Halloween to Christmas. So, it's a holiday that we still celebrate, but, nobody wants to talk about it.
Oh my God, that's so funny. I don't think there was anything. I actually pretended it didn't exist too. I went straight from Halloween to Christmas.
Yeah, it's sad but true. Look at this, even the S&Ps, they continue to rally up 70. These moves have been really, really big and extreme on the way up, just as extreme as they were on the way down. Not as many sad faces, though, on the way up as there is on the way down. Do you notice that with your emails, too?
Yes, there's lots, and people are a lot happier. But it is, people are a lot happier because I do think inherently everyone wants the market to do well, right?
Well, the public is basically long. I mean, whether it be 401ks and IRAs and even individual, even those who aren't watching the show like attentively, like many do, they're always like looking for ABC stock that's going higher or some product that's going higher. They're not looking for some product that's going lower.
And that's why I think it's fascinating what we do here because we are not the Gen Pop. So like you said, Thanksgiving it's a lot easier to go in when everybody's happy about the market instead of when it's down.
Sure.
So
Right.
I agree.
Yeah.
I agree wholeheartedly. But I'm telling you, on those 100-point up days, well, and today's only a 70-point up day, but on that ridiculous down day, my P&L was way worse than it is on the equal and opposite up move.
Well,
so that's what I was going to say is my account was worse on the down move than it was for the equal and opposite up move.
Mm-hmm. It's kind of funny. I just got a little text message from somebody who said at this rate, even the S&Ps will be 8,000 by December. Yes, we're going up 50, 75 handles a day, but I don't see that. I mean, even the S&P.
What's the next level that everybody's saying that it's going to get to before the end of the year? 67,000?
7,000, I think would be, it would be a new high, but that
as foretold.
As foretold, right? Of course. I mean, through the end of the year, if you want to look, talk real numbers, you've got about a 240 point expected move in the E-mini S&Ps. So that does get you, if it's all to the upside, to 7,000 or just a little bit above. I won't use the word Scotia anymore. I'm getting definitions and spellings of it.
Yeah, I agree. What is that? Can you do me a favor and go back to the E-mini S&Ps and give me the delta on it getting to 7,000? I just want to see.
It would probably be close to 30-ish. Here's end of month. 7,029. I'm pretty good.
So you double that. So at some point in the cycle, there's
You can get like a 60% chance of touching. But yeah, sure. At this level, right? I mean, you go down 100 handles and then, it's less than a 50-50 shot or around a 50-50 shot.
Yeah, for sure. So we'll see. We shall see.
We shall see. We've only got a couple of minutes here before the market's over. You seem to be a decent good luck charm for the market, at least for those bulls. And I haven't had too many. When we get this kind of movement lower, I don't get the people who like panic out like I used to get. I don't know like how your emails are, but I get, hey, I've got this position, what can I do kind of thing. But it's not, the heading doesn't say alert, please respond kind of thing. It seems like on the way down, people are a little bit, and it's unusual because we're just off all-time highs. They're not too afraid of keeping what they have or accumulating a little bit of stock or a little bit of delta, I should say. What about you?
I agree. That's a pretty interesting statement. We have been seeing that with the emails that we're getting, and I don't know if the viewers are just getting.
And that scares me.
But I just think they're getting smarter or using things differently. So when you
I think they're getting smarter, but they've gotten paid for doing this. I mean,
yes, and a lot of times, like what we do too. And to be honest with you, I'm less panicky on stuff like this because once I have a profit, I'm locking it in somehow. Maybe even closing it or doing something, using options to make sure that if it falls out of bed, I can only lose to a certain extent or do things like that, which is the most fascinating thing about options. I'm not just out there long meta. I've got something against it so that if it does fall out of bed, we're okay.
Well, don't worry about meta today, or don't worry about it right now. It's not falling out of bed. It's up $23, almost a 4% move in meta. Let's see what Nvidia is doing here on the close too, because it is such a big part of the market. It's amazing that the market is up so strong with Nvidia down $4.50 to $5.
I know, it is pretty crazy. Can I give you breaking news only because they're texting me right now? Yeah. Do you know that Jenny and I are going to be we're on the SIBO floor next week, Tuesday and Wednesday. And on Wednesday, we're going to be starting out on Benzinga on Wednesdays from the trading floor as well.
Oh, wow. I had no idea.
Yes, I know. I figured I'd break the news to you. So it's very exciting. We just had a call about it again today. And so I'll send you the link when it airs live.
Yeah, please do. Very, very cool. Good job out of you guys.
It's kind of cool. Yeah.
Wow. Yeah. And who said you had no future? I believe it was Tom. Right?
No, he said we only had 7 years left 15 years ago. So
okay. All right. I knew it was something like that. I knew he said it was going to be short-lived. I know that.
Yeah, he said, and I mean, we were sitting directly behind him on the plane when he was telling some rando stranger this. And I was like, what did he just say? I think they got about 7 years left. That was 15 years ago.
Well, you made it.
Oh, there's the bell. Do we let the other guys in? The E-mini S&Ps are up 58, so they're not at all-time highs. But you know what I do if you want the market up or down tomorrow?
Ooh, good question. I could use a complacent day. I think I would like to. You asked me and I never answered you. I rolled about 25% of my position. From Dece to Jan. I'd probably like to roll another 25%, and then be done for the week and keep the rest into next week.
Yeah, there you go.
So I could use a little bit of a complacent day, so I could just take a look at my positions and make some intelligent decisions instead of those that I have to manage delta with.
Okay, this is what the Polish warrior will ask me to do if he wants something to happen. I have to do the I Dream of Jeannie.
Oh, all right, there you go. Mike, right? Good.
There you go.
Thank you so much for allowing me to join the show with you. Even the S&Ps are going to end the day up 60, just about 1 percentage point. The big leader is the Russell, up 2, followed by the Dow. And then the weakest of the group is the NASDAQ, only up 0.5 percentage point, a little bit more, up 144. Volatility 1930 is going to close just a tick or two off its lows. I appreciate your time. I will see you tomorrow because you are on the show. Oh, no, that's right. You're done. I'm sorry. I forgot.
I'm done. I'm out. This is my Synthetic Friday, not your Synthetic Friday. That's why I'm in a better mood than you.
Man in show business, Chris Vecchio will be on the show with me tomorrow. So stay tuned for that and just take a quick minute here.
I'll be watching. How about that?
Peace. Thank you.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Global markets never sleep. Explore them with forex, now available on tastytrade. Get in on over 80 forex pairs, 24 hours a day, 5 days a week, with the forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Line goes up. It's Tuesday, November 25th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Paris as we wind down the trading day here. And what a day it was. 100-point turnaround in S&P 500 from session low shortly after U.S. cash equities open to where we settle out, 67.81 here on the screen. It's a 0.91% rally, but that doesn't tell the full story. Nasdaq's up nearly 0.5%. But it's the breadth today that's showcasing the strength in this underlying market, not just a vol collapse. Your Russell is your leader, up 2.17%. You are equal weighted Nasdaq, you're equal weighted S&P, outperforming their market cap counterparts. It's the GPU versus TPU rotation out of the Nvidia flywheel, the Oracle, the Microsoft of the world, and into the Meta and the Google, which Google closing at a fresh all-time high today. We continue to move along where bonds are steadily ever pointing higher, as it looks like Kevin Hassett is now the running favorite to become the next Fed chair, and he's someone who wants lower rates. Gold and silver continue their rebound. Oil prices slump on news that Trump may meet with Maduro in Venezuela, as well as a potential Russia-Ukraine peace deal. And in the world of currencies, those cut-offs, they finally catch up to that US dollar. Dylan, I'm finding this GPU versus TPU debate in the world of Google versus Nvidia to be quite funny, because we're arguing about, oh my gosh, we're still spending trillions of dollars on this stuff. Maybe we've been buying the wrong company, when the trillions of dollars are still going to be bought in the hardware over the years. Today, the market shrugs off everything and we close higher. Are we in the green again? Are we have a clear to try this market for new highs, or is this just pre-holiday window dressing?
I mean, I think all the same thing, everything can be true at the same time. I do think that it sort of speaks to the value of looking at the supernova names and just sort of looking for the weaker of the herd on a regular basis, because the rotation has such high velocity. And if you just look at Google's position now and then look at Meta's position, I just think that there's something to be said for consistently looking inside the supernova names or the Mag 7 and buying the weak hand, which is not Google right now. But it could be Meta. Could be Microsoft.
Meta's had a not insignificant rally here.
I think the point is it goes all over the place, and if it switches to the Google team from the Nvidia team for the moment, it's all the trillions are flying, and they're all basically going to get a bunch of it. It's just a matter of what you're paying for the equity today relative to the perception of their particular interest in it. So Google's got the hot hand at the moment, so it seems.
Oh yeah, consumer confidence collapsed this morning right around the time that stocks started bottoming. Rate cut odds are ticking north of 80% again. Is this a market that's just squarely focused on the Fed and says, yeah, we got good AI stories, bad AI stories, the cheap money's about to flow, who cares?
I mean, at this point, when you're sitting at 85% chance of a rate cut, this was the market's boogeyman, and apparently the market has decided, no, actually, we're going to get our way after all. Now, what's interesting about all of this is nothing happened today to suggest that the market is going to get its way. Nothing has actually changed. And so for me, this looks more like it's the Tuesday before Thanksgiving. And the markets were very hot and bothered last week. And we've had 48 hours for the markets to correct and for people to even out their exposure before the liquidity exits and everybody goes off and stops thinking about this until Sunday when we reopen next week. So it doesn't surprise that there is a risk on response when you get these Fed rate cut odds going back to near certainty, but also nothing has actually taken them there other than just a change in speculative sentiment. And this is what we've been talking about. This thing has been a creature of speculative sentiment since late October, much more than it has been this or that story. AI this, AI that. I don't think anybody cares in substantive form for a few weeks now. Not because it doesn't matter. Of course it matters. But the driver of sentiment clearly isn't that. And we saw it with Nvidia. We saw it with all the other Mag 6 earnings. On and on and on it went. Tesla obviously reported before the Fed announcement, so they're something of an exception. But Tesla aside, everything else has failed to move the needle until at the start of this week, sentiment decided that it was too far gone. And all the things that were the bad things last week unclenched. Does that say anything about the AI narrative in large part? No. Did it say anything about the economy? No. Not really. Because none of those things have changed. There is no data. There is no new guidance. There's nothing. And so, to me, easy come, easy go. If you don't cross any Rubicons, then this looks like a correction. I would say in the S&P and especially in the NASDAQ, speaking of AI. NASDAQ is the soggiest of the bunch here. So if you want to believe in the AI narrative, it's tough to do when the weakest of the indexes is the one where all the AI lives. Russell is the one that's outperforming. And there you have
that's got to be a good sign.
There you have crossed some Rubicons. And I'm not going to get out of my put vertical right at resistance. That would be a little silly. But the fact that we crossed this series of lower lows and lower highs, that definitely gives me some pause. This is by far my smallest position, so I'm not terribly concerned about letting it ride over the holiday, but I don't like it, needless to say. That this is putting me a little bit upside down here. Everything else didn't really cross any lines. And most potently, the NASDAQ is the weakest of them all. So how happy can you really be about AI, whatever?
Yeah. The Russell is a pain in my ass right now too because of the put spread that I'm in there. But it's not losing more money than the ES position's making, so it's fine. I find the NASDAQ having potentially turned somewhat of a corner today. Obviously, we didn't clear the Thursday high yet. We got to get through 25,000. We'll call it 350.
Well,
see that accomplished?
The underside of the former range is still holding too.
It is, but I can't help but notice that for the first time now in several sessions, we have an alignment where we're not only closing back above our 1 month moving average, we can see here that the rate of change in each of the 1 week, 1 month, and 50-day has turned positive with today's close.
Mm-hmm.
And that wasn't the case yesterday. So, speaking of turning a corner or bears having the momentum is not with the bears anymore, right? Stochastics are out of their oversold territory. We're now trending higher. We have the break of the 1 month. The table's been reset.
It's been neutralized here. And that I think is the essence of what we're seeing. It could be that this is the bearish momentum has been neutralized. Now we're going to get the next bearish leg, or it could be the bearish momentum has been neutralized and now we're going to get a turn. Could be either or. Unclear which one yet.
Well, if the bulls have it, a break of the downtrend here in the NASDAQ would go a long way for convincing some doubters, perhaps. But the S&P 500 needs to make a little bit more run here too.
Yeah,
I'm just a little peeved at myself because I was curious to see what the rationale was back in April when we did our pieces on what names we should be dip buying here. This is, I was not nearly as overweight Google or Alphabet as I should be, because in particular, the one thing quoted in the article on the tastylive website was the company's AI initiatives, including the development of the Gemini language model. That's what's screwing up the market for Nvidia and AMD and Microsoft right now. And the writing was on the wall several months ago that this was a possibility, but Google's really crushed it in a manner I don't think even the more bullish of those out there were anticipating here. So S&P is through its 1 month today as well. You have that positive drift now in the rate of change for each of the moving averages. We haven't quite cleared last Thursday's high of 67.91. Only 10 points off, but that plus a little bit more in the NASDAQ. Your lower lows has effectively ended. Your breakout on the Russell's transpiring. Your breadth is improving. And after all, we got to get ready for the Santa Claus rally, guys. We're getting to the holidays here. And as of today, for the S&P 500, more than 50% of stocks are above each of their 20-day and 50-day moving averages. So I kind of just get this spidey sense tingling now after the last few sessions that people, because they've hated this rally, there's a big wall of worry to climb. There is room for chase again, for nonsensical buying the last 5 weeks of the year, which Dylan, I think Ilya would say it's been nonsensical buying all year long.
The best kind.
Not nonsensical all year long. I would say the bounce from April's lows through perhaps the beginning of July, that wasn't nonsensical. That was the markets responding to the president having blinked and the birth of Taco. And I think the markets liked the birth of Taco.
What did you just say? That's
Taco.
a banned phrase. That's a banned phrase in this channel.
I mean,
we're not in the business of goading him while we're long the S&P, Ilya.
Who is long? Some of us are short.
Okay. All right.
So when you look at this and you go, okay, the moment this thing erased the decline, right? Because from mid-February down to early April, it was all about these tariffs are the end of the world. They're going to crash the economy. And the White House wasn't telling us anything that would suggest otherwise. In fact, Liberation Day was a kind of crescendo where it looked like, you know what, the White House is absolutely convinced that unless it cuts off its own nose, it will not be satisfied and its face will not look right. So it looked like insanity when the foam board came out, and the markets showed that because everything fell at the same time: stocks, bonds, the dollar. everything. And then the White House said, hey, whoa, hey, hold on now. No. Everybody be cool. Everybody be cool. We're not doing anything like that. Everybody relax. And so the rally, I bought that low because that was a legitimate rally for legitimate reasons. Also, nobody is saying that the AI rep rally isn't illegitimate. One, the nature of the transformative power of this technology is not lost on anyone, clearly. It's just a level of price. And it's not even so much that the price is too high or too low. Those are kind of abstract concepts. It's more like, what don't we know about this thing yet that isn't in the price? And where is the point where the hype cycle on this thing eventually does what the hype cycle on all these things eventually do? And that's all.
Phil, and our friend over here is apparently angling for coal in his stockings these holidays. When do we know that?
For me, we don't do stockings.
What's going to be the sign that we're wrong? Because I was feeling really good after Nvidia. Hell, on Thursday morning last week, I said, oh, Nvidia beats earnings and NFP that shows the Fed's not late. Nice. And then the market turned around.
I mean, it's like the buying of the dip as the default position for millennia now. You're saying, what is the sign that you shouldn't buy the dip?
I mean, I would argue that since early September, it hasn't really been that, because if you look at the S&P here, it's basically been trading sideways. Now that we can see in retrospect, we basically have a bottom that gets carved out sometime around the highs of early September. We've not been able to get back under those. Early October was the last test. 4 days ago, after Nvidia, was the one after that. But has this market gone anywhere? I mean, it's basically been idling for what? Almost 3 months now? Now that we can see it looking back?
Got in there. Lots changed in those 3 months, though. Corrections don't need to happen in price, sir. They can happen in time.
Quite right.
Who's to say the market hasn't got down anywhere for 3 months? Dylan, that seems like a long time. Sounds like we need to start punching higher
every
again.
sell-off has been an opportunity within that churn.
Well,
I would say not since October the 29th, although maybe now. We'll see.
We'll see.
Maybe
I know where
now.
my chips lie.
Looking pretty good.
You know where else there's been a lot of opportunity? Dare I say gold and silver? Silver had a really interesting day today, which is why I draw my attention to it here. Only 2,500 options traded. If that doesn't seem like a lot, apparently that's double the volume that usually occurs. Calls in silver options today were 6 times the volume of puts. Ilya, I'm a technician at heart. I see a bullish falling wedge here. I see silver having broken out overnight, came back in to retest a breakout point, starts to catch momentum buyers, picking this on the way back up following the breakout.
I mean, I'm long. I'm with you. So
there's a report from the Financial Times today.
I see the same thing on this chart. I see basically a hold at the previous range resistance turned support and an attempt to extend higher.
Well, you and I have been talking about how China has been accumulating precious metals as a way to grow its FX reserves, because at a baseline in 2023, or really in 2022, at the onset of Russia's invasion of Ukraine, China's central bank, the PBOC, has roughly 4.5% of its FX reserves in gold. And as China becomes a major, less developing and more developed economy, one would presume that its central bank, if it's going to be the major financial and economic player that it seems to be on the trajectory to be, its central bank is going to act more like a developed market central bank. And that includes doing things like QE, but also shifting its mix of foreign exchange reserves such that there is a larger composition tilted towards gold. Because in the Western world, if you look to a Canada or a France or Italy, Germany, a UK, and US, even a Japan or a South Korea, you're talking about most of these central banks have gold allocations, and not really Japan, but most of those other central banks have allocations where you're talking about 50, 60, 70% FX reserve. So a theory of ours, Ilya, just to recap, Dylan, has been that with the change in the sanctions following Russia's invasion of Ukraine, coupled with Trump's role in changing the global economic order, at the margin, you want more non-dollar reserves. You're going to take on things like gold because you're not going to invest in the breakup risk of a euro, a dying empire in the pound, a crazy fiscal situation in Japan, certainly not a ruble. So China's not going to take on more yuan. It only can go to gold. I wind all that up to say that the Financial Times reported that Chinese gold buying and precious metals accumulation is 10 times what it's been officially reported over the past year. And so we think about there being a major underlying current in this market. And during sell-offs, we've chided, none of the underlying fundamental drivers have changed. The fundamental drivers were stronger than potentially we presumed if this reporting is remotely accurate. And so gold price is sitting in this symmetrical triangle, potentially breaking out to the upside here. After consolidating for several weeks, Ilya, I would argue this is a market that hasn't done anything in 2 months. And it looks like it wants to run to the upside now.
Yeah. I mean, I'm long, so I agree. I think you started to get this thing in, let's call it, the second half of October going into November, where gold started to behave less like its usual self and more like a speculative asset, just with its own speculative narrative, not the one in stocks, but a separate thing unto itself. We hadn't seen, by the way, the markets be able to juggle separate speculative narratives in years. After 08, everything kind of went to there's one narrative, risk on, risk off. If the thing is up, if the narrative's up, then one group of assets is up and the other one's down. If the narrative's down, then it's the other way around. And that's really been kind of the thing. We're seeing, especially post-COVID, with deglobalization, with higher inflation, with higher rates, this kind of bifurcating again of narratives. And that's more normal. That's historically more like how markets work. So it looked like maybe gold was going to go off on its own in a risk aversion environment. It's clearly, and we talked about this even at the end of last week, it's clearly shown a lot of resilience where stocks haven't. So while stocks were really getting shellacked last week, Bitcoin's obviously been absolutely battered and can't get off the ground despite this risk on move today. By the way, talking about checks on sentiment, gold has held up quite well. And so it seems to really be telling you, look, this is not the speculative asset that is all the others, or at the very least, whatever speculative narrative is going on here is not going to be disrupted, at least at this point, by any kind of shenanigans in the other kind of risk on, risk off narrative. So I'm happy being long here. The path forward is more rate cuts. The path forward is more competition geopolitically between the US and China, whether it's acrimonious or not. At a given time, we'll see. But I think that the trend holds and the narrative holds. We're going to be looking at higher gold prices, I think, for probably a while.
Dylan, today was a day of geopolitics. Oil prices fell fairly sharply, only to rebound during the second half of the session. We had news that Ukraine had accepted a peace deal with Russia, which is not the first time we've seen that headline. Of course, the 28-point peace plan that came out yesterday, the version that Ukraine accepted, had 9 of those points stricken from the record, and some other minor alterations. Russia, of course, later rejects the plan, but the market directionally is sniffing out that maybe we're getting closer and closer to a resolution, coupled with Trump's news that we could be looking at a Trump-Maduro conversation meeting, if not in person, but over the phone in the next few days. It seems like geopolitics are going to be squarely in focus over the holiday. Do you have any strong opinions on how the market's going to respond to either of those events over the next few days, and potentially?
No, but I do think for sure in a moment where these little micro spikes in oil, if you ever could want to edge up on it like that, whether it's related to sort of fears in Venezuela or optimism or fear in Ukraine, whatever the spikes are, I think are actually decent little selling opportunities in this sort of base thesis of sort of skittishness in the oil market, at least in oil pricing, and some volatility around all these sort of little geopolitical flashpoints that tends to be overblown in the pricing almost every time.
Guys, as we wrap
I'm a
up
little
the show,
short. I'm a little bit short. I didn't get short because I'm fading this particular narrative, but this certainly doesn't hurt, to Dylan's point.
Guys, we're wrapping up the show here, and what's going to be our final episode this week. We'll be back next Monday, of course, because tomorrow is an abbreviated session, and then Thursday, Friday, holiday markets. We're not even on Friday. But I figured I'd ask ChatGPT, given everything it was able to discern from the three of us on the interwebs, what would our favorite Thanksgiving side dishes be if we brought them to a meal together? Just so you guys can see the prompt here, and you know that I'm not doing any tinkering. This is the top of the prompt. So according to ChatGPT, Ilya Spivak, he's bringing herb roasted Brussels sprouts, which is clean, delivered, a little intellectual, the kind of side that feels like it requires a white paper. Wild rice pilaf, structured, balanced, macro-friendly, something you'd expect at a well-executed, quietly refined holiday table. You have Dylan bringing the spicy cornbread stuffing, which is loud, punchy, and energetic, a side dish that has opinions and doesn't apologize for them, as well as loaded mashed potatoes, over the top, comfort heavy, and built to fuel a monologue. And then there's me, cranberry relish with orange zest, tart, sharp, cutting through the cutting enough to keep the plate honest, and then garlic parmesan green beans, straightforward, tactical, reliable, position you size with conviction because it never lets you down. That is not how I feel about green beans. In any event,
That's not how I feel about Brussels sprouts either.
It wrote a cheekier monologue that was absolutely ridiculous, but we're not going to do that here on air and subject the good viewers of Tasty Live to that nonsense. So with that, we're heading out for the holidays here, folks. Ilya is going to be back on after this following a brief commercial break. There's no Futures Power Hour tomorrow. Instead, I'll be hosting the morning show with Tony, 8 a.m. Eastern, 7 Central time for 3 hours. So be sure to come in and say hi. Let's see how this market responds on a thin liquidity day. But until then, good luck trading. Hope you have a nice holiday with your family, friends. And if you're just sitting around watching football, hope you enjoy that too. Stick around. You're watching Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tanta paciencia, contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar.
Well, the stock market certainly seems to be pretty happy on its way into the holiday. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live, and we have continued recovery here on Wall Street and in broader markets before everybody goes off for the Thanksgiving holiday, at least in the U.S. So is this now a rally that we can expect to have some follow through, or are we just looking at the markets evening back out after what was obviously a very ugly week last week, heading into this low liquidity period that we're going to get around these closures? And is this more positioning than it is a true risk on sentiment shift? That is to say, are the markets done with the sell-off in earnest, or are we just waiting to get through the holiday to get back to bearish business? That's what we're going to try to figure out here as we look at what happened in these markets today and what may be on the horizon here going forward. Let's take a look at the price action first. This is how we did today. S&P up 0.9%. NASDAQ up 0.5%. Interestingly, NASDAQ, the soggy of the bunch, really it was Russell, which we don't have on the screen here, that did best of all. A very impressive rally for the Russell today. It ends up being net up 2.2 almost percent. But interestingly, it's not like the usual suspects are outperforming here. Yesterday, of course, we had a strong day in markets. Also, this was how we started, and we can see the NASDAQ very much outperforming, up 2.8% yesterday. This is not the story that we see here today. I mean, technology, the main, of course, driver of what's going on in NASDAQ, and because it's so dominant market cap-wise for equities in general, it's up, but only about 0.3%. The really big movers today come elsewhere. Healthcare, consumer discretionary have big days here, up over 2% apiece. Materials have a relatively big day, but the usual powerhouses of what has been the rally since those April lows, and even before then, even before this year, the sort of AI hope and prayer narrative for this to be a transformational thing that ultimately gets us into the kind of multiple expansion and into the kind of build out economically, market-wise, that was the telecoms revolution, or perhaps railroads. All of that, not the narrative here today, apparently. Yields down once again. The idea that we're solidifying on a Fed rate cut in December once again seems to be a driving force in this narrative. And not surprisingly, gold up, dollar down, euro up almost 0.4%. So is the yen. Crude oil down 1.5% because it looks like we're maybe de-escalating some of the geopolitical tensions that were baked into prices over the past several days. Apparently, the U.S. President Donald Trump is due to meet Venezuelan President Nicolas Maduro, so perhaps we can avoid a Grenada-like scenario here, despite the fact that the U.S. has been massing forces near Venezuela. And interestingly also, Bitcoin down yet again. So this notion that maybe we're looking at a sentiment shift, somewhat poisoned by the risk-on of risk-on assets, the sort of riskier end of the spectrum here, crypto, that's weak here and pointedly isn't confirming what we're seeing elsewhere. Perhaps the sort of configuration between the S&P and NASDAQ is somewhat related to that outturn here. We'll see how that goes. Now, of course, this follows what was a bloodbath last week. We can see it's red across the board. Stocks down a lot, yields down as bonds rise, not so much for Fed reasons, but on haven grounds. Crude down. Gold managed to hold up okay, but the dollar rallied against its major counterparts. And of course, Bitcoin suffered a decline in excess of 10%. So last week clearly had a cadence and a bias. And as we look at what we see here in the first 2 days of this week, it seems like perhaps what we're looking at could still be a correction before this holiday that we have coming up here that is going to drain liquidity out of markets and make for choppy going until we get into next week. That, of course, is going to be an interesting set of circumstances onto itself. U.S. economic data continues to be scarce for the most part, but we are going to be in the blackout window next week for Fed communication, because it'll be the week before that December 10th Fed meeting. And so how the markets ultimately reconcile where they are positioned in that world ought to be very interesting indeed, because ultimately what we still seem to be primarily concerned with is whether the Fed is going to give us this rate cut. And that still seems to be the essence of what's happening sentiment-wise. Now, as it stands, maybe these have just become narratives that are so linked that they are now an almost kind of rate cut on, rate cut off kind of a thing. And maybe sentiment is starting to be reflexive back onto itself. That is to say, if it's a risk on day, rate cut odds shift toward more certainty, as opposed to rate cut odds shift and sentiment improves. Perhaps these things have become so interlinked that speculative forces are now looking at these things in a way that sort of takes this relationship and runs it both forwards and backwards. That would be relatively consistent with the idea that what you have here is corrective, because, of course, last week it was all about Fed rate cuts being uncertain, and clearly the sea of red that you see on the screen there was the result. But as it stands here, the probability that we're going to get a rate cut at this December 10th meeting has recovered heroically here back to 83% or so, 17% that we're not going to get a move. Obviously, that's a far cry from the 50-50 split where we were last week, give or take, and that gave the market such indigestion around the uncertainty of it all. So whether this shift is as corrective as everything else in markets, we'll have to see, because if the markets are at the same time running a retracement sort of effort on stocks, let's say, then this would be the same thing. Because last week was a week where Fed funds futures were tilting away from a cut and stocks were tilting lower. The natural direction for a retracement, even if it's just evening out exposure before the thin liquidity that's going to follow for the rest of the week amid this U.S. market closure, that sort of recoil, that sort of retracement would be stocks up and rate cut odds higher. So perhaps this reflects newfound conviction in this outcome, perhaps not. And it looks mixed, largely because the data that we have had has been non, as it were, of one voice, not of one mind. The PPI numbers were certainly helpful. We have here September's numbers. Of course, they are terribly, terribly delayed. We still need October's numbers, never mind what's coming up for November. But we finally get this belated September PPI report, and not much doing here. As we can see, these monthly increases are relatively small, nothing jumping out here. And in fact, we can see through this whole tariffs period, PPI is relatively steady. We look at the year-on-year numbers, and they're still within this familiar range, not really going anywhere. We've seen a little bit of a pullback since July into September, back toward the bottom of the year-to-date range, but that's all we've really seen. So wholesale inflation has, for the most part, flatlined. And that, of course, gives the Fed a little bit more of a sure hand in wanting to pursue rate cuts. At the very least, it doesn't scream that pass through from these tariffs is going to make for a sticky inflation issue, at least on this reading of the inflation data. We wouldn't interpret this as saying the Fed really should back it up and sit on its hands. Here's the retail sales report. Again, terribly delayed. This is September's numbers. And here things looked a little bit soggier than expected. Again, seemingly endorsing the idea that cutting rates might make sense to Fed officials. 0.2% was the month-on-month rise here. That's against 0.4% expected, down from 0.6% in the prior month. It was the weakest reading since we got that decline of 0.8% in May, and the smallest gain, second smallest gain this year. So if we ignore here the January decline, the April decline, and the May decline, and only look at the gainers, this was the second smallest one after February, which was basically a flat result, but for some rounding errors. So looking at all of what's going on here, it seems, at least on a monthly basis, there is a sort of weaker view on the consumer. If we look at the breakdown here, the big culprits seem to be motor vehicles. Now, it's certainly not the biggest move in percentage terms, but motor vehicles make up about 20 to 22% of overall retail sales. So when this thing goes up a third of a percent or down a third of a percent, that's a big swing, just considering how much impact this category has on the overall numbers. The other big one was non-store retailers, which is basically e-commerce. And here we're down 0.7%. That makes up about 10, 11% of the total. So between motor vehicles and non-store retailers, we've got about 30% of all of the retail sales basket. Now, was the decline in sporting goods bigger in percentage terms? I mean, obviously. But sporting goods is not exactly the most influential piece here. And so that 2.5% decline isn't the biggest deal. It is noteworthy, of course, that a lot of the weakness in these numbers seems to be in very kind of consumer sentiment relevant categories. So e-commerce down, sporting goods down, clothing down, electronic appliances down, of course, motor vehicles down, and the retail sales control group that basically ends up at core retail sales and strips out a lot of the more volatile, more seasonally sensitive type of stuff. There we actually get a decline narrowly. And so the numbers look relatively weak. Compare this with the consumer confidence numbers that came out on Friday, where we continue to see weakening sentiment despite cooling inflation expectations for the past 4 months. And it starts to make sense why we could be looking at something relatively soggy here. That, of course, a worrying sign for the overall economy, because 60-odd% of the economy is household consumption. So if this were to, for some reason, give up the ghost, then we have clearly a problem for the economy. But the market seems content to look at this stuff through the lens of rate cuts. And though this might seem counterintuitive, the market seems to be concluding that if the data is bad and if the signs are pointing to weakness, well, that just makes a rate cut that much more likely. And if the markets, from a sentiment perspective, are going to be hinged on the idea that we need to get rate cuts, and that's what they want first and foremost, well, then perhaps there is something to embrace, again, at least from a sentiment perspective, in these signs of economic weakness, Because if it's rate cuts you want, well, then economic weakness certainly helps you to justify them. Now, importantly, we are by no means looking at uniform signs of economic weakness, and this is where things get a little bit tricky. So if we look at the path forward for retail sales at a less jumpy year-on-year way of calculating, then we can see that the trend really since the beginning of 2024 has been pointing toward rising retail sales. Now, obviously, it's not even, and we can see that over the monthly numbers, we've oscillated up and down here, depending on the month, but the trend still looks relatively encouraging. So it is not as though we have some sort of uniform negativity in the signaling here. We pointedly don't. And so while the markets seem to be taking all of this to mean that the rate cut is all but assured here, certainly with 84, 85% likelihood that we get the move, the markets seem relatively convinced. But the data is not nearly as one-sided as those expectations would have you think. So again, 83% chance of a cut, but is the data really justifying all of that? Here is the view here on the economy from S&P Global. This is the PMI data that came out just at the tail end of last week. And of course, what we find here is that the economy is doing basically as well as the multi-year highs that we saw going back to the end of last year, before any of this tariff drama, before we got all of the sort of back and forth that we see this year. So is the economy doing poorly, and does it in fact need the kind of aggressive rate cuts that the markets seem to want? That still looks very much like an open question. And if the markets are going to be this sensitive to rate cut expectations, then perhaps this is more like a correction. And we are going to get a little bit more antsy about this whole thing, perhaps, when we come back to it at the start of next week and anticipation of the Fed's move on the 10th starts to really get front and center. Because if we look here at what the markets have on the menu, it is still well beyond what Fed officials have owned up to. We can see 70 basis points now on the menu for rate cuts next year. The cumulative run between the rest of this year and next, 79 basis points now. So we can see that things have gotten a little bit more dovish, and it's certainly not because the December rate cut has become more convincing for the most part. It certainly has done that, but the big moves have happened in the outlook for next year, where the markets are very dovish indeed. And if you look at Fed policy expectations themselves, we're nowhere near that. So let's say we get this December cut as the Fed envisioned back in September. This right here is 3 cuts, implying September, October, December. And let's say that occurs as expected. The markets, let's say, are right about that now. And for next year, the Fed has 1 cut. The markets have at least 2 with a high conviction on a third. We're 20 basis points into a third 25 basis point rate cut. That is to say, this would say 75 if all 3 were baked in. So clearly, the markets want a lot of easing, and clearly the data is at best mixed on this score. And so the capacity for sentiment to continue to build here might just end up looking suspect. And when we have these kind of clear relationships between sentiment and policy expectations, and those policy expectations don't appear to be especially firmly founded, if for no other reason than we don't have enough data to really anchor them, then we end up with all kinds of possibility that this rebounds back in the market's face. We can see here since that October 29th meeting where Fed Chair Powell talked down December rate cut possibilities, or at least the inevitability of a December rate cut, we've had this pullback. As we've gotten a little bit more dovish on these expectations, we can see markets have tried to recover. So far, the trend's still down. Lower lows, lower highs, and the possibility that maybe a correction in these first 2 days of this week is about all that we can muster. And the approaching liquidity ebb is perhaps the reason for it. The dollar here, a little bit lower as things get a little bit more dovish, but again, impressively in an up move that's been running since mid-September when the Fed started to actually cut, suggesting that all of the easing that the markets were already baking in had already taken its toll on the dollar in the first 6 months of the year, and there was no more toll to take. So we ended up with a situation where things were starting to go the other way. And so far, while the dollar is not doing great today, the trend continues in spite of ongoing easing, and that perhaps speaks to the dollar's resilience going forward. With that in mind, positioning-wise here, I am looking still at holding long a little bit of gold. That's working today. Still holding short the major currencies, in this case, the Aussie, the pound, the euro against the dollar. I flipped over my yen position on the spot side, which we don't have on the screen here. So I'm now a little bit long the yen against these positions here, but only a little. I'm still very much net long US dollar here. Still short risk, especially in Bitcoin, where it continues to work. It's down to another 2% here, this IBIT ETF. Not loving my exposure being in these put verticals in the Russell, but so far it's not crossed any lines in the sand for me, so I'm still holding that. Same thing for the S&P, still holding those put verticals. The long end of the curve has started to work a little bit, so I'm still sitting in call verticals in TLT to capture that. Same thing with crude oil, still sitting in some put verticals there because we seem to be accelerating lower off another 1.65% today. And silver is kind of idling, but as with gold, it seems like an attempt at bottoming has gotten underway, and we're maybe starting to build a little bit of upside momentum. So I still have those call verticals as well going into the holiday. We'll check back in on this next week because this will be the last macro money for this abridged week, but we're back to Monday through Thursday next week as normal. And of course, we're going to have a full conversation about all of these things shaping up for that Fed meeting on December the 10th. If you're watching this on YouTube, like and subscribe. I am also commenting at Ilya Spivak on former Twitter and on Blue Sky, and writing for the news and insights portion of tastylive.com. Happy trading. Happy Thanksgiving if you're celebrating. Certainly keep an eye out because markets outside of the U.S. are open and cross currents can occur in this thin liquidity. The macro money, we'll see everyone next Monday. Happy trading.